Morning, Carol.
Good morning. How are you?
Very well. Nice to see you and talk to you.
Nice to see you too.
Bonjour Carole.
Bonjour, ça va bien?
Ça va très bien, merci. Et toi?
Oui, ça va bien, merci.
Good. All ready to rock and roll?
Ready to rock and roll. We just started streaming.
Just started streaming on YouTube?
Yes.
Okay, thank you for letting me know. Je vais fermer mon vidéo puis mon audio. Tu m'as pas besoin. Anyway, je pourrais t'entendre.
Oui, OK, c'est beau, merci.
Carole, no delegations that have signed up?
We have none, no.
Okay. And the staff members assigned to the various files, specifically for the annual report, are what you gave me yesterday, dancing. No
Yes.
there. Okay.
Yes, there's been no changes to that.
Merci.
Bienvenue.
Carol, it's Rick. Can you hear me?
I can hear you loud and clear.
How unfortunate for you. Thank you.
You're welcome.
Good morning, Carol. Thank you.
Good morning.
Hi, Carol. Just doing a sound check just to make sure that it's working.
I hear you, Alain. Let's see.
Merci.
Morning, Madam Coordinator. Do we, it's 9:31. Are you noting everyone needed in the room?
Yes, everybody's present.
Thank you. And so we appear to have quorum. All right, let's begin. Good morning, everyone. Bonjour. Thanks for joining us today. Welcome to the Audit Committee meeting conducted as usual through Zoom, as has become our habit. Just a reminder, everyone, to keep your microphones muted until I call on you to speak. At any point, as usual, if you want to speak, excuse me, use your raised hand function. You find it in the Zoom controls at the bottom of the Zoom window near the audio controls. The committee coordinator, Carole, and I will be watching for those. And of course, the usual 5-minute speaking limit will apply. We have no public delegations as of 9:26. When I asked Carole, signed up for the agenda. However, members of the public are welcome to provide written comments, which will, of course, be circulated to members of council when these reports rise to council. I remind everyone that this meeting is being live streamed and will be archived on YouTube. Cette réunion est présentée de vive voix sur YouTube. Before we proceed, quick roll call, please. Councillor El Shantiri.
Present.
Deputy Mayor DeRuse.
Here.
Councillor Hubley.
Here.
Councillor Kavanagh.
Here.
And Vice Chair Meehan.
Here.
Excellent. Thank you very much. Before we begin, we have a special presentation. It is my pleasure to start today's Audit Committee meeting with a special presentation on behalf of Mayor Watson, my council colleagues, and City Manager Kanellakis. This is the final Audit Committee meeting for Ken Hughes before his retirement. It's with mixed emotions, and we say a heartfelt thank you to the Auditor General. Ken has been a well-respected fixture at City Hall, at the City of Ottawa for many years, being appointed Auditor General in 2013, and before that having served as Deputy City Treasurer since 2008. Ken is tough, Ken is fair, Ken is affable, and he's known for his expertise, his diligence, and his acumen. As he has often said, the Auditor General reports to Council and is responsible for assisting councillors and Council in holding itself accountable for the quality of stewardship over public funds and for the achievement of value for money in municipal operations. Ken is a chartered professional accountant and has practiced as an auditor for 20 years. He's a certified fraud examiner, and as an independent watchdog, he's dedicated the last 7 years of his career as Auditor General and to the quality of that stewardship over public funds. He also teaches in the area of audit, of internal control, of finance, in private industry, and in federal and municipal governments. His accomplishments are impressive, and we are indebted to him for his expertise and his leadership, and we are truly thankful for his commitment to the City of Ottawa taxpayers. I understand that Ken likes to travel and likes history. Ken, I hope that you'll soon be able to enjoy visiting interesting destinations. I hope the pandemic and the resolution of the pandemic lines up with those plans and with your retirement. Thank you for your service, thank you for your work, and thank you for inspiring us. Merci pour tes services, Ken, et ton travail, et d'avoir été pour nous une source d'inspiration. Je te souhaite une très belle retraite, si c'est tes plans, et beaucoup de succès dans tous les projets que tu vas entreprendre. And with that, it's my honor to virtually present to you. I don't know if I'm going to see if you can see it. This framed photograph of Parliament Hill, and it says, "Present gratitude to Ken Hughes by his worship, Watson, Mayor of the City of Ottawa, members of the Ottawa City Council, and Steve Kanellakis, City Manager, on November 24, 2020. Remis avec reconnaissance à Ken Hughes par Watson, le maire de la ville d'Ottawa, les membres du conseil mardi 24 novembre 2020. I will have that delivered to your office, Ken. Thank you for your service.
Monsieur le Président, membres du comité, merci beaucoup. C'était un grand plaisir de travailler pour la ville d'Ottawa depuis des années. Thank you, Mr. Chair, members of the Audit Committee, other councillors, Mayor Watson. It's been a real pleasure to work for the city. And I would like to thank you for the acknowledgement and certainly the presentation, but you have placed me at a disadvantage at the beginning of an audit committee meeting. And but thank you very much. For a little boy who grew up in what used to be called Eastview is now Vanier, born in the old Ottawa General Hospital. I don't know how many times my head was sewn back together at the Montfort. I have, I had broken bones. I got my casts there. I have pretty well been to all of the every corner of the city, and I love the city. And working for the city has been a privilege. And I would certainly recommend to anyone who is thinking of a career in municipal government, seriously consider it. It's very rewarding. I cannot tell you how many times, I think I've said this before, you're reaching for bananas at Farm Boy and somebody wants to talk to you about their tax bill, or they want to talk to you about an audit, or they want to talk to you about something that they saw. And certainly it's rewarding. I don't regret any of my time here at the City of Ottawa. Yet there have been times that have been challenged, absolutely, but it's been very rewarding. And certainly you've heard me say this before. The employees of the City of Ottawa are absolutely dedicated to delivering the best value for money to the taxpayers. And while there are times where we may disagree in how that happens, have no doubt that that's everyone's belief and focus. And for that, I'm grateful. Thank you for the acknowledgement, and I will remember fondly all of the people that I worked with and the projects that I worked on. Thank you.
Merci, Monsieur le Vérificateur Général. Thank you. Indeed, it has been my privilege to have worked alongside you since I was elected in 2014. So thank you for your service to the residents of the city. On with the agenda. We have 3 items today. We have presentations for each of those 3 items, and so there is no consent agenda. We are holding all the items. Any declarations of interest? Seeing none, thank you. Confirmation of minutes. I will bring to the attention of members that minutes were reissued last evening to correct a very small error in the procedural motion that was moved by the vice chair at the last meeting on October 27th. So other than our regular confirmation of minutes motion, no additional motion is required. Are the minutes confirmed for October 27th?
Okay.
No objections.
Okay.
Thank you. Noted. So we are on to item number 1, Ernst & Young. I don't see Madame Gignac, but I presume there we go. So we have a presentation on that. Over to you.
Thank you, Mr. Chair. I will just probably pass it over to Mita. She's going to walk through our presentation, take about 5 minutes to walk through our presentation, and we're happy to answer any questions as we go through. We're at the early stages of the audit right now, just starting our planning. And Mita will walk you through what our plan is as of now.
Thank you. So Mita Myers is part of one of your colleagues at Ernst & Young, is that correct?
She is Mita's the senior manager on the engagement and has been for a number of years.
Thank you. Looks like she may have frozen unless I am.
We were just bringing her in, Mr. Chair,
Okay.
as panelists, so that might take a moment.
Let's give her a moment to see if we could recycle that internet thing.
Okay, apparently
So-
she is in. Oh. Mita?
She may have turned off and will ask to be readmitted shortly. I think we can give her another minute.
I can go ahead through the plan if it's easier, Mr. Chair.
If as you see fit.
We'll give her 30 seconds. If she's not back in, then I'll go ahead through the plan.
Sure. No troubles. Thank you. Like it's the first time this has happened since March,
Really?
here or other places.
Do you want me to go ahead?
As you see fit, an alternative, I don't know how you had prepped for this, an alternative might be that we go to item 2, the draft operating budget for the audit committee.
I'm fine to go
There
through it.
we go.
Sorry,
Look at
sorry
that.
about that.
Look
Yes,
at
I was. There's some construction work in front of my house, so I think it might just interfere. I apologize. Apologies.
You're not blaming city construction for this, are you now? Over to you.
She's frozen again, it appears.
Oh, darn.
Okay, I'm going to go ahead through it.
Go for it.
And yeah, it's not a problem at all. So walking through our plan, if we move to, I'm not sure who's presenting, if we move to page 3 of the document, which is the EY services. So as the auditors, we're engaged to issue audit opinions on the consolidated. We'll issue opinion on the consolidated financial statements as at December 31st, 2020. And we also do a number of other audits on financial information provided by related entities and programs. We will issue information or a letter on internal control communications if we identify any significant deficiencies in our audit. And we will, at the end, come back to you and issue a written communication on the audit results. And of course, we'll support management in the translation of the consolidated financial statements. So moving to the next page, it talks about our planning materiality. At the end of the audit, we really formulate an opinion and state whether we believe the financial statements are fairly stated in all material respects. So one of the key components of our planning is determining what is material, which is what would really an error or an omission that would impact the user of a financial statement if it was in the financial statements and might change their decision. So in doing that, we take into consideration qualitative and quantitative characteristics. And based on set sort of industry thresholds, we've determined materiality to be 2.5% of the budgeted operating expenditures, or 93.9 million. We do work at levels considerably below this. So we do thresholds of this as well as random sampling. So any transaction can get picked up. And so we will do, and we carry very much smaller amounts to our summary of audit differences to have discussions with management. So the next page really speaks to our audit approach. Our audit approach is similar to in prior years. We're going to rely, we hope to rely on IT general controls over the SAP system, as well as the MarkView and the Ariba system. There will be a changeover which we will rely on and we will do work on during the year. And we also look at the controls around the purchases payable payment system and the payroll expenses process. If our test of controls, if there's any issues, then we will communicate that to you at your end and we will switch to a substantive approach. But historically, we've been able to rely on the controls in these areas. Moving to the next page, we talk about really our areas of audit emphasis. And if you think about the financial statements of the city, they're really the more significant areas of the financial systems, financial statements and transactions. So you've got the revenue recognition, where we will do substantive analytical procedures over user fees and property taxes. And we'll also do detailed testing over government transfers and development charges. Tangible capital assets is a significant balance. So we will look at additions, transfers, disposals, and amortization. And we will put a focus on large transactions such as the LRT transactions to ensure they're appropriately accounted for. And then in the next area we talk about, which is the next page, we talk about other areas of emphasis. We will put emphasis on investments, the valuation of investments, and the existence of those investments, employee future benefits and other employee benefit plans and the obligations recorded in the financial statements associated with that. We will look at the assumptions associated with those and any contingent liabilities related to legal claims in the financial statements. We'll consider the commitments the city has made, and of course we will put additional effort on COVID-19 in the current year, specifically as it relates to estimates, areas of higher measurement uncertainty, impairment of assets, and any changes or modifications to agreements that the city has entered into. I won't go through in detail the next page. It really speaks to some new accounting and auditing developments. There's nothing significant coming into play for the city in the current year, and the Public Sector Accounting Board extended standards that were coming out by 1 year as a result of COVID-19. So there's really nothing significant that's new that will impact the city until the 2023 year end. And other than that, we have our audit timetable. We've been doing our planning now. We'll be doing our interim over the next couple of months, and then we'll be back at year end to do our year end work and report to you. And we're happy to answer any questions on our plan.
Thank you very much. I think we're getting a little feedback. I don't know if your colleague was able to rejoin us. I saw that she tried without video, but I don't see it right now. I am sorry that she wasn't able to provide the presentation. Thank you for stepping in. Are there any questions from any members of the Audit Committee or other council members who are on the call? And welcome to those council members. Councillor El-Shantiri, please.
Thank you very much. So with the timeline, is that going to be able to be achieved even with COVID and staff issue and other, or like, are you confident with the timeline you present us?
Yeah, we're quite confident with the timeline. We did last year's audit. The audit takes place the detailed work takes place primarily in the April-May timeframe. So last year we were already in the COVID. We did the majority of the work remotely. So we've done this number of times now this year, and I think using our EY tools, our portal to share information, and MS Teams, we're able to deliver on the audits, and we're fairly confident that the timeline will be met.
Okay, thank you very much. Thank you, Mr. Chair.
Thank you. And just a reminder to members to raise their use the raise hand feature, please. Any other questions? I'm not seeing any. Can you talk, Ms. Gignac, thank you very much for the presentation. Can you talk a little bit more about the contingent liabilities in the context of COVID and in the context of the employees of the City of Ottawa? One of your slides certainly spoke about employee benefits. Are you seeing additional risks? Are you seeing additional expenses that we should be accruing to cope with possible future medical or other expenses as a result of COVID? And how will you be dealing with that in your audit plan?
So we do focus on contingent liabilities, and specifically events that have taken place that might not be known yet and have to be accrued in the financial statements. We will focus on employee future benefits. What we found generally with respect to employee future benefits is that it's actually the discount rate that is adjusting most as a result of events taking place in the marketplace that is causing the most significant impact on employee future benefit obligations. We haven't seen considerable increases, certainly from a materiality level in the financial statements related to specifically related to COVID issues at this point, but we will be focused on the accruals and whether there are any additional liabilities as a result of people being off work or having to take in other employees in order to manage the workload, et cetera. So we will be focused very heavily in that area.
Thank you. Not seeing any other questions. Ms. Myers, welcome. I apologize, Carol Ann, sorry. Vice Chair Meehan, please.
Thank you. Thank you, Chair. Just wondering, Mr. What do you mean by discounts? Sorry, excuse me, I got something in my throat. When you went just at the top of what you said there, but the discounts were some of the things that you were worried about in benefits. And
it's not so much, sorry, it's not so much that we're worried about it. When you do the calculation of employee future benefits, it's benefits that will take place in future years. And so those benefits are discounted back the current year value based on interest rates, et cetera, the long-term borrowing rate of the city. And so as those things adjust, it can have an impact on the obligation as a whole. So we have specialists within the EY team that review the assumptions made by management in calculating those obligations. And in particular, we have seen some adjustment in that discount rate causing obligations to go up because the discount rate is going down.
Significant or no?
It depends. I mean, it depends on what it started at. They're not immediate cash impacts, but they can cause some adjustment in the obligation. So we'll see at year end what impact it actually has. I think that things have leveled off to a large extent. So what we've seen is where people were measuring things in the middle of the year, there was a big adjustment, but now they've kind of evened out. So I would anticipate that hopefully it will have kind of settled by the end of the year and there won't be significant swings, but we will be focused on that as well.
Okay, thank you.
Is another way to say it, the present value of estimated future liabilities and expenses?
Yes, exactly.
Okay, got it. Thank you.
Thank you. Not seeing any other questions. Thank you very much, Ms. Gignac. Thank you very much, Ms. Myers.
Apologies again
for your
connecting.
presence. Not at all, not at all, for your presence here today. Merci énormément. For the Audit Committee, the motion or that the Audit Committee receive this report and forward to Council for information. Is that carried?
Received.
Received. Thank you. Thank you very much. We are on to item number 2, the draft operating and capital budget for the Audit Committee. There is a presentation by the Deputy Treasurer of Finance, Isabelle Jasmine, but prior to that, Vice Chair Meehan, I think you have the roadmap motion. If you could introduce that, please.
I'm going to try to find it here, sorry.
Okay.
Should have had it.
I think Carol can launch that up on the screen.
Oh, that would help. Thank you. Thanks, Carol. A sec. Yeah. She looked okay. Thank you. So that the Audit Committee recommend that Council, sitting as a committee of the whole, approve the Audit Committee 2021 draft budget operating resource requirement, page 2. Thank you.
Thank you so much. Excellent. And Isabelle, if you could, Ms. Jasmine, if you could do your presentation, please.
Ken, did you want to start or? It's a presentation.
Sure, I can just remind the committee that the presentation isn't up on the screen, but remind the committee that that the budget for the committee includes 2 amounts, and the larger of the 2 amounts is the budget for the Office of the Auditor General, and that is it's not up on the screen, but out of the entire budget for the Audit Committee of
2.161.
Out of the entire budget for the audit committee, about 2 million of it is the budget of the Office of the Auditor General. And okay, next page. Yes, there we are. With the estimates at 2.6 million, the budget for the Office of the Auditor General is 2.161 million. And in a second, I will show you, because we are asked every year, how the budget for audit here at the City of Ottawa compares to other municipalities. And at the request of Audit Committee, I have some slides that show that difference. And maybe perhaps, Isabel, you could talk about your piece of this budget.
So I speak to the external audit fees. The external audit fees line item is used to capture expenditures and recoveries of any external financial audit conducted for the city's financial statements, the financial statements of each local board and municipal entity, other funds and entities, including the BIAs. This includes audits required for regulatory purpose for specific programs, often for those programs funded by other governments, or as a contractual requirement for projects with transfer payment agreements requiring financial and compliance audits. The cost of these special audits are recovered from the program or capital project budgets. New requirements for these audits are identified throughout the year, which may increase the actual expenditure for the year as it did in 2019. In 2019, the actual expenditures were higher than the budget, but much of this amount was recovered from the programs and entities that require these additional audits. An example of a new audit requirement was the Lansdowne Equity and Proforma review that was completed by an external audit firm in 2019. This was a separate external auditor review not done within the Auditor General's budget. The draft budget maintains the external audit budget at $398,000 and recoveries at $170,000 for 2021. Next slide.
So, Mr. Chair, within our own budget, we see increases for potential contract settlements for the employees, as well as inflationary increases for our contracted services, which includes the materials and supplies and external services that we purchase. Carol, if you could move on to the two other slides for the information of the committee, please. Merci. Monsieur le Président, ce schéma représente le budget de vérificateur en pourcentage de budget de fonctionnement brut de la ville. This is an indication of the various budgets of audit offices across the country, and it shows that the City of Ottawa is at the low end of the spectrum in that the total percentage of the city budget that is dedicated to the audit function is 0.056, and you can see that that there's quite a range. But if we look at the next slide, which actually shows a comparison of the various municipalities compared, benchmarked against a couple of items, which is would be the land area of a municipality, which might be indicative of the challenges the municipality might have in delivering services, the population of a municipality, and then of course the gross operating budget. And once again, this expresses the same percentages with those same municipalities, showing some of the comparable benchmarks that someone might consider using. And when you look at the municipality of Ottawa, you can see that budget-wise and certainly population-wise, Calgary and Edmonton compare favorably. And since we're at the bottom end of the range, there's no doubt that those two are higher. So it shows you the difference in the budget dedicated to audit here at the City of Ottawa versus what is done in other municipalities. Thank you, Mr. Chair. Thank you, Carol.
Thank you very much. Questions? Vice Chair Meehan, please.
Thank you very much, Chair. That's interesting, those slides. Thank you very much. I would be interested in asking if we could get a little bit more information on the funding models for the other cities. You know, what are they doing differently? Do they feel there's value for money? Is it possible to make that a direction to staff? Could we see a comparison?
We could, Mr. Chair, through you, we would take it as a direction. We would come back to you with the differences in those municipalities and the way they deliver their audit function. For example, some of these offices do not have a fraud and waste hotline, and of course those activities are done by the Office of the Auditor General here, and it's part of our budget. So what we'll do is we'll provide you more information about these municipalities and the way that they deliver their audit function, if you find
That'd
that
be
helpful.
great. I thank you for that. Thank you so much.
Okay. Thank you, Mr. Chair.
Thank you. Councillor El-Shantiri, please.
Thank you. Thank you, Mr. Chair, and thank you to the Auditor General. But is it fair to say, Mr. Hughes, some other municipality, the auditor is completely out of the city building, out of the, so we're not comparing apple to apple sometimes. Is that fair to say? Because different municipalities have a different mandate with their auditor. Some of them, they have to pay for real estate, rent space, and other, where in your case, you're in the city building facilities, and city support you in many other ways with the electronic. And I'm just wondering, in a comparison, we want to make sure we're comparing ourselves with someone is comparable to Ottawa.
Mr. Chair, through to the council, it's a good question, and that's certainly information that we can provide. I know personally that I know personally that most of these municipalities have no overhead. There's no overhead payment, if you will, to the municipality. The IT function is provided to these municipalities on the part of the by the municipality. They're not all Auditor General models, so they're not all independent of the city. And I'm aware that for those that I know their locations, I'm aware that they are co-located with the city, but that's a good question, and I will provide that information to the Audit Committee in our response back. Thank you for the question.
No, thank you very much. That's great. Thank you, sir. Thank you, Mr. Chair.
Thank you, Councillor El-Shantiri. Seeing no other questions, Carol, do we vote on the roadmap motion? Is that what we do? Okay, on the roadmap motion that was presented by the Vice Chair.
Carried.
Is that carried? Any objections from committee members? Hearing none. And then that the Audit Committee consider the relevant portions of the draft 2021 operating and capital budget and forward its recommendations to Council, sitting as Committee of the Whole for consideration at the meeting to be held December 9th, 2020. Is that carried?
Carried.
Carried. Any objections? Hearing none. Thank you. We are now on to item number 3, the Office of the Auditor General added annual report and detailed audit reports. Vice Chair, I think you have a motion to add supporting documentation, please.
Thank you. Whereas the supporting documentation for the item 3, Office of the Auditor General annual report and detailed audit reports was not circulated with the agenda package. Therefore, be it resolved that the Audit Committee approve the addition of this document for consideration by the committee at today's meeting pursuant to section 89(3) of the procedure bylaw, being bylaw number 2019-8.
Thank you. Is that motion carried?
Chair, I just have a quick question about that process, if that's okay.
Yes.
Okay, great. Thank you. I'm just wondering, with audits that come forward, we release them on the day of the audit release, and then we can ask questions here. But wouldn't it be better to have those released and then people be able to have a chance to look at them and then come to audit and have those questions answered? I just wonder why we do it this way, where it's the same day and then it's released on that audit day, and then it's hard to sift through everything.
Why, thank you. Mr. Auditor General, could you provide context?
Mr. Chair, thank you, Councillor, for the question. There are a number of models that auditor generals use and audit shops use. By far, the most common is the model that we follow here, and that is that audit reports are circulated with the administration while we are after we've completed our work, and where they're responding to our findings. And the most common model is the model that we follow, which is where we release them on the day when we present our report to Audit Committee. There are also different models of the way audits are handled in organizations. There's a discussion at Audit Committee, and there are some organizations that have a much more have a discussion at council or a board of directors as well. Certainly, there's always the possibility, because it's within the purview of my office, for us to release an audit. But to release an audit before an audit committee or without there being an audit committee. And there are some auditors that do that selectively, and there's some auditors that do that all the time. I can tell you that that two of the audits that we're discussing today, for example, were still under active discussion between ourselves and the administration until late yesterday. Very late yesterday. So it isn't possible it wouldn't be possible to release all of them that way. But certainly, I will be meeting with the new Auditor General, and certainly this is one of the things that I discuss with with our management team here, and I would be discussing the same thing with the new Auditor General, and certainly it's something that the new Auditor General could consider and could decide to change themselves. But it's a good question. Thank you.
Okay, thank you so much, Mr. Hughes, and congratulations on your career and your retirement. It's been great to work with you. Thank you. Back to you, Chair.
Thank you, Councillor Menard. Okay, so we just did the supporting documentation. We haven't voted on that. Is that motion carried? Motion by Councillor Meehan to add the supporting documentation. Thank you. And now there'll be a presentation by the Office of the Auditor General on 5 audits. There will be, as is our usual practice, we will stop at each element of the 5 audits to ask questions, and I will introduce staff that will be available to answer those questions at that time. I believe the order is, well, I will let the Auditor General talk about the order of the 5 audits that he is presenting. Thank you.
Merci, Monsieur le Président, et bonjour des membres du comité et des autres conseillers. Nous sommes ici pour mon dernier rapport annuel de Bureau de vérification, Bureau de vérification générale. Thank you, Mr. Chair. Good morning to members of the Audit Committee and other councillors. We are here for my last annual report, and once again, I would like to extend my gratitude to the members of the committee for the support that you've provided. Next slide, please. Je veux remercier les employés de la ville. C'est pas possible de faire des vérifications seul. On a besoin une équipe. Et à la ville, dans mon bureau, j'ai des employés qui travaillent très fort pour préparer des vérifications. Et aussi, à la même temps, je dois donner gratitude au directeur municipal de la ville, M. Steve Kanalakis, et à tous les employés de la ville. It isn't possible, Mr. Chair, as you know, that to prepare this work by myself. There's a staff here in the office, and I am extremely grateful for them, and I thank them for their hard work on this. On this work. And of course, as we go about our work, it's imperative that we have the cooperation and assistance of the staff of the city. And I'd like to thank Mr. Kanalakis, the city manager, his executives, and all of the employees of the city for the cooperation with us today. Les deux vérificateurs généraux adjoints, Madame Sonia Brennan et Monsieur Ed Miner, made aujourd'hui. The two Deputy Auditor Generals, Ed Miner and Sonia Brennan, will be assisting me today in the presentation. Next slide, please. Aujourd'hui, nous présenterons 5 vérifications. Vérification de la comptabilité et distribution en cascade de Lansdowne, vérification des services de règlements municipaux, application des règlements municipaux, vérification de la gestion des installations, vérification du fonds de préférence de l'étape 1 de train léger d'Ottawa, vérification des théâtres méridiennes à Centrepoint et de Centre des Arts Shankman. Today, we're presenting 5 audits, and the order will be Lansdowne, the audit of bylaw and regulatory services, the audit of facility management, the audit of Meridian Theaters at Centrepoint, and the audit of Ottawa Light Rail Transit. Next slide, please. Nous commencerons avec le rapport sur la vérification de la comptabilité et les distributions en cascade de Lansdowne. Je veux introduire aussi au comité M. Joe Carpinoni et aussi M. David Cito, qui travaille pour RCGT. I'd like to introduce to the committee who will be joining us for this presentation, Mr. Joe Carpinoni and David Sato from RCGT, who assisted us in the preparation of this work. This, no one will doubt, is a complicated agreement, and the process for the accounting of the waterfall is very, very difficult. And for that reason, although our office has full understanding of the area under audit, if there are deep probing questions about details within that agreement, Mr. Carpinoni and Mr. Cito will assist us in responding to those. Thank you, Mr. Chair. Sonia.
Okay. Next slide, please. This diagram shows the complex legal and ownership structure of the Lansdowne Master Limited Partnership. The city and OSEG are equal limited partners in the LMLP and the Lansdowne Master GP Inc., which is the general partner. LMLP owns 99.99% of each of the component limited partnerships, the entities you see along the bottom. Each subsidiary is also managed and operated by a general partner, which are owned by OSEG. Next slide, please. The objective of our audit was to assess whether the city's internal accounting processes for the Waterfall Agreement are designed and operating effectively, and that all components of the equity contributions or return on equity are accurately recorded in the Waterfall distribution system in accordance with the partnership agreement. We looked at 5 specific areas. Firstly, we set out to assess the city's business planning, risk management, performance measurement, and reporting for the partnership. We examined processes in place to monitor, analyze, and challenge financial results against the intended outcomes for the partnership. Secondly, we examined the city's accounting process for its equity and return on equity. We also examined OSEG's accounting for their share of equity and return on equity, that the components are fairly accounted for and classified in accordance with the agreements. The fourth item was an examination of the city's monitoring and oversight for the Waterfall distribution system, including active monitoring and validation of the amounts, the calculations, and distributions, if those were to be occurring, of the Waterfall system, that those were fair and complete, accurate, and timely. The city, and finally, the city's monitoring of non-arm's length revenue and expense transactions to ensure that they were treated in accordance with the agreements. Our audit scope included the period between 2012 and March 31st, 2019, which was the last financial statements available to us at the fiscal year end of the partnership. We began our work in November 2019, and our field work ended in August 2020. In March, we were asked to delay our work for a significant period of time, which we, of course, agreed to under the circumstances, and this delayed the completion of our work by several months. Next slide, please. Thank you. The financial arrangement for the partnership, also known as the Waterfall, is based on a closed financial system that considers the equity contributions from the city and OSEG to be used solely for the purposes of the total project. So the distribution is based on a waterfall of priorities. As you can see in the first level, these are additions to the life cycle fund. These are funds that are reserved to be used to maintain the assets, the stadium, the parking structure, and retail components. The original agreements prescribed that these funds specifically were to be held in a trust account to ensure that they would be protected for their specific use. The second level is return on equity. This is interest earned at the agreed rate of 8% per year on OSEG's equity contribution on a cumulative basis. Because the agreement states the city has zero equity, they do not receive a return at this level. The third level is a return of OSEG additional equity. Additional equity is defined as equity contributed in excess of the minimum equity requirement, which is explained in the fourth level. The return of OSEG equity, this amount of $30 million is set in the agreement. The city again is considered to have zero equity, therefore would not receive a return. The fifth level is the return on the city's deemed equity. This is interest earned at 8% per year to be received by the city for the fair market value of the retail component lands. And the sixth level would be any remaining balances of net cash flow would be shared equally by the city and OSEG. So as you can see, the green represents OSEG's share of distributions and the yellow represents the city's share. We show the life cycle fund in a different color because it's a pre-return, and those are the levels 5 and 6. The dollar amounts shown represent the balance that's accumulated at each level as of March 31st, 2019. These amounts are balances reported by OSEG and have not been adjusted for the discrepancies that were found during our audit. So far every year since the beginning of the agreement, OSEG has contributed additional equity, and these amounts are being accumulated at level 3. Next slide, please. So the first objective of the audit, overall we found that there are processes in place for each of the areas addressed: business planning, monitoring, risk management, performance measurement, and reporting. However, there were areas where improvements can be made. We expected to find that the city management are aware of the partnership's business plans at a sufficient level of detail to allow them to challenge assumptions and understand the expected return on equity for the city. It was found that while the city is reviewing the annual financial statements, the focus on year-over-year variance analysis and financial results may not provide sufficient insight into the financial performance and operations of the partnership. The lack of notes or explanations provided by OSEG further limits the city's ability to conduct a thorough analysis to determine reasonableness of the assumptions used in the forecasts. While the partnership has their financial statements audited annually, it is important to note that financial statement audits focus on adherence to accounting practices, to accounting standards, and look for material misstatements. Financial audits our financial statement audits are not designed to identify issues relating to the appropriateness of accounting entries in relation to legal agreements or whether sound operational decisions were made. Therefore, reliance on the financial statement audits provides the city with limited insight into the detailed financial activities of the partnership and its performance. It is our opinion that in order to protect the city and its interest, it was expected that the city had established a risk management process to identify and mitigate risks associated with the partnership. While the city has developed an operational risk register, it does not include risks related to the long-term objectives of the agreement or financial risks related to the waterfall. Furthermore, while mitigation activities were identified for high and medium level risks, it was found that some of these activities were deemed not to be effective. Additionally, we expected that the city would have implemented a process to analyze the annual financial results of the partnership against the original approved financial model. On a yearly basis, the revised pro forma financial forecasts are compared to the previous year's adjusted figures to provide the most recent results for the forecasted waterfall distributions. Although this is a good practice, this year-over-year comparison does not provide council with a full picture of how current performance fares against original and/or updated assumptions and expected outcomes, whether it be against the original 2010 proposal, the 2012 updated proposal, or the 2015 updated pro forma financial forecasts. In both 2012 and 2015, there were significant changes to the forecasts. It is our opinion that it is important to compare against original expectations, as it ensures that financial performance, anticipated returns, and expected value for money are being effectively monitored and tracked by the city. Next slide, please. So to illustrate the changes in the assumptions that we saw in 2012 and 2015, it's illustrated here in this graph. The financial forecast has changed significantly over time. The original was approved by council in 2010, and there were major updates in both 2012 and again in 2015. The forecasts represent the projected waterfall distribution over the life of the 30-year forecast. The yellow highlighted levels represent forecasted distributions to the city. So in 2012, the city was forecasted to receive $93.6 million in level 5 and level 6 of the waterfall. At the same levels updated in 2015 and 2019, the city is no longer expected to receive a return. Next slide, please. For the second objective of the audit, we expected to find that the city's accounting treatments for the partnership are appropriately based on the legal structure and public sector accounting standards. We found that the city's accounting for their equity position was thorough and complete and properly reflected in the city's financial statements. For objective 3, we expected that OSEG's calculation for additional equity, return on equity, and net cash flow are fair, accounted for, and classified in accordance with the partnership agreements. This is important to assure that the correct amount of future positive cash flows are distributed appropriately. Our analysis on OSEG's reporting for their share of equity, and those are levels 3 and level 4, and the returns on equity in level 2 identified some discrepancies and areas for concern. It was found that OSEG's additional equity account, that's at level 3, was overstated by $6.5 million. This account accrues interest at a rate of 8% per year, translates to OSEG accruing additional interest at a rate of $520,000 a year, or potentially $14 million over the remainder of the partnership. At the time we completed our work, the error remained uncorrected in the waterfall. In our opinion, we believe that interest on OSEG's minimum equity for the years between 2012 and 2013, so this is a different item, that they were overstated by $944,000. When examining this item, we found that the agreements were unclear, and we consulted with the city's legal counsel, and they were unable to provide a definitive interpretation of the relevant agreement clauses. As such, we have recommended that the city conduct further work, including legal support, to resolve this matter. Although there are currently no cash flow consequence to these errors, The longer they remain uncorrected, the higher the risk that documentation and support for rectifying these discrepancies are unavailable. In addition, these errors left uncorrected could result in subsequent distributions being misallocated. We also examined OSEG's net cash flow calculations, and we found that the method used to calculate them is in accordance with the agreements. However, OSEG was unable to provide a detailed breakdown of cash flows, and it was not possible to assess whether the amounts were classified correctly. Additionally, some variances were found as we reperform reconciliations of those items. In our view, the city needs to enhance the current review process to ensure the accuracy of OSEG's reported cash flows, because this is what determines whether or not there's any cash available for distribution. Next slide, please. For the fourth objective, we expected the city would have a process in place to actively monitor and validate the calculation of OSEG's additional equity, accrued interest, and any distributions of these amounts to ensure they are valid in accordance with the agreements. We found that the city does have processes in place. However, there were limitations and gaps in these practices. As the partnership has been in a negative net cash flow position every year since operations began, OSEG has contributed a substantial amount of additional equity and is accruing 8% interest on these contributions. The city is not reviewing or approving additions to equity, which based on the current distribution model forecasts represents $105 million in additional equity and $238 million in return on that equity. As both of these amounts are paid out before the city would receive any returns, it is important for the city to be in agreement with these amounts. The city has completed its first detailed analysis of the waterfall since operations began in 2014. This work was started in late 2018 and completed in April 2020. In order to provide an accurate reflection of the city's return on investment on an annual basis, the city needs to enhance its oversight on verifying that the equity accounts and associated returns are calculated properly on an ongoing basis. Next slide, please. So this is the final objective that we assessed in the audit with respect to non-arm's length transactions. So we expected that the city is identified and is actively monitoring non-arm's length transactions to ensure that they've been treated in accordance with the partnership agreements. Non-arm's length transactions are transactions between two or more entities where the entities have a mutual interest or may mutually benefit from a business transaction. As such, the business entities may not or cannot act independently. There were 18 parties of this nature that were identified and listed in Appendix 2 of our report. These include the component companies, as were shown in the organization chart earlier, and others. For example, the OSEG Foundation, Ottawa FC or Fury, Trinity Development, Minto Properties Inc., and so on. Some of these entities share office space, staff, and other overhead costs. Others may carry out services such as property management or construction. Corporate finance at the city did have a process in place to assess the reasonability of these transactions. However, we found that this process was not sufficient. The first detailed review of these transactions was started in late 2018 as the city hired Ernst & Young to conduct specified procedures on their behalf. The report showed no findings from the 2012 to 2017 period. In our audit, we found no material variances in the dollar amounts of the non-arm's length transactions tested where supporting documentation was available. However, the validity of 62% of the transactions that we tested could not be assessed due to limitations and gaps in available supporting documentation. Furthermore, we found that there was a tendency to exclude detailed descriptions and a lack of documentation supporting entries in their financial system, along with any lack of formal guidance in relation to the management of non-arm's length transactions. These issues made it difficult to conduct a comprehensive analysis and assess and conclude on the validity of the transactions. As such, we've recommended enhancements to the existing monitoring and review processes for this area. Next slide, please. Overall, we found that although the city has established some processes, our findings support the need for increased levels of examination and analysis in the city's monitoring and validation processes. We made 11 recommendations in our report, and the city has agreed with all of those. I just want to acknowledge the cooperation and support we received specifically from corporate finance, from the Deputy City Treasurer of Corporate Finance's office. This was a difficult time for them to complete this audit, and we found that they were extremely cooperative and responsive during a challenging time, and we wanted to acknowledge and thank them for that. So that concludes the presentation, and we'll answer any questions you may have. Thank you.
Merci, Madame Brennan. Merci beaucoup pour votre présentation. Just for Audit Committee and all members' information, city staff to answer these questions are Isabel Jasmine, the Deputy Treasurer of Corporate Finance, and of course, if there are questions to the Office of the Auditor General, Ms. Brennan or the Auditor General will answer them. I have a couple of members. Councillor El Shantiri, please.
Thank you, Mr. Chair, and thank you, Madam Deputy Treasurer. Mr. Chair, as you indicated, we'll be able to ask staff at the same time and go back and forth between staff and the other general staff. Is that correct?
Yes.
Okay. So my first question is to the city staff, Mr. Chair. Can staff comment on the Auditor General's finding that there should be organizational structure change as the unit are working in silos and this cause inefficiency? Can staff tell us their position on the auditor?
Mr. Chair, if I could, that question would relate, I believe, to the perhaps the next audit.
Sorry, no, yes, you're absolutely right. I'm looking at there's so many papers, Mr. Auditor General, and so many they came in last minute, unfortunately. So the question again is staff's position on the finding of the Auditor General. I'd like to hear from staff. What's their position on the report?
Did you want me to start, Wendy, or?
I can certainly start, Isabel, and then I'd ask that you provide some details in terms of the overarching question. But Councillor, thank you very much for your question. I think in terms of the overall report, we certainly welcome the recommendations. We have agreed to all of the recommendations. But one of the points that we would make is that we have completed a very detailed review of the waterfall. And I believe Sonia spoke to that in terms of the review that was done. It was a very detailed review. This is a very complex agreement that we have. It's in a very extensive review that was taken place from E&Y, and they took the time to understand the partnership agreement and made that investment to understand in terms of the flow and how it works, and I'm going to say the various levels as you've seen outlined in the waterfall contributions. That review period covered multiple years from 2012 through to 2017, and they did a complete review of those equity contributions. What we did in terms of that review, there were some small tweaks, and they were reported through to council in a report to FEDCO, which was part of the annual review in 2019. So we made the tweaks to the adjustment in the waterfall from there. I'll just pass it over to Isabel to see if there's anything she has to add.
Yeah, I just wanted to say that a lot of the findings that were identified in the Auditor General's report were already identified by the Ernst & Young report. Ernst & Young conducted their audit. They started in 2018. It took a year and a half because they covered such a large period, 12 2012 to 2017, it took them half that time just to reconcile back to the GL transaction level. And that's what they needed to be able to properly sample and test all the transaction requirements. So they identified the fact that the $30 million was earning interest from the beginning. That was fully reviewed with their legal, and the specific terms and conditions in the agreement tied back to that requirement that they should be earning interest from the beginning. They identified variances in when they recognized equity contributions, making sure that it reconciled back to the financial statements, and that was corrected, as Wendy mentioned, in the account of the annual report to council in November 2019. There was an adjustment of about $17.9 million made that was reported in that document, and all it did was reduce the amount of return on equity and shifted it to the return of equity. So overall, it doesn't have an impact on what is being distributed to OSEG, but it was a correction to the overall calculation of interest. The other item identified was the 23.75 for a deemed equity. That was identified by EY, and all of that was shared with the Auditor General.
Mr. Chair.
Sorry.
Mr. Chair, if I could interrupt, I really do think I've got to make a couple of clarifications here. There was extensive use of the word review as to the work done by E&Y and references to the audit done by E&Y. And I should point out that E&Y did not do a review and they did not do an audit. In fact, they were very clear in their engagement letter. They referred to it as specific procedures. And in their engagement letter, they specifically say these specified procedures do not constitute an audit or a review. And then I would also say that if these items were identified by Ernst and Young in their work, and if they were corrected, why were there still disagreements to our findings as late as yesterday? So thank you, Mr. Chair.
So just to respond to that, the corrections were made in 2019. When we provided the fact check information to the Auditor General, they said that was out of their scope. They had only reviewed up to 2018. So corrections that were made at the end of the EY audit were not included in the scope of the AG. Just also to respond to the specified procedures, it was a specified procedure, very specific to equity contributions, the calculation of the pro forma. They didn't look at the overall, they looked at specific items related to that audit, which was making sure that the equity contributions were correct, the calculations in the pro forma were correct, and everything tied back to the financial statements. They weren't re-auditing the financial statements of OSEG. They relied on KPMG, was a certified external auditor that audits those financial statements. It's a requirement of the agreement for those financial statements to be audited, and they relied on that. They met with KPMG and they reviewed the details of those audits too.
Okay. Thank you, Madam Deputy Treasurer and Mr. Hughes. We are on Councillor El-Shantiri's questions. Back to you, Councillor El-Shantiri.
Thank you very much, Mr. Chair. So to our management staff, or to Isabel, she's answering those questions. So we waited 4 years to the 2018 to look at the accounting waterfall. I know this was done by consultants. Should that have been done sooner than like, should we waited that long, or should it have been done sooner? Because as you know, the waterfall, being the councillor who was on council at that time, was, I don't know how many times we heard about it and we saw the model, and still sometimes is difficult to follow the waterfall model. So should that have been done earlier? Like, should we waited that long, 4 years?
So the reason why we waited was in early days, there was still construction going on. Because it was an audit of the equity contributions, we wanted to make sure we had a full sample and a solid financial statements to review. And so it wasn't actually completed until 2015, and there were still construction costs coming in until 2017. So we put a line in the sand and we reviewed the full 2012 to 2017. So we had a full picture of all the equity contributions related to construction. The equity contributions related to the year-over-year deficits, that we can rely on the financial statements, the audited financial statements, because that's another part of their equity contribution is the year-over-year deficits. Since there were no distributions from the waterfall, we weren't at risk. It was literally just confirming what's in the spreadsheet and how things are calculated. OSEG has been contributing to the closed water system. We have not been distributing other than the settlement that was made for the $23.6 million.
And if I just might add to Isabel's comments, Councillor, there is an annual review that takes place in terms of reviewing the financials and looking at those variances. So while Isabel talks about the need to wait for that detailed review, there is an annual review that happens here as well.
Okay. Thank you. Back to you, Councillor El-Shantiri.
Well, Mr. Chair, I was trying to understand if what we have on the front of us has any impact from COVID, or that was mostly done before COVID-19. So, is there's any impact on the operation or the waterfall from COVID, or that's not included in this audit?
So this was done prior to COVID, but the most current, the annual report that was presented this year includes all those changes that were made from the EY audit. So it is the most current information that was provided as part of the COVID impacts.
And if I can ask the Deputy Treasurer, Sonia, what would you expect, or what is your expectation of this audit? We know COVID has changed the landscape, or has changed the game plan, so to speak, about the whole waterfall issue. But prior to the COVID-19, so you're finding, are you comfortable your recommendation to management are going to be addressed?
Well, Mr. Chair, through to the councillor, management has agreed with all of our recommendations. So I believe that means that they will carry out those activities. The work done in terms of the impacts of COVID, we completed our work, and we started our work in 2019. We were supposed to be complete around May 2020. So the period of financial information that we reviewed literally was the period ended March 31st, 2020. So on the cusp of the pandemic. So we can't speak to from the financial impact of that, but certainly that information is now being provided. We conducted our work at a different level of detail than the Ernst & Young specified procedures. And I want to reiterate that those were procedures that the city had asked them to carry out and they had agreed upon. We did our work. We also included the 2018-2019 period, which is where we found the non-arm's length transaction finding with respect to lack of supporting documentation for quite a number of the transactions that we tested. We did have Ernst & Young's report but while we were carrying out our work and considered those items as well as carrying out our work as efficiently as possible in terms of not duplicating similar procedures that they were conducting. We also looked at a much lower level of materiality. In some of their testing, they only looked at transactions above either $5 million or $1 million. We did not have a limit like that. So we looked at a range of transactions that produce the results and the evidence that you see in the report.
If I may clarify, so the EY audit looked at transactions in the equity contribution account above 5 million. Those transactions included multiple transactions within. So some of the ones that were tested was, for example, one that was 13 million. That included 8 different line items that ranged from 147,000 to $1.5 million transaction. So the equity contribution account has very large lump sum amounts through the transfers of the equity. And we focused on the ones that were above 5 million, but those included sub transactions and line item detail.
Okay, well, thank you, Mr. Chair, for the endorsement. Thank you.
Thank you very much. And I guess, the next councillor is Councillor Deroux. I guess what is clear is the complexity of this agreement and all its elements. And Madam Deputy Treasurer, you said at one point not at risk, but I guess the fundamental question is it compliant? Is it responsive? Is the execution of the agreement to the expectations of the city and of the residents of the city? And I'll just mention, let me say, you as accountants, and I'm sure the Auditor General will back me up on this, we should not use the term audit when there is not an audit going on, when it is a review, or is it an examination of procedures. That the terms of engagement that accountants get into and firms get into are pretty specific as to what they're going to do. So I would caution about that. And with that, I will go to Councillor Deroux, please.
Thank you, Mr. Chair, and to you. And I know some of the question I had probably Councillor Shantiri already asked, but I do have a few questions on was OSEG equity overstated by 6.5 million, and if so, can staff explain why?
So it was not overstated, and it was not an error. It was following the agreement. So when the $23.6 million was settled as part of that 2015 report to council, it was not specific as to how that money would get repaid to OSEG. It would just say we would take out a loan and then repay the equity that had been put in by OSEG. But it didn't say how that would be distributed. So what they did in the pro forma is they followed the waterfall distribution, because that's how amounts are distributed from the closed financial system. They distributed the interest that had been accrued to date first, because that's L2, and then distributed from the equity the remaining amount, which was at L4. So that's how they did it. Now, subsequently, they said in good partnership and to the benefit of the city, they would be willing to recalculate that, but they were fully within their rights to follow the water distribution method, which is consistent with the agreement.
Thank you very much, Deputy Treasurer. So that will lead to my question number 2, probably. Do the finding in the audit of the closed financial system have any material impact on the recommendation adopted by FEDCO in the annual report?
No. So just even this one, which has been identified as the 6.5 million, it doesn't change the financial statements. It doesn't change the amount that will be distributed to OSEG. All it changes is the amount that they will not recoup, because in that report, it talked about the amounts that would not be recouped. And all it does is change the interest calculation that they're never going to get anyway.
Okay. Thank you, Isabel. I just probably, I know this is so, like I said, that the chair mentioned, and this is a very complex and very complicated file, but I would like a staff to summarize the result of the EY review of non-arm's length transaction and how that compared to the Auditor General finding regarding these transactions, because I think there is some kind of not disagreement, just not both on the same page. So can you please staff summarize that for us, for this committee?
Yes, so EY did conduct a full non-arm's length review, and part of that was just making sure that they had all the GL transactions, because they could ask from OSEG a list of their non-party, non-related or related party transactions, but not be assured that they'd given them all to them. So they looked at the full universe. They identified which were non-arm's length or related parties, and it was the 18. What's in the Auditor General's report, though, is 8 of the 10 that they picked were intercompany transactions. They were from entities that are consolidated within the overall LMLP. So it's like an expenditure on one side, a revenue on the other side. For the LMLP results, it nets out to 0. So intercompany transactions are often just a journal entry. So you may not have an invoice as supporting documentation, but you would have a journal entry showing the transfer between those, but overall the consolidated results. So EY excluded those. They felt they were not relevant. They picked true related parties to audit.
Thank you for clarifying that, Deputy Treasurer. And I just want to thank Sonia for her presentation. Mr. Chair, this is I don't have any more questions, but I do like to take a moment to thank our AG Ken Hugh, and I wish him the best in his retirement, and I thank him for all the service he done to the city. I know it was emotional for him this morning, but I want to echo my gratitude for him and his work he's done in the city. So thank you very much, Ken, for your contribution to the city.
Thank you, Councillor DeRuse. Ms. Brennan, you presented the audit. Any comment with respect to what was provided by the Deputy Treasurer?
Yep. Mr. Chair, I'd like to ask Mr. Cito, on behalf of our CGT, to comment on the work that was done and how that compares to the E&Y audited specified procedures.
Before we go there, could you just clarify for me? You've mentioned we've had EY, we've had RCGT, we've had KPMG. Could you, in a quick sentence, let us know which firms were working for who and how they relate to each other?
Okay. So KPMG are the financial statement auditors for the partnership. So they conduct a financial statement audit on the partnership financial accounting. Ernst & Young was hired by corporate finance at the city to carry out specified procedures related to the waterfall calculations. Our office from time to time hire outside expertise to conduct audits on our behalf under our oversight. And Mr. Cito from RCGT and Mr. Sharpnoni, partner and senior director, carried out this work on our behalf. So if David, if you're there, if you can perhaps provide some insights onto the differences in the work that was conducted through and reported in our audit versus the E&Y specified procedures.
Thank you for that clarification, Madam Deputy Auditor General. Mr. Cito, please.
Hi. Can everybody hear me? Yes? Okay.
Yes.
I'm having a little issue with the video, so I'm not sure I can get on video, but I'll happily speak to it. We looked at all non-arm's length related transactions. We got a listing of all the transactions from OSEG directly. We took a sampling of the EY transactions to ensure that we were all on the same page with respect to their findings. And then we focused our efforts on the year that wasn't covered by the EY specified procedures. So we looked at 10 entries from the 2018-19 period, which did include transactions with the component companies. However, those do actually merit mentioning. There are transactions that occur between the subsidiaries and the parent company that do get rolled up into the consolidated financial statements. However, can have an impact on how certain accounts are reported, whether they be tax accounts or revenue accounts, and how those transactions occur. In particular, there was one transaction between OSEG and LMLP, where supporting documentation just was not available. And again, maybe they just didn't report it because they figured they were on both sides of that transaction and they could keep that documentation or that knowledge internally. Many of our observations focused on the fact that either the appropriate notes or comments were not contained within the accounting system, and or that source documentation, i.e. a copy of an invoice or a report or of any sort of background documentation behind the transaction was not available. So we did look at, like Sonia was saying, there was no minimum to our transaction. We did a random sampling. So we looked at transactions anywhere from $25,000, I think was, under $9,000 was one of our transactions that we looked at, up to somewhere around $2 million on an individual transaction and or entry. I don't know if that addresses the questions, or if you want me to go into any more detail with respect to specific transactions.
Well, Ms. Brennan called on you for clarification in response to questions by Councillor DeBruce. Councillor DeBruce, does that answer your questions? Or Ms. Brennan, did Mr. Cito provide the clarifications satisfactory to you?
Yes.
Thank you. Councillor DeBruce, did you have any more questions?
Thank you very much, Mr. Chair. I appreciate that.
Okay, thank you. Councillor Hubley, please.
Thank you, Mr. Chair. I find this unusual. 10 years I've been on Audit Committee, and it's the first time I've ever heard an argument about whether something was an audit or not. So I know we've been getting some good clarification here. I haven't heard Isabel speak to why she was referring to it as an audit, and if she agrees with the new definition of what took place there.
I wasn't referring to it as an audit. I was referring to it as a review, and I apologize if I did. Review is a broader term, but it was a specified procedure. I confirm it was a specified procedure specific to the equity contributions and making sure that the calculations in the waterfall were correct.
Thank you, Isabel. Now, one of the findings here of this audit is a suggestion that we look at enhancing our monitoring and validation processes that we have in place. I see that your department has accepted that finding. Can you tell us what exactly you're going to do as extra measures to deliver on that?
So as Wendy mentioned, we do have a process annually. We do review the financial statements. We do reconcile it to the waterfall. We do recalculate the interest to make sure that it's correct. And so that would be done on an annual basis. What we also do is we do a variance analysis. We review it in detail with OSEG prior to the unit holders meeting. In early years, that was a rigorous process going through every line item because it was a brand new operation. And so it was a line item detailed review of all variances. And as we got more comfortable with the operations and knew where the key factors where there was fluctuations, we would focus on those fluctuations. What the Auditor General is suggesting is that we go back to the old line by line review, even though if it's the same as previous year, we'd still go into those details, and we committed to doing that. So we're going back to a line by line variance analysis of their results.
Okay, thank you, Isabel. We appreciate your hard work. A question for Mr. Auditor General. One of the things I'm picking up on this audit and other audits today, as well as ones in the past, it seems to focus around oversight. Do you want to speak to that? Is that like something that we're seeing across departments here? Is that something you can speak to here in this audit, or would you rather wait and speak in general terms later?
If I didn't know better, I would say, Mr. Chair, that the councillor had seen my notes, because I will be talking about the common themes later in the presentation. Thank you.
Okay, I'm happy to wait till then, but I'll probably have some questions for you on that. Okay, Mr. Chair, that's all I want to discuss on this audit. Thank you.
Thank you, Councillor Hubley. And you know, I understand we don't want to get into the accounting weeds because but just the terms of engagement and the expectations by city staff, by the residents, by this audit committee are important distinctions. And I guess that was the point I wanted to make, whether it's a review or an, the terms of an engagement.
Mr. Chair, could I maybe ask one more quick question of the Auditor General, just to clarify here, if you don't mind?
Of course, of course.
If I read this audit correctly and the discussion today, Mr. Auditor General, is it safe to say that our partners in the agreement, OSEG, are actually doing everything that we would expect of them to do, that they're following the rules of engagement, if you will?
Through to the councillor, Mr. Chair, we are not saying that that OSEG is not performing to the contract. We are saying that we disagree with some of the counting that is done on the Waterfall. As the deputy treasurer has said, accurate accounting in the Waterfall is important to record the transactions, the activity of the partnership, and at any time in the future when there are disbursements, how those disbursements will be made. And we have found some differences in the way the accounting was handled. And in a couple of instances, it was differences in interpretation of the agreement. So not for 1 second should anyone interpret what we are saying as an indication of bad faith on the part of OSEG. That is not the case. It is, given the detailed review, excuse me, I shouldn't say review, that the audit that was done by the staff of the Office of the Auditor General, we looked into transactions to a greater depth than others would, and we found some differences, and we've talked about those. Some of them, staff have indicated, have been adjusted since we did our work, and there are others that they are going to being addressing in the I think over the next year they should be completed, those adjustments. But I do not want anyone to take out of what we've done here that this is an indication on our part of bad faith on the part of OSEG. It is there are in one case there is some ambiguity, which was the wording that was provided by some staff in an interpretation of the of this very, very complex agreement. And when we brought our interpretation to the attention of staff, and they in turn brought it to OSEG, it was agreed that that they would make the changes that we recommended. So, in a long-about way, I think I've answered the councillor's question, and that we are not saying that they are not, that OSEG is not doing the work that we've asked them to according to this agreement. Thank you.
Okay, thank you, Mr. Hughes. Thank you, Mr. Chair.
Thank you very much, and thank you for that precision, Mr. Auditor General. Again, a complex agreement and interpretation, and there are some errors that sometimes get into a document or the reporting like this. But you said, I believe, and that those errors were not intentional. They were interpretation, and they were errors at some point.
I don't.
Is that correct?
I don't. We have no reason to believe they were intentional, and we're not suggesting that. We are saying we found some errors. We brought that to the attention of staff, and they. I know as late as yesterday they were discussing with OSEG. Although we had brought it to their attention some time ago, as late as yesterday, in discussions with OSEG, OSEG agreed to make that change. So, no, we have no indication that it was intentional, other than either a different interpretation. In one case, a different interpretation, but nevertheless, it was an error that we found in our work.
Noted. Thank you. Councillor Menard, please.
Chair, I see Councillor Meehan on there.
Yes, I have you ahead of Councillor Meehan on my list, but
Well, I'm happy to let Councillor Meehan go, whatever you'd like.
Councillor Meehan, do you want to ask your questions or?
Well, maybe I should, because, you know, Sean's always got good questions. He's thank you, Sean. I appreciate that. One of the things I wanted to ask is, everybody keeps referring to this deal, and certainly from the slide, this Waterfall was certainly it is a very complicated deal. We've heard that time and time again this morning. I'm just wondering, because I wasn't on council, was this agreement negotiated with legal staff or financial staff outside of the city? Did we have expert team to negotiate with OSEG?
Mr. Chair, with Steve Box, I'd like to take this one, please.
Certainly. So, Chair, yes, external legal counsel was engaged by both parties, and certainly the city engaged Morty Gross, one of the top P3 experts in the country, and BLG to represent the city. So the answer is yes.
Okay, and have we ever done this before? Was this the first time we did a similar financial deal with a conglomerate of companies? Was this new for us?
Through you, Chair. Certainly, we have engaged in P3s in the past. This was a unique financial arrangement, yeah. So the appropriate external legal counsel was engaged for the natures of this partnership. And
the degree of complexity. I ask this as management. Has it complicated our oversight of the deal?
Isabel?
So I can speak from a financial perspective. We have very rigorous processes. They're appropriate for the nature of the transaction and the relation and the partnership. Mm-hmm. We follow a rigorous process, and as part of the overall, I think, previous Auditor General's review, making sure that we address all the contract requirements of that contract. The financial items are clearly laid out. We know what we need to do, and we do it. So we're reviewing the financial statements, making sure they provide a budget, providing a 30-year pro forma. All of those items we follow up on.
Okay, I appreciate that, Ms. Judd. But when we hear that the Auditor General says that there was lax risk management, the process, it just makes me wonder if we've had that expertise and we know it's complicated and so much rides on it, why this happens.
Isabel, do you want me to speak to that?
I can't speak to the risk framework, no.
Yeah, I'm happy to, and I would ask if Steve Box has anything to add, to feel free as well. But there is a risk register in terms of our overall operations and review of this entire arrangement that we have. The strategic risks are really placed in front of what I call the unit holders meetings that we deal with at those meetings. So I would suggest that, to Isabel's point in terms of, yes, it's complicated, but we have processes in place to deal with that.
Okay. Okay, so we're looking at the agreement, and we're providing as much oversight as possible, but OSEG is they've also got their own accounting in place. Did we check their accounting? I mean, nothing. I understand that the Auditor General is saying that there's nothing untoward, and he's not pointing the finger at anyone when it comes to this contract. But do we provide oversight? Do we try to get oversight over their accounting as well, so that we know how they're interpreting things?
So
KPMG provided audited financial statements for the partnership. Is that correct?
Is that they're audited financial statements? So that it is fully reviewed by an external auditor as part of the requirement of the agreement.
And whose job is it now to stay on top of this very complex agreement at the city? Is
So
it relegated to somebody as someone's part of their job, description?
There's a very detailed matrix, Counselor, in terms of the operational pieces. The financial piece I can speak to, and I'm going to suggest corporate finance and frankly, Isabel and her staff do a very thorough review that we spoke of during the conversation this morning in terms of making sure that we're reconciling everything on an annual basis. We're reviewing those financial statements, completing that variance analysis. So that happens. And then as I said, the other piece is really detailed in the risk register in terms of the operational pieces.
So we have a team that's working on this together to make sure that we're missing nothing?
There's a very large team across the city that reviews this, yes.
Okay. The recommendations 1, 2, 3, 4, 8, 9, and 11 all have target completion dates that are falling into Q3 of 2021, okay? And given that our partnership with OSEG is undergoing, I'd say, pretty intense public scrutiny right now, and it impacts a lot of the business dealings with the sector of Ottawa, I would respectfully ask, does management believe it would be prudent to reduce the delay in the implementation and timelines of the recommendations? Given
So
that we're going to be...
I can speak to that, Mr. Chair. So it aligns with our annual review. Their year-end financial statements are completed at the end of March 31. So March 31, 2021, that is the point at which we review all their variances. And so that recommendation to review at a detailed level the variances in time for the unit holders meeting. So it all falls within a 120-day time frame. March 31, they have to provide audited financial statements within 120 days. And that all feeds into the unit holders meeting. So all the work that leads up to the unit holders meeting, that's the Q3 2021.
Okay, bear with me here though. So we are renegotiating with OSEG right now. Just explain to me how we're going to move that date, or we're going to stick to those dates and renegotiate on top of it. I'm not sure exactly what you're saying.
These are processes moving forward. We are fully confident in the results that have been reported to date. We conducted a full review, specified procedures review with EY to make any corrections in the waterfall. Those corrections were made. So the current waterfall and calculations and what is shown as an equity contribution, other than what OSEG has agreed to change now with the 23.6, that will be corrected, absolutely. But that will be part of the next pro forma reported to council.
Okay. Okay, I'll have to take that.
Councillor Meehan, if I may, just to add to what Ms. Jasmine is saying, it's really, when you look at those timeframes, it aligns very nicely with the receipt of the financial statements from the partnership. And as part of that process, that's where we do that review, that variance analysis, and that reconciliation. So when we receive those statements as they're required to give them to the city in accordance with the agreement, 120 days from year end, we will do that review, and it fits into the Q3 2021 timeframe.
And if I can also clarify, the 23.6 million change does not change the pro forma that was reported in the 2020 report, or the COVID impacts that were reported in those scenarios.
Okay. I have to ask, given I actually, some of my questions have already been asked, but given what we have learned about the complexity of this and the the continued oversight that's required, would you ever recommend a similar financial agreement with anyone?
Are you asking that of the city staff or the Auditor General?
If the city manager is on the line, and I think Steve K is. Steve, would you ever undertake this again?
Thank you, Mr. Chair, through you to Councillor Meehan. Well, can't predict whether we'd undertake this again, only because this was very unique to this particular partnership, and a lot of work went into defining the framework of how this could work because of the components that were involved in this deal. As you know, we mentioned before, we've done a number of P3s that we currently have that we're operating in, and they've all been different, light rail being one of them, and they all have very complex financial arrangements and contracts. So to answer your question more pointedly, I can't say that we would do this exact same deal, because the same circumstances would have to present themselves with a partner who would want this type of deal. So this was very unique to this particular site, as is light rail, as are some of the arenas and other things that that we've got. They all vary based on what outcomes we want and what the partners want, and the circumstances of the actual operations.
So can you guarantee to the taxpayers of this city that this is a good deal, that we are going to come out of this, you know, were there some benefits to the city of Ottawa financially?
Well, this kind of goes back to the other report that's before, that will be before council, in terms of the partnership agreement. And as I said at the previous meeting, it was said by other staff, the city has been protected from any losses that they've incurred since they started operations. So from that perspective, and I outlined the objectives that council had when they approved the deal, Chair, in terms of life cycle, protecting us from losses, those things have all been met. So if you look at it from the perspective of, if the city undertook this itself, would we be in a better position? That's hard to answer. People can debate that, and people have different opinions. But I do know that the fact that we had this agreement with OSEG has protected us from significant losses that they've had to fund, including all the life cycle repairs. So the city hasn't had to put a penny into this deal since it started.
Okay, I'll accept. Thank you, Mr. Kalakis, but still, it required the Auditor General to come up with, to determine that we didn't have risk management process in place. There was insufficient oversight. Those are, that alarms me a little bit. Should we be just accept the fact that you've accepted the Auditor General's recommendations and they're going to be acted upon? Well, and those loopholes and the cracks are going to be filled, and we don't have to worry.
Well, I don't think there's cracks or loopholes, Chair. I think what you heard from the Deputy Treasurer and the Treasurer is that we have a very extensive financial management over it. The Auditor General is recommending, we've accepted, as Ms. Jasmine has said, to go further and look at even more details, which what happened more at the beginning versus an annual basis. We've accepted the Auditor General. He's brought forward recommendations which are reasonable, that we should even look deeper and in more detail in terms of what's happening. So that's an additional improvement, but we take the position that what we've been doing so far has been adequate to protect the city. And the Auditor General is not recommending anything that for us would be, geez, we're opposed to this. If we can do better, and if we can look at more details, and that helps in terms of ensuring protection of our city and our taxpayers, we're prepared to do that, as expressed by the Deputy Treasurer and the Treasurer.
So those recommendations will be implemented then before we sign a different agreement or an extension with OSEG?
No, because the agreement, the extension on the agreement is before council now. And as you heard from Isabel, that we don't believe that this audit impacts any of the recommendations that staff have put forward, and we should be proceeding based on the urgency and the situation that OSEG is in right now. And as Isabel also stated, is that the things that were identified in this audit don't affect the financial outcomes ultimately, because of the financial situation they have found themselves in.
Okay, thank you, Mr. Kalakis, and thank you. And okay, that's all for me then. I guess maybe Sean's got some questions for you. Thanks.
Thank you, Madam Vice Chair. Certainly your point that it's a complex agreement and that oversight and can be improved by the city. I think that is a theme that we've seen in past Auditor General's reports, how contracts are administered, and that is certainly one of the overarching themes that I am taking in. You use the word, is this a good agreement? But good is not defined. Their operations and the services that Lansdowne provides to the city, to the residents of the city as a regional park and as a tourist attraction. There's the financial component, the reputation, the asset management and maintenance, and they're all part of this complex agreement. So thank you for your pointed questions. I appreciate it. Councillor Menard, please.
Thanks very much, Chair. I have several questions from the report. The auditor mentioned there were a couple of audits being discussed up until late last night. Was this one of the audits being discussed with staff until late last night?
Mr. Chair, there were aspects of this audit that we were still discussing with management late yesterday. Yeah. Okay. And did any of the wording in the report change as a result of recent discussions with management? Mr. Chair, through to the councillor, no changes to the report. There were changes to management's comments. Okay, and what were those changes specifically? Mr. Chair, through you to the councillor, there were both changes in content of their comments and changes as to whether they would agree or disagree. I must say that this is not out of the ordinary for us to continue to discuss our report as well as our findings and their comments after we've issued the report. And sometimes management has to get a better understanding of the point that we're making. And I would have to say that a couple of the outstanding comments were probably the ones that were around in interpretations of complex clauses in the agreement. And at the end of the day, there were changes made to their comments and agreement. They agreed with all of our findings and all of our recommendations. Okay, this was not out of the ordinary. No, thank you for that. I'd be interested in knowing which ones they originally weren't in agreement with and change, but I can follow up with your office separately. The way the waterfall was set up for the city, based on our deemed equity, the city was originally expected to recoup over $90 million. That has been revised down to zero. Does the auditor have any comments about what was originally considered city equity in the original agreement? Sonia or David?
Mr. Chair, through to the councillor, the original city equity in the agreement was stipulated to be zero. That was part of the agreement negotiations. I can't speak to those aspects of the agreements, but we're just showing how they're reflected in the waterfall projected distribution and the current current account balances. Yeah,
thank you for that. And the deemed equity was a different determination based on the retail, and obviously our return from that deemed equity is expected to be more. That's been changed down, revised down several times now. The four subsidiary businesses, there's an overall audit, but those four subsidiary businesses, they're not professionally or publicly audited. Is that correct?
No. Mr. Chair, to answer that question, the entity diagram that we showed you encompasses all the entities that are consolidated in the overall financial statements for the partnership. So it's the entire consolidated entity that has a financial statement audit. But as as I mentioned, a financial statement audit does not provide the same level of assurance as the procedures that we carried out to look specifically at adherence to the agreements. They are not auditing the financial statements for that, although there are key components, as Ms. Jasmine mentioned, key components that are relied on for assurance and the financial statement accuracy that do flow through the calculations to the waterfall. So that's where that information is, for lack of a better word, relied upon.
Right. And would it be helpful for us if we had those 4 subsidiaries underneath the master agreement, audited financial statements of those 4 subsidiaries? I know it's different than the audit work you just did, but the financial statement audits, would that be helpful for us in terms of these agreements to be able to see those?
Mr. Chair, it's a good question. The requirement to audit them separately with a consolidated financial statement audit, I don't, I don't believe would add value. However, because they're all rolled up and audited. However, understanding the different component entities' financials, it provides. I can't imagine that it wouldn't provide another layer of detailed information, and that's. Whether or not that's stipulated, I don't believe it's stipulated in the agreement that information is expected to be provided. That's between the city and OSEG to discuss provisions for more information should the city request it.
Okay, thank you for that. You found that the additional equity contributions for 2015 were overstated in the waterfall distribution model by $6.5 million. And at the end of the day, did that treatment benefit? Because it's either in one bucket or another, depending on the level. But that treatment, did it benefit the city or did it benefit OSEG in terms of the way they were overstated?
I'm going to ask Mr. Cito to chime in if I misspeak, but the way it was treated, in our opinion, it wasn't in accordance with the settlement agreement. And the other view is that, well, it was treated in accordance with the waterfall distribution. But it was based on a settlement agreement, which stated that the city could, that OSEG would transfer the $23.5 million from the additional equity account into a commercial loan. So leaving a remainder amount in that additional equity continues to accrue interest at level 2 of 8%. And that's what we had, our finding was that, our opinion was that that should be backed out.
Okay, so
treated according to the settlement agreement, not the waterfall agreement, which has been, as we understand, recently agreed to, that those changes would be made.
Okay, so ultimately that treatment would be more favorable to OSEG in terms of that 8% return.
Yes.
Okay, and I'd love to hear from Mr. Cito on this in particular. If you could shed more light on the nature of this activity. And it seemed like there was a misunderstanding or people didn't know how this happened and why this occurred. I'd like to know more about that.
On this particular transaction?
Yeah.
Yeah. So as Sonia was alluding to, there was an agreement at council to allow OSEG to recover $23.5 million that they had invested through to support the steel roof corrosion remediation of TD Place. So the treatment of that $23.5 million, and you're correct in assuming, had it all been taken out of the additional equity account versus split between the accrued interest on additional equity or equity in general and the remainder through the additional equity account, then there is that 8% interest that would continue to accrue that if it was just taken out of the equity would not have. Whether or not it was intentional, I mean, they had an interpretation of how they felt it should be applied. as Isabel said earlier, they applied the waterfall approach to it. There's a little bit of a miscommunication or misunderstanding between whether or not the 23.5 million or 17 million of it should have been classified as under the minimum equity or stadium completion funds, which through the waterfall actually has a different treatment than additional equity, i.e. it's not supposed to be repaid until 3 years, I believe, after the operation commencement date, which basically means in 2015 it wouldn't have been eligible for repayment anyways. So there are two different ways to interpret it. I think the impact overall, there is an impact on the pro forma. There is not an impact on the expected return to OSEG at this point in time, because the cash flows simply don't support that last 15, or actually if you extend it out for a few more years, closer to $20 million in accrued interest over the life of the agreement. But given the current forecast on cash flows and profitability between now and then, Ms. Jasmine is correct in saying that there's no impact on what OSEG is expected to get as far as the return goes. But as far as it's the proper accounting for that amount, I think that we've come to an agreement as to how that should be done, and it will have an impact on the overall waterfall forecast, but not necessarily on what OSEG would recover.
That's helpful. So if under the current circumstances where there's a recommendation to extend the agreement for another 10 years, would that have any effect on the way that it was treated in the waterfall?
Sorry, do you mean if an additional 10 years is added to the term of the current agreement? If the $6.5 million was left as it was, it would be $520,000 a year in interest. It would continue.
Okay.
So you could add on another.
And if I can clarify, because you can't speak to the extension agreement specifically, but it does not impact the overall results in terms of what OSEG would be recovering. That what was presented as part of the 10-year extension would be the same.
Yes, I saw the 10-year extension, but if it had remained in there as it was, the 10-year extension would have added value.
Same. They're recovering the same amount even after 10 years. And I just want to correct the fact that it was overstated or an error. It was an interpretation of an agreement. They were following the agreement.
Okay, I'm just reading the audit report, which says that it was overstated. I'm not sure if anyone wants to clarify, but I'm happy to take different interpretations on it. The city does not use the original or updated pro forma financial forecasts for their financial results and review and to compare to actual performance against the original or updated expectations. And I'm just, what effect would that have if we're not using the original expectations of what the city would have achieved in the financial forecasts versus the updated performance? What effect would that have for the city? That's a question to the auditor.
Mr. Chair, we mentioned in the presentation that what currently happens is it's a year over year. So you're comparing to the most current year's forecast and results. And what that doesn't show is the picture of from the original expectations or the significantly revised. So we recognize in our report that there was a significant change on the assumptions based on the amount of equity that was required to be added by OSEG. It's like you're not benchmarking, so you don't have a sense of what you expected originally and how the outcome and the results are, which we use the term value for money. So if I'm only comparing against my most recent year, where I'm updating my forecast every year as things change, I don't have that view going back to a stake at a point in time where there were agreements made based on certain risks and returns and expectations. The city doesn't have a view to what the, how the agreement has performed based on the original expectations, or as we say, the updated major assumptions. And it doesn't give a sense of overall performance to those expectations or value for money from that original forecast and period of time. These are forecasts, and the only certain thing about forecasts is they're uncertain. And I think that graph shows very clearly how significant the changes have already been.
Absolutely, and seeing that graph in the report, it is quite stark in terms of the changes that have occurred there and the original assumptions or estimates for where we were going to be. With regard to Appendix B, or the second appendix, can you just give me more, can you provide more detail to the committee about what that is, those 18 entities, and why we should, why it's important to us?
This is also disclosed in the financial statements. So for every entity that is subject to financial statement audit, they're required to disclose related party transactions and balances to and from those parties. And as I stated, the definition of those are they're entities that are not could mutually benefit from those business transactions. And or cannot act independently. So some of those entities, as you heard, are intercompany. So within the entity structure that we showed you, that all those results are consolidated. And some of those parties are outside of the partnership entity, and they are related companies where there would be common ownership or perhaps a stake that one of the partner companies has in those organizations. So the transactions are deemed to be non-arm's length. So there is typically additional, I'll call it audit scrutiny on those types of transactions to ensure that they're being at fair market value, and for multiple reasons, some of those being tax purposes, some of those being ensuring that the validity of those transactions are audited.
And for a city like Ottawa, why is it important that we understand those transactions, and what should happen in the future?
Well, Mr. Chair, through to the councillor, our recommendation in the audit is very clear, and management's agreed with that the city, as per the agreements, has the ability to ask for detailed support for those transactions. And they have been doing monitoring on a reasonability review basis every year, as Ms. Jasmine has mentioned. We're suggesting that they enhance the level of detail of those procedures and the frequency of those, just to ensure that the city has assurance and is comfortable with the nature and the adherence of those transactions within the agreements.
Some of those entities, my understanding is they may earn income for OSEG, but it's not part of the waterfall. Is that correct?
Well, the entities that are not within the partnership entity structure, if there were presumably business services being provided, a reasonable person would assume that those are being those services are being carried out for profit.
Okay, I'm going to move on. It was found that in 2014, 17 million was added to OSEG's minimum equity account, despite that minimum equity requirement of $30 million already being fulfilled. And then subsequently in 2015, that 17 million was transferred from OSEG's minimum equity account to their additional equity account. Can you just describe more? Does that have an effect on us in terms of the waterfall? What are the implications of that?
Okay, Mr. Chair, through to you, I will ask Mr. Cito to respond to that question.
Hi, Sonia, thank you. The net effect on on the waterfall is not material. They both, whether it's minimum equity / stadium completion funds or additional equity, they both accrue interest at 8%. That 17 million is part of that $23.5 million settlement, and the difference of that 6.5 being what was discussed earlier. But the net effect on the waterfall is zero, whether or not it was considered minimum equity or additional equity.
But why is it occurring? Why is it that that transfer is happening in the first place?
Councilor Menard, I apologize. Sorry, Mr. Cito, I apologize. I did not give you the 1 minute warning. Your time has expired. If Mr. Cito could answer this question, and then we'll go on to Councilor Kavanaugh.
I'll get back on the list. Thanks, Chair.
Mr. Cito, could go ahead.
Sure. As Isabel outlined before, there was an interpretation of how the settlement should have been treated. And our understanding is that's just how they decided to record it in the waterfall versus what we assumed would have been the appropriate approach. Does that answer the question?
Yes, sorry, I was on mute because the chair mentioned my time is up. Thank you, Mr. Cito, for that. I'll have more questions for you.
Thank you. Okay. Councillor Kavanaugh, please.
Thank you very much, Mr. Chair, and thank you to the auditors for this report. No doubt it was very complicated, and I'll never think about waterfalls the same way again. Anyway, in terms of what's happened, as you were saying to earlier questions about when this was completed, this report was done before we were aware that we were going to have a request from OSEG to change the deal. You're saying that it finished up on March 31st, correct? What you were looking at?
Mr. Chair, through the councillor, the financial information that we looked at was based on the year end of March 31st, 2012. We completed our work later in August, but we were unaware of the new developments that were taking place. That was not brought to our attention.
Okay, so this is just coincidental that we will be dealing with it at council tomorrow, correct? In terms of, you were not aware?
We were not aware, no.
Okay. I will just say the same as what my colleagues have said about the issue of having so little time to deal with this major report of 75 pages on just the report, never mind the extra addendums, but to absorb that in such a short period of time, how can we do better going forward? This is, I find this not great governance to have that. And my other question is, in terms of governance, oversights are being recommended. How can governance fit into that? Because I think the ultimate oversight is council. And so it's reporting back and giving us updates and telling us how things are going. So how can we bring those things together?
Before Councillor Kavanaugh, if I might at this time just remind you of the email that I sent yesterday with respect to deferring the Lansdowne Partnership FEDCO report to December 9th, and this report would usually rise on December 9th. So in terms of the short time span, hopefully that repairs that and provides a little bit more time for members to provide feedback with respect to both these reports as you are establishing a relationship between them. I understand. Ms. Brennan, on the second element of Councillor Kavanaugh's question.
Okay.
Mr. Chair, I don't know if Mr. Hughes, if you'd like to respond to the question on the timing of the report.
Our report was always to be on the on this agenda. If the question is about the timing of the receipt of the report, I addressed that earlier, Mr. Chair, through you to the councillor when we talked about we were still discussing aspects of that report with the CMO's office late yesterday. But this report was to be on this agenda from the very beginning.
Thank you. I understand it's just the time for us to ask questions, like in terms of this committee meeting. But what I'd like to know is in terms of oversight, since those are recommendations, how does that work with council? Is it totally internal of the oversight, or are we going to have reporting to council to so that we're aware of where things are? And also in terms of P3s in general, is this some recommendations that we're looking at going forward for all P3s?
Councillor Kavanaugh, if I can intervene, the oversight is by council. Reports from the audit committee go to council. The Lansdowne Partnership provides an annual report directly to council, maybe through FEDCO, I don't remember, or maybe directly to council. And I will remind you that this deals with this specific audit that was accomplished on the Waterfall by the Auditor General.
Thank you. Do we have any idea of the costs of oversights in terms of what it does to correct them, and how we pay for those?
Mr. Chair, I'll defer that question to management. We did not analyze the costs that would be involved for the oversight, and I'm not aware that costs were quantified at the inception of managing the agreement. But I would defer that question to management if they've examined the costs at this point. Not clear on that.
Mr. Chair, I would concur with Ms. Brennan.
Okay, you have
no cost. You have no cost with respect to contract administration of this contract, Mr. City Manager?
No.
Okay, so it's done internally with the existing resources?
That's correct.
Okay. Okay. Thank you. I'll leave it there.
Thank you very much. Seeing no other questions, we are back to Councillor Menard, who asked to go back on for another 5 minutes.
Thanks very much. Thanks very much, Chair. Yeah, I have several other questions. The city had developed a risk register for this project, but it doesn't include long-term risks on objectives or on the waterfall. There's a report in front of us right now that is recommending extremely long-term changes to this deal. I'm just wondering, what effect does it have not having any risk analysis of what long-term risks for the project could be? What effect does that have on the city?
Mr. Chair, the findings in our report also are consistent with, I mean, that really was an observation we made with the audit of the Lansdowne contract management, which was made quite some time ago. Between the conduct of our audit and the follow-up, management had created an operational risk register. But as we note in this report, it does not include the strategic risks, financial risks, and those related to the waterfall distribution. So again, our recommendation is that those and what we consider to be higher risks be incorporated into the register, or a new one created, where the city is actively identifying, managing, and mitigating those risks. In consideration for these new components that are being contemplated and decisions being made. I have no view. Again, we learned about this when the FEDCO material came out. I have no view as to what kind of risk analysis has been done to support the report that is that has gone before FEDCO. Management would have to comment on that. I don't have that information.
Sure. Would management like to comment?
So I can speak to the analysis that was done. Risk was built into every scenario, and which is why we had a pessimistic and optimistic, and we were showing a range. We didn't want to show one generic forecast of what the impacts were. We wanted to show the actual range from pessimistic to optimistic, and within those, there were risks associated with the retail, the cost of operating the stadium, the revenues coming back from the stadium events and others. So all that was built in, and it was built into the discount rates that were used to project the net present values.
Yeah, and I've seen that, obviously. The default scenario that has been projected by the city could very well change. Anyway, we won't get into that. That's a separate report, but what we've assumed, that there's no sports teams, that the retail is functioning as it is, that we take on that loan, all of that may not be accurate. It's a forecast, but I appreciate that that comment. When I reviewed the financial statements, and maybe I'll just ask to the auditors, in your review of this deal, does it appear to you that there is any hope that the city will recover its investments in this P3 under the waterfall as was originally expected?
So, Chair, if I could clarify the question, you're asking under the current arrangement or the new proposed?
It would be nice to know both. Under the water,
I would caution that it is under the current arrangement. That is the report before us.
Mr. Chair, again, we can't speak to the current information that was presented to the Finance and Economic Development Committee. We did not have that information. We have, we would have to conduct an audit on that information to provide you with any kind of opinion.
Okay.
All we can tell you is that based on the current forecasts, the city is not expected to receive a return, and that's shown visually in the graph that we provided. There originally was expectations of returns. Two subsequent significant changes to estimates before COVID show that there's no expectation of a return for the city.
And it's extremely important to know that this is all before COVID. There was huge issues before COVID occurred. On the comment about we'd need to audit the current proposal in front of us, we probably should have that before we jump into a new decision. But when I was reviewing the financial statements, it appeared as though those statements were actually putting the city into a negative equity situation in the deal. When I looked at the last two financial statements that have come out, it appeared that there was a continuing negative equity situation for the city. Did you see that as well in those financial statements?
Are you referring to if you're referring to anything other than the March 31st, 2019 statements, I could not comment on that. I don't know, perhaps management can.
Isabel?
Yeah,
can
so
answer that.
that represents the equity that OSEG is putting in. They're covering all net negative amounts. There's no cash coming from the city. That is being covered by OSEG, and at the end of the agreement, they do not recoup those amounts.
The reason I raise it, though, is if the city had any hope of achieving any financial return from the waterfall, would that affect us in any way? If we all of a sudden our deemed equity was going to be a greater return than we're predicting right now, we have a turnaround of what's been occurring for the last several years, that it seems unlikely that we'd have any return given the way it's being stated. And that's more what I'm getting at is there any hope of a turnaround, and does that affect us at all, those negative equities in that financial statement?
So the negative equities are reflected in the waterfall as contributions from OSEG, and those get paid back first. So the financial statements are one thing, the waterfall distribution is different. And so the more they cover that deficit, the more that they need to recoup, and they're not recouping. Based on current forecasts, the city is not recovering anything, and and OSEG is not recovering all of its equity.
Yeah, I've seen that the forecast is for them to recover about 468 million at the end in the city for zero.
And Councillor Menard, I would just caution you to relate your questions to the report that's before us, the waterfall audit, and I would ask you to do that, please.
Sure. Did Ernst & Young in their review identify the overstated waterfall amounts in the equity for OSEG, that $6.5 million discrepancy based on the loan? Did they identify that as a concern?
They identified it, they reviewed it. The 17 million, which is the other part of the 23.5, they reconciled it back to all the transactions. So the 17 million that was in additional stadium completion funds were recognized in the equity. They reviewed all those amounts, tied it back to the GL. And so, and when we reviewed those amounts and compared it to the agreement, it was consistent with how that should have been distributed.
So they said it was consistent, but our Auditor General's team is saying it's not consistent with how it was done.
So,
change.
Sorry, Chair, EY was ensuring that what was being reflected in the waterfall was consistent with the agreement. And it was consistent with the agreement. That was their mandate, to look and make sure that everything understood that there's financial accounting, but they also reviewed it in terms of the agreement and the contract and how things were recorded. And it was consistent with how the contract was written.
If I might add something there. Excuse me, Councillor.
Councillor Menard, at the beginning of your last questions, you had 2 minutes left. I will make sure I give you the 1 minute warning.
Yeah, sure. I'll get back on the list. That's fine.
Sure. Go ahead.
Yeah, my apologies, Councillor. I just wanted to add, in terms of the specified procedures review that E&Y did, they did not identify the $6.5 million as an overstatement. As Ms. Jasmine has said, they have done a thorough interpretation of the partnership agreement to understand the application throughout the waterfall. So it was not an overstatement in terms of the work that they had done.
Okay, and the reason why it's important for me anyway, to bring this up is that the misallocations that we've been talking about could have a trickle down effect and could impact future distributions and interest calculations. So if Ernst & Young is doing an analysis on this, did they identify that it could have a future effect on our interest calculations, or was that not stated in their review?
It was their opinion. There was no overstatement, so therefore there'd be no impact. Okay. Thank you, Ms. Stephenson. I appreciate that. Chair, do you want me to get back on the list? I mean, it's odd. There's no one else speaking, so
You still have time in this 5 minute slot.
Okay, so a lot of what is said in the report is concerning. There are questions about erroneously accrued interest. There are issues of insufficient detail provided. There are issues of staff, in terms of monitoring that is expected, the long-term risks. It seems the audit is a big concern given what we have in front of us. And so if we're planning to make significant changes, as we're considering, the oversight function is extremely important to get that right before jumping into it. And so considering the deficiencies this audit's uncovered, my question is around what deficiencies are we going to see in a new deal? Are we applying any lessons learned analysis to the Waterfall agreement and the proper management of it as we move to have an extended and further integrated partnership with OSEG? I understand we don't have to talk about that deal specifically. You want to separate those things, but based on this report, it seems very clear to me more needs to be done in advance of any type of change to this. And if we are changing the Waterfall, we likely want to change the oversight mechanisms. So I guess my question to staff is this level of oversight and management, is this the type of, just to the auditor and then staff, is this the type of management you'd expect for a project that the city's invested $210 million in with very large promises to the city when this was all being calculated initially? So is this the type of oversight that you would expect for this type of a deal to the auditor?
Point of order, Mr. Chair.
I'll go to Auditor General Hughes in a moment. Point of order, Councillor El-Shantiri.
Is this part of the, I didn't see that in the report, and forgive me, we just got the report, but is those line of question is part of the audit? I thought the question is going to be what is the audit is what's all about. And I understand the councillor, you know, where he likes to go sometimes. I get that. But in those line of question, is that really what's been audited here, or we're really bouncing back and forth or in and out?
Thank you, Councillor El-Shantiri. I think the questions by Councillor Menard are relevant. They do deal with oversight and with contract administration, and that is the Waterfall. He kind of drifted into the FEDCO report there for a minute, but he came back. So I appreciate that we are not talking about any amendments to the partnership, but the administration of this contract. So in my opinion, the question is in order. Thank you, Councillor El-Shantiri. Auditor General Hughes, please.
Thank you, Mr. Chair. To be specific, our work was we looked at the oversight done on the accounting for the Waterfall with the existing agreement. We've made some recommendations about additional work that could be included, that should be included in future oversight, and they would likely be as applicable to the to any changes to the agreement. The oversight is still oversight, and our recommendations relate specifically to the agreement that was in place, certainly some or all of them would still be applicable going forward.
Okay, thank you for that. And Chair, just my last question before I hand it back to you is would the Auditor General's office be willing to do a review audit of the current scenario that has been put in front of council in the future? You know, before we make a decision on that, would they be willing to help us with that, given all the recommendations we've seen in this audit?
Mr. Chair, through you to the councillor, in the past, we've always considered requests from council, and we would continue to do so in the future.
Okay, thank you. That's very helpful. Back to you, Chair.
Thank you, Councillor Menard, and all members who participated in this an excellent line of questioning. And thank you to Ms. Brennan, a very complex audit, the Office of the Auditor General, and to city staff. I will turn it back to the Office of the Auditor General with respect to their presentation. I believe we are on the second element of the annual report, bylaw and regulatory services. And for members' information, Roger Chapman and the Director of Bylaw and Anthony DeMonte, GM of Emergency and Protective Services, will be the staff who will be able to answer questions on this element. Over to you, Mr. Hughes.
Merci, Monsieur le Président. Notre prochaine vérification, c'est la vérification sur les services des règlements municipaux, application des règlements municipaux. Il s'applique plus de 40 règlements municipaux touchant un vaste éventail d'enjeux collectifs. La direction de l'application des règlements municipaux ne s'occupe pas du stationnement. La direction a répondu à plus de 49 500 000 demandes chaque année. Ed.
There we are. Thank you, Chair. Good afternoon. The city's bylaws are enforced by Bylaw and Regulatory Services, also known as BLRS, or just bylaw, just for ease of speaking here. So bylaw enforces and administers over 40 municipal bylaws to ensure compliance and regulations for a wide variety of community issues. These include parking, animals, property standards, noise, graffiti, things like that. Within BLRS, there is the bylaw enforcement branch. Now, this branch is responsible for enforcing all the city's bylaws except for parking and licensing, and they're handled by a separate group. Next slide, please. Now, just bylaw enforcement, this is a high volume operation, I would describe it. And so to demonstrate, in 2018, bylaw enforcement branch responded to more than 49,000 requests for service. And this is roughly 60% of all the requests for service that came into BLRS. So these were roughly split between property standards, animal care, noise, and then just sort of other areas making up the other quarter. So as I mentioned, bylaw does not handle parking related service requests, as they're part of the parking and licensing enforcement branch. And lastly, I should point out that these figures also do include requests that come through councilors' offices that warrant the creation of a service request. So give you an idea then of the volume that we're dealing with here. Next slide, please. The overall audit objective was to assess whether the city had effective practices and processes in place related to bylaw enforcement activities. This overall audit objective included the following 4 objectives. One was we wanted to see if there was consistent and efficient delivery of the bylaw enforcement activities. We wanted to see if training was delivered appropriately to the enforcement officers. And we wanted to see that there are risks related to health and safety were dealt with. And we also looked at the efficiency of the processes related to time reporting. So the scope included all the management and operational areas of the bylaw enforcement branch. This included, where it also included work that's done by other groups that supported the bylaw enforcement branch, such as training and dispatch, which are handled by another group. Our scope excluded parking enforcement, as that's really a very separate activity and it's handled by a separate group within BLRS. The scope of our work was July 2018 to July 2019, and we completed our work in January of this year. Next slide, please. To enforce the city's 40 or so bylaws, bylaw enforcement officers need knowledge and expertise in many areas. As I mentioned, as part of animal care, transport, noise limits, property maintenance requirements, property standards, things like that. So bylaw has developed standard operating procedures, or SOPs, to provide enforcement and other instructions to the officers. And it's also developed in those service standards that relate to target times. So these target times are both to respond initially to their service request and to resolve it. So we looked at bylaws SOPs, and we found that they do not always include the applicable service standards. So roughly 12 out of the 91 SOPs didn't contain the applicable service standards for the initial response. And we also found that none of them contained the service standards for resolving the request. So the absence of these service standards in the SOPs increases the risk that enforcement activities are not performed as per the expected service level. So then we looked at monitoring performance against procedures and service standards. So the managers in bylaw monitor the performance performance activities against the service standards by preparing and reviewing monthly performance reports. One such report provides the number of service requests assigned to each officer for the month and indicates how many were closed and how many were in progress at the end of the month. The report also provides the average number of the days that the officer took to respond and close service requests. What we found, though, is there was no set process in place or clearer expectations of how supervisors are supposed to use these to manage officers' performance. In addition, these performance reports do not provide sufficient information to assess whether the property standards officers are enforcing in accordance with the operational procedures and the service standards. As a result, supervisors really don't use these reports to monitor the performance of enforcement activities. Monitoring and assessing compliance is important to ensure that officers are enforcing the bylaws the same way and so that a similar request is handled consistently across the city. To test the enforcement activities in response to service requests, we reviewed a sample of 30 service requests. For each one, we assessed whether the service request was responded to consistently and in accordance with the procedures and the service standards. We found that the action taken complied with service standards in 27 of 30 reviewed cases, so that 90%, a 90% ratio. We also found that the initial response and the resolution targets for meeting the service standards in 25 of 30 cases, so that was 83%. And this 83% exceeds the 80% target that's set by BLRS management. We then also reviewed a random selection of 30 sample requests and service requests and 24 enforcement activities at 2 high activity locations. Our reviews of enforcement activities at the 2 select locations found 7 times where progressive enforcement options were not applied when they could have been, and 6 times where the initial response and/or resolution took longer than the service standard. Progressive enforcement is where a bylaw officer applies a stiffer penalty than the minimum, usually when the recipient has not taken action on the previous bylaw visits. In these cases, a notice of violation or an order to comply or even a fine could have been issued. Although the review of enforcement activities showed general overall compliance with the SOPs and that the service standards for responding to and closing service requests are generally being met, reinforcement of requirements is required to improve consistency and the timeliness of enforcement activities. More consistent and timely enforcement will improve BLRS's service delivery and reduce the number of repeat complaints from citizens who feel their requests are not being resolved on a timely manner. We looked at 2 technology projects that were initiated by BLRS to improve the effectiveness and efficiency of operations, including dispatch management. These were the Dispatch Modernization Project and the Client Relationship Management System Project. One aspect of these projects included putting GPS devices into the cars that are used by the bylaw officers. The business case for GPS said it was to modernize dispatch activities, such as assigning enforcement cases based on the officer's current location. And so it's automating the intake to close out processes for service requests and performance data to optimize enforcement operations. We found that they had successfully completed phase 1 of the project, and they implemented GPS technology in all 84 of the bylaw vehicles. However, we found that the GPS data was only being used in a limited way. It was being used to locate vehicles for health and safety purposes, for asset management and similar reasons, and to investigate complaints against the officers. Phase 2 of the project, which aimed to use GPS data to improve dispatch activities by assigning enforcement cases to the officer's location, was put on hold by BLRS management. Without implementation of phase 2, BLRS is not going to achieve the intended benefits of its investment in the GPS technology. Dispatching bylaw officers based on their current location offers potential efficiency because its officers won't have to drive around town in order to get to their next call. You can assign it to the nearest one. As for the Client Relationship Management System project, we found that BLRS had implemented has implemented it in the parking enforcement area, but is yet to define the requirements to implement it in the enforcement section. As a result, one of the intended benefits, such as fuel cost savings, service optimization, and improved client satisfaction, have not been achieved. So we made 9 recommendations in this audit, and management has agreed with all of them. I would take any questions you may have about the audit.
Thank you, Mr. Marner. I appreciate it very much. Councillor El Shantiri has his hand up, and I would ask the Vice Chair to take over for a couple of minutes while I get away.
Thank you.
Thank you.
Thank you, Mr. Chair, and thank you, Madam Vice Chair. Mr. Deputy Auditor General, can you put back the slide where it showed the percentage you know, the diameter. I think there was second or third because they're not numbered, or I cannot see the number actually.
Okay, I'd ask Carol if you could. There we are.
Okay.
There.
So in your speaking about this, you mentioned some of the calls received directly from the councillor's office. Is that what you said? I don't want to put word.
No, yes, that's certainly the case, and the calls come in. They come. Calls from the councillor's office, they're included in these numbers where they created a service request. I would add, I think we mentioned it in the report, that the calls from the councillor's office take up a fair bit of time, especially on part of the supervisors, because generally the supervisors in bylaw enforcement handle the and the management team handle the calls coming in from the councillors. So it takes up around 20 to 25% of their time dealing with those.
And I understand this, but I'm not sure if your audit went deep enough to know basically bylaw services shuts down after a certain time of the day or the night, and sometimes folks wait so long on the phone, and obviously, as you know, if they wait 10 minutes, they think they've been waiting for an hour, and the next thing they do, they call the councillor's office. So I'm not defending the councillor's office, but I'm just saying, I don't think we have a choice, because the call goes to 311, and 311 have to take the call and send it to bylaws, and sometimes it takes sometimes on a priority. But resident, as you know, they're so impatient, especially if it's dog barking or noise next door and you cannot sleep, or music loud or something. So obviously they engage the councillors. I mean, maybe we need to look, and I'm not sure if this audit look at the root cause why councillors has to call the supervisor and try to get some action going. Have you gone deep enough in this?
Chair, I would have to say we didn't get into that level of detail. I can appreciate that that when especially say, for example, a noise complaint, I believe the service standard is to is it 3 days or something like that, because it doesn't affect public safety, and sometimes if they reply, bylaw gets out there within their service standards, the incident is long since over. So I can appreciate that it is a challenge, and that it could create other calls to the counselor there. I don't know. I mean, I don't have any great. We didn't have any issues or identify anything really that any suggestions in that area. I don't know if on the bylaw side, if they had any thoughts or could confirm that.
I'm not sure if I see Roger Chapman on the call. I think I'm not sure if he wants to jump in. Oh, here he is, Chief.
Yes, Mr. Chair. All I can say is that, I mean, the service requests that are called in through the counselor's office or emails that are sent in, the service requests are often created in the counselor's name, and I think that's what the auditor saw during their audit. It was, and a lot of times it's because the complainant's name hasn't been provided in the email. So, and there's a request for some action.
And that's a great explanation, but I'm not trying to defend the council. Sure, if they can do that on their own, but I find it when a resident call, and I know it's not a life-threatening if the music's so loud, but I mean, with those, these days, COVID, and people somehow they're not very tolerable. So when they call bylaw and they don't see any action, the next thing they are calling us as a counselor. Or they're running to social media. So I'm not sure how we handle that part of. I mean, are we expanding so much the bylaw services and we're not expanding the staffing in that area? Are we creating that gap between what's expectation? I understand, Deputy. I mean, I dealt with bylaw quite a bit, especially this summer in my community, and surely to God, if I can not reach to the supervisor, explain to them the situation, explain to them the waterfront, the beach, I mean, I don't think I could have done it just calling 311 or put a request for service. We had to engage the management to understand the situation. And I'm grateful for, so when you talk about, I just want to understand, like you have some recommendation and management in agreement. So, I mean, are we going to be developing some kind of strategy? Are we going to review the full service of the bylaw to make it more efficient? That's what I'm looking for. Like I'm hoping the report will identify some gap. Is on us to go and revisit and try to work it out.
Through you, Mr. Chair. Sorry, go ahead.
No, I would just wanted to say there, as far as the efficiency of the service, I mean, we certainly do. You know, we noted that there's these two big projects that that are underway, and that implementation of those will hopefully improve the efficiency of operations, and that what we recommended was that a strategy we put in place to look at and come up with the efficiency of operations and to improve things based on, you know, in part can be based on the results of these projects. So that's, you know, we're hoping that's part of the solution. And again, we're really pushing that back, you know, counting on management to come up with a strategy in that regard.
And Mr. Chair, I would like to hear from management. I mean, if you see the quarterly report or the yearly report, how many calls for service the bylaw do, and I understand, and I might agree with the auditor or I might disagree. It's not every time to go out and give ticket to people or citation about something. Sometimes is the education piece. Sometimes is communicating with the resident, how to do better, how to manage it better, so they don't. And sometimes you have to remember the distance in the city. A lot of times people call bylaw of noise or dog or whatever control, and by the time they leave where they are, Constellation, to get to Fitzroy, you're talking about an hour drive in a good day. And a lot of time those calls, I think, either solve itself or people just give up. So I'm looking for management. Are they going to review a strategy to streamline that operation? So it's not every, you know, we have COVID, we want people to wear masks, so we ask bylaw to go and deal with that. We have businesses don't follow, we ask bylaw to do this. We have, so it seems we keep add on, and I'm not sure if really without a strategy and a clear strategy to us, council, what do you expect from the bylaws in the areas like this? That's what I'm hoping management will tell me. You know, there is a plan in place.
Chair, if I may, and I'll let the chief and the team have been working, and the auditor's recommendations, as Mr. Miner just mentioned, there's two major technology projects that are certainly, once we've completed them, will help the efficiency. Councillor, we're looking at a very similar models that we have in our other emergency and high volume services of zones and response, and using the technology and GPS to respond. To your question directly about, you know, staffing, et cetera, it's something that we, when we report in our annual report, we measure our response time standard and our staffing capacity. So that's always a delicate balance. I think you talked about right now the COVID year, which I think is very much an anomaly, but this analysis was done before COVID, and what we saw is with the resourcing we had, we were able to meet all our response time standards, and that'll continue to be our measure. But directly to your question, yes, we are evaluating bylaw as a whole, and we're looking at, as these technologies are being implemented, are there other tools that would be advantageous, and how we can continue to perform even better. But I think once the GPS and our other projects are completed, you'll see zones established and response time efficiencies much better. And I just, one quick comment, Chair, if I may, there seems to be an interpretation of councillors' requests are related to people that are on hold. There's no direct relationship. We get both. We have people that are on hold and don't have quick enough service to go to their counselors. In other situations, because the counselors are close to the community, they generate the service requests. So it's twofold there, but they're all in our total numbers. And I would just reiterate again that we're meeting our response time standards currently.
Mr. Chair, to the management.
I will just remind you, Councillor Elchandra, or tell you, Councillor Elchandra, 26 seconds left, please.
I just want to make sure, Mr. DeMonte, when he established that strategy, keep in mind, as much as I love zone or establishing zones, I can see that we always get somehow the end of the stick in a rural area because we don't generate enough calls. And then if you create those zones, so that means all the bylaws going to be stuck downtown or in the urban core. So I will be very mindful about the strategy, and I like to get involved in that strategy when it comes out how you're going to talk about deployment and resources.
Understood, Chair.
Thank you, Mr. Chair. Thank you, Mr. Mann.
Thank you, Councillor. Vice Chair Meehan, please.
Thank you, Chair. Just one question. If we spent money to equip our bylaw vehicles with GPS, why have we not implemented the use? Like, why are we not having our bylaw officers expedite calls by using GPS? That's specifically the reason we put them in. So, Mr. Chapman?
Yes, Mr. Chair, the dispatch modernization project is a three-phase project. So the GPS were installed in the vehicles in early 2018. We now have, almost a 2-year data set that we're doing the analysis on to determine how best and the most efficient way to dispatch our officers. So our intention was to move into phase 3 by January of 2021. Unfortunately, that's been delayed because of our involvement in COVID response. So we're moving into phase 2 right now, which is the complete analysis of all the data we have. But we are working towards a dispatch system that will dispatch the closest vehicle to the call, which should improve our response, fuel efficiency, and also our ability to respond and close calls quicker.
I don't understand why we have to implement any of that. I mean, most people have GPS in their cars. The drivers should actually know how to use a GPS. Why aren't they just using it without the other parts of it? I mean, why wait? Just you have them use it. It's going to get them to a call faster. You can, implement everything you want later. But I mean, this is a tool that everybody uses. Well, not except me, of course. But I mean, the drivers could just use it, Roger, and get to places faster. And then, work on the other parts of the implementation.
Yes, Mr. Chair, the phase 2 is really looking at that data set to see, we have to establish times of days where there's higher call volumes, areas where there's higher call volumes, and how we set up our dispatch system and where we place our officers. So that's strategically, we're working on that right now. That's the phase 2 of the project. Phase 3 is the implementation. There is an investment that needed to, a capital investment for the technology that was required to implement this, and we have that for 2021. So we hope to move towards this solution quickly, and during Q2 right now in 2021 is what we have slated as implementation.
Sorry for me being obtuse, but we've got the technology, and our drivers aren't using it.
Chair, if I may, and for the councillors, she's absolutely right. The technology is there. The drivers can use GPS. That's not the challenge. The challenge that Mr. Chapman is trying to explain in the broader project, the dispatch center to be able to have the protocols and to be able to use that GPS technology. In essence, when we receive a 311 call, to use that technology in the dispatch center to identify the closest vehicle to go to the next call and deploy the resources. That's the complexity side that, because of COVID, we've had to put off. So, and I get your question. It seems self-evident. Well, we've got the GPS. Let's use it. It's more on the complexity of the dispatch side. That's the next phase that the chief and his team have to do, and that's what's being worked on right now. And unfortunately, this was work that we were doing, had to be delayed. We had to put all hands on deck on our COVID response.
So it's the dispatch that's not using it. It's the driver is using it.
Correct. They've got the capacity, but the dispatch has to use that tool with the work that Roger's doing, the analysis, to be able to deploy appropriately.
Okay, I get that. Just one last thing. Why do the supervisors lack information to monitor performance? Like, what information are they lacking?
Is that to management or is that to the auditor?
No, that's to management. Why don't the supervisors have information so that they can figure out how a call is being responded to, the performance of someone who's answering that call? What's lacking?
Well, Mr. Chair, the monthly reports that are done certainly include things like time to close a call, the officers, and also the response time. So where we highlight, where there's some investigations that are exceeding where we set at 21 days, where they're exceeding that 21 days, that information is passed on to the supervisor so that they can have meetings with their staff, so coaching opportunities to determine why those cases are still open, to help us meet our response standards. So when we're reaching that 21-day mark, there's complex investigations, zoning matters, there's matters that are before the courts, there's cases where we're waiting for witness statements and charges haven't been issued, and those often take longer than 30 days. There's legislative requirements for orders to comply and notice of violations that exceed those 30 days. So we do have a list of investigations that will be open longer than the 30 days, but we always try and stay on top of those so that we can, make sure that's not a technical error, an officer error where they've failed to close the case. So that's what the supervisors are doing on a monthly basis.
Okay, just one last thing. I know that this audit was done before COVID, but one of the issues that we've been hearing from a lot of businesses and people who have had dealings with bylaw currently is, I guess, a discrepancy on the interpretation of some of the bylaws, especially when it comes to COVID. Do you feel that you're getting the right information? Is it being disseminated correctly from the province to you? And is that are you clearly do your officers have a clear picture of what they're actually enforcing?
Mr. Chair, just to clarify, the enforcement that we're doing for COVID is actually the provincial legislation. It's not the bylaws. And yes, there's been some challenges. It's the interpretation of some of the information as it's disseminated to us. We hear it through press conferences, and by the time what's said in press conferences actually gets translated into law, it's often 3, 4, 5, and 6 days later. So we're in a bit of a holding pattern until that information gets sent to us. And I can tell you that from a management perspective, we've invested many of hours this past summer in reviewing that information, working with our legal team to get interpretation, providing SOPs and information, and trying to get that disseminated to staff as quickly as possible. So that we can provide consistent enforcement across the city.
Yeah, I can see that that's a big problem, because the bylaws, like the provincial dictates that come down, people expect them to be enforced almost immediately. If you're still trying to figure out exactly what it means, that can cause some issues. What can we do to help you? Is there something that we can do to help you?
Mr. Chair, I think at this point, we've got the process down pat. I think we, as we get the information, we're meeting with legal as quickly as possible, and then with the SOPs that we've created to, as I said, to get out to staff as quickly as possible. We've become more efficient through this process for sure. And but yeah, things were changing almost on a weekly basis there for months at a time. So it did have some challenges.
Okay, but we're up for it. Thank you so much. That's it for me. Thanks.
Mr. Deputy Auditor Minor, I think at one point you wanted to provide additional comment to one of the questions by Vice Chair Meehan. Is that correct? Did I read you correctly, or are you okay?
No, I'm okay. Thank you, Chair.
You're good? All right. Thank you. Conseillère Kavanagh, s'il vous plaît.
Oops, sorry about that. I bumped the buttons. Thank you very much. And thank you for this audit. This is really important to us as counselors because we use bylaw constantly. I have one staff person who is the direct line with bylaw, and any efficiencies that can be made are important. I think they're the workhorse in the city in terms of just keeping things together. And this report, being as it hasn't, it hasn't taken into account COVID, and my colleague already asked about the effects of that. I can tell you that COVID has been a huge effect on bylaw, and given the recommendations and going forward, are we properly resourced to deal with everything? We have been coping for the 9 months, but obviously it's been a burden. But I just want to know how we're coping on this, and will these efficiencies help? Because I think we're going to be in this situation for a while, and I just want to know how it's going. Thank you.
Thank you, Chair, and thank you for the question, Councillor. It's certainly been challenging for us in 2020. I often joke that 30 years in this business, and this has been the most challenging 8 months of my career. But I would say at this point, we're resourced well enough to be able to respond to these calls. We did do some redeployment, early on with parking operations. I mean, we saw that parking complaints had dropped. In fact, we're down about 10,000 service requests in parking this year. But with the 13,000 COVID-related calls, we were able to redeploy, about 60% of our parking staff into COVID response. So that certainly helped to deal with the call volume. And I can also add that of recent, just the last couple of weeks, we've seen a decline in service requests, COVID related. And I think that's directly related to, the numbers being better here in Ottawa. So I think you've seen that, the enforcement activity has certainly dropped, although we have a dedicated team still, and we're being proactive in our focusing enforcement in areas where we've seen problems in the past, just to ensure that there's, that the good habits continue, and so that's where we're focusing our efforts right now.
Thank you. And you're going to have more requests in the future with the changes that we expect for bylaw, because we're constantly dealing with updates in terms of things like the rental properties, etc. And there'll be more. Is there, I don't know if this, and I apologize, this may not be directly related to the audit, but in terms of data collection, can that be implemented into bylaw? For example, of who we're dealing with. And we are looking at possible gender equity and concerns about systemic racism. Are we collecting data on who we're dealing with as people who are getting tickets, etc.?
Mr. Chair, thank you for the question. At this point, I mean, we treat everybody equally when we're doing our investigations, and we don't collect that data. That's not something that we've ever done any analysis on in the past.
Okay, perhaps we'll make some suggestions on that. All right, thank you very much, Mr. Chapman. Thank you.
Thank you, Councillor. And seeing no other questions on the list, thank you all very much. The next element of the annual report is facilities management audit. And for members' information, Dan Chenier and Danae Gontier will be the staff that will be available. Over to the Office of the Auditor General for the presentation, please.
Thank you, Mr. Chair. The slides are coming up, and just before we start, I feel that I have to explain why this audit was delivered a little differently than the audits. There's a common process that we follow in conducting our audits. As the audit is progressing, we keep the staff in the area where we're working abreast of any findings as we come across them. And that gives them an early opportunity to address any identified deficiencies. And as you know, sometimes in our audit reports, we're able to say, and this was corrected by management while we were there when we identify finding. At the conclusion of the audit, we give a debriefing to management, and then there's a process for fact checking, and then management provides us their comments. And this was done with the facilities audit. Our work was concluded mid-August, and as I said, there was this formal debrief with management. No significant discrepancies or concerns were identified. In mid-October, we received a request for a week's extension, which we provided. That isn't unusual. Once again, when we asked if there's any concerns, nothing significant was provided. We were then told, I was contacted, and we were told that there were significant concerns with the audit. Well, of course, that's important, and I appreciated reaching out to me, and it was asked if staff could meet with me, and I agreed. And on October 28th, myself, the Auditor General, the Deputy Auditor General in charge of that audit, Sonia Brennan, and the external auditor who had led the team that was performing that work, we met on October 28th. Now, in that meeting, and it was a pretty high-powered meeting, as you can imagine, management could not identify any factual errors, but they indicated that they didn't like the narrative in the audit, and no specific issues other than that were identified. I pressed them, indicated to them that this audit was going to be on the November 24th Audit Committee meeting, and that what was important was that they get back to us with their fact review and their management comments, because at that point in time, it was the end of October, and the clock was running. The next day, I met with the general manager on the subject of the audit. Within a day or two, the deputy auditor general and the external auditor who had led the team also met with senior staff. And then in early November, over a course of a couple of days, we received emails with attachments that we were told were that we should be looking at. Now, there was this documentation there was no indication that it was specifically geared to our particular findings or recommendations. Now, this is a lot of material, and I had the team, in spite of the fact that we were that we were late in this particular project at that time because we had received nothing from them, I had staff review this material. 90% of it was not irrelevant at all, and the 10% of it that was relevant was material that we already received. I continued to say, and as we had asked throughout, are there any issues? Was there some obscure COVID problem that I wasn't aware of? Had a large number of staff been ill? Was there a COVID response that was being worked on? I was provided with nothing, and when asking about the fact review and the comments, I was told that it was going to be coming. On Thursday, November 19th, so this is 2 working days before Audit Committee, management responded in the middle of the day with their fact review. Now, that's too late. You already know, you've heard that our staff were still working, dealing with management on the Lansdowne audit, and I indicated to the administration at that time that we had bent over backwards, in my view, to give them opportunity to respond to this audit, and that, in my view, we had done everything possible. They had many opportunities, and I was going to still bring this audit forward on Tuesday. And then the next day, Saturday, in the afternoon, we received management's comments. So you see the audit before you today, and there are no management comments, but I will present the audit, and we'll address those afterwards. I can say that we did receive the management comments on Saturday afternoon. We made 34 recommendations, and they agreed with all of them, except for one of them. So Merci, Monsieur le Président. Je commence avec la vérification de la gestion des installations. So if we go to, this is our first slide, the overall objective of this audit was to assess the city's management practices relating to facilities management. So what I think is important here, when you look at the objectives, where did we get our objectives? Well, we look around, whenever we look for criteria for our audits, we look around for best practices, and we look around the world. And we pulled these objectives and this criteria from the International Facility Management Association, the Building Owners and Managers Association, Municipal Finance Officers Association, and others. And I can tell you that that these are best practices. They lead to best practices, and they're consistent with any approach to facilities management. Certainly consistent with the comprehensive asset management policy and the Ontario Regulation 588-17 that you'll hear about in this report. So if we go to the next page, our audit scope, and I could point out to Audit Committee here, for example, that when you look at all of those 10 items, the various areas that we could have looked at that are under the oversight of facilities, operation services, and the other groups. We could have conducted an audit of any of those areas, but you are aware that when we meet with councillors and senior executives, when we're preparing our audit work plan, we also have conducted our risk analysis. And based on the risk analysis that we've performed at the city, based on our discussions with councillors, based on our discussions with senior managers over the years, and based on our fraud and waste hotline reports, we had identified facilities management as an area of concern. And here, rather than look at the micro areas that you see listed below, we were looking at it as a function across the organization, as you'll see. So financial facility management is defined by the International Facility Management Association as a profession that encompasses multiple disciplines to ensure functionality of the built environment by integrating people, place, process, and technology. In particular, the facilities management function typically includes, for context, facility planning, engineering and construction interface, all those areas that you see on that slide. Next slide, please. So to give you some context, the city manages about 1,100 city-owned facilities with over 13 million square feet. Replacement value is approximately $3.4 billion. And in 2019, the city spent approximately $154.3 million in maintenance and operations, and about $40 million in capital expenditures on its facilities. And at the end of 2019, the facilities were in need of somewhere in the order of $487 million in overdue capital work. And we refer to those as deferred needs. Next slide, please. You'll see from this slide how the number of staff are divvied up behind the areas that work within facility management. So you see the breakdown as well as the number of facilities within each area. Now, I should point out the purpose of the fact review, which we received 2 days before this audit committee, is to identify any errors. And I will be honest, there were some errors in this report, and they were along the lines of the number of facilities in some cases, the number of FTEs and how they were allocated. And we will be making those corrections to the next edition of the report. But I can tell you, after reviewing the fact review last night and the night before, there is nothing of any significance that affects our comments or our findings. So the numbers that I refer to in the report might change, but not materially. So So the facility management function and the various groups that facility management interact with have undergone multiple organizations since amalgamation. And these reorgs have been of varying sizes. And most recently, there's been 6 in the last few years, 1 in 2009, 1 in 2011, another in 2012, another in 2016, 2017, and a minor one in 2018. So next page, next slide, please. So the purpose of this slide is to show you the type of work that we do when we do this, when we perform an audit of this or any nature. So, and this audit was no different than any other audit that we've done before. We used exactly the same methodology, the exact same development of our risk assessment and our criteria and our objectives. So we conducted just under 60 interviews by interviewing 43 people, and those people came across 16 departments or units here in the city. In addition, we interviewed 6 clients of facilities management. As is pretty typical, we reviewed more than 250 documents, and those documents might be an email or they might be, a 60-page report to council or committee. The team also interviewed facility management types in other municipalities, and that included Toronto, Winnipeg, and Mississauga. And we obtained information on activities from a total of 8. So there were 5 additional municipalities that we looked at. So that would have been Calgary, St. John, London, Hamilton, and Sudbury. Now, we're auditors, and the bulk of our work also includes testing and analysis. And we looked at, we tested the work orders and the standing orders from 2019 from that were generated in relation to the facilities. We analyzed replacement cost, and we looked at the deferred maintenance and the facility condition indices, and I'll be talking about that later in the presentation. We looked at succession planning. We tend to do that in every audit, and then we looked at project expenditures from 2015 to 2019, looking at actual versus budget, and looked at any budget shortfalls and cost pressure information that would have been identified. Next slide, please. La gestion des installations consiste à planifier et à gérer le cycle de la durée utile des installations. On peut décrire comme suit les étapes de cycle de la durée utile des installations, comme l'indique le qui-mot ci-après. Stratégie et planification, création ou acquisition des installations, exploitation ou service et aliénation. Donc, qu'est-ce que nous avons constaté? Nous avons constaté que la fonction de la gestion des installations de la ville n'est pas concertée ni intégrée dans toutes les phases de cycle de la durée utile des actifs. So, there's a very clear relationship between the corporate objectives and resource planning, asset management. The facilities management involves planning and managing the life cycle of a facility. The stages, as you can see in this cycle up here, are very clear, and this isn't rocket science. You begin by talking about the strategies and planning to find or develop a particular facility. You create it or acquire it. You then operate it. And then provide any service deliveries related to that facility, and you either dispose it at the end or modify it. So what did we find? We expected to find that facility management is coordinated across all citywide facilities at all stages of the facility's life cycle. We also expected to find that the full range of facilities management activities and services were integrated and operate under a comprehensive citywide strategic plan and vision with common policies and common procedures. And what do we find? We found, and this is probably our prime finding, that the facilities management function at the city is not coordinated and integrated across all phases of the asset life cycle. Now, we found that that the city does have a comprehensive asset management policy, and that's a good start. There's no question. But we found that compliance with that policy, known as CAM, is not achieved, as the facilities management function at the city is not coordinated and integrated across the city and in all phases, as we indicate above. Next slide, please. As a result, the approach to and delivery of facilities management activities is inconsistent across the city. We found that there were some parts of the city that have a policy on preventive maintenance management, where others do not have a similar policy. They don't, not only do they not have a similar policy, they don't have a policy. We found differences in financial thresholds for funding of capital life cycle replacements across the city. We found different focuses in different parts of the city on the work orders that they would work on versus those that would be where they would use external resources to complete that work. The next slide, please. This slide demonstrates the some of the coordination and resourcing challenges that we saw across the city. So we observed that that there were components of an integrated planning framework throughout all levels of facilities management strategy, but there were some pieces that were there. There were some that were missing. There were some that weren't fully developed. And to be fair, there are some areas where we found that some groups had identified aspects that they were missing, and there were plans to do that work without any timeline. But good for them for identifying where they were missing, where the missing components were. The audit found that where we would expect an integration of plans in relation to a particular facility, we found that there was no coordination of that between the occupants and those looking after the facility. Any decisions on priorities of activities and investments are undertaken without this strategic context, of course, and as a result, there is the risk that they may not result in the best value to the city and taxpayers. We found a clear absence of ownership over the management of facilities, and it goes without saying that a facility is complex, and it consists of several integrated systems requiring operations management, maintenance management, utilities management, project management, quality management, risk management, and life cycle management. And if decisions made in these areas aren't coordinated or aren't interrelated, they obviously impact each other, and there's the risk that we're not achieving best value for money. With this absence of clear ownership is a sentiment that was echoed by managers during the course of the audit, and you indicated to you that we made a number of interviews, and this was probably one of the largest frustrations that we heard about. And it's also been no question, it's been formally identified as a finding by both asset management branch and water services in their initiative to transition asset management activities from water services to the asset management branch. So when we turn our attention to the lack of visibility of facilities management costs, it really goes without saying, as homeowners, we know that we want to know what the total cost of operating our homes are. Well, the same thing applies to any entity that has numerous facilities. The total cost of ownership is the summation of all known and estimated costs to include First, recurring, renewal or replacement, and end of useful life costs that could be used at critical decision points to aid in decisions that we make in that life cycle process that we talked about. So the one of the things that that is clear, and this was confirmed in our review of the industry data, our discussions with other municipalities, other groups involved in facilities management and other municipalities. Industry data indicates that 5% of the facility's life cycle cost is represented by the cost of construction, and 95% is represented by the cost to own the facility once it's constructed. So obviously, knowing the total of the total cost to operate a facility are of prime importance when that's going to be 95% of your expenditure. The audit found that the total cost of ownership of city facilities is not managed and could not be provided when requested by the audit. To obtain the full cost of ownership of a particular facility or a portfolio of facilities, data must be requested from multiple organizational units. And when we talked about this with staff, virtually to a person, they indicated that that they wouldn't necessarily have any confidence in the accuracy of the completeness in that data that could be obtained through that approach. The impact of not managing the total cost of ownership of facility is very significant to any property owner, specifically a municipality, as an understanding of the total cost of ownership is necessary for decision making at those various stages throughout the facility cycle that we talked about earlier. Without a full understanding of the total cost of ownership, I don't have to tell you that we risk having insufficient funds to continue operation of a facility and preserve the life and investments made in that facility, especially down the line. We found that the siloed nature of facilities management prevents cross-department resource analysis, goes back to the lack of data that's available. But we found in some cases there wasn't even an understanding of the resources that were kept with other groups, and that without that understanding, then that information isn't being shared. So we found instances where the assessment management branch is not always aware of the repairs and upgrades undertaken or planned to be undertaken by the facility groups. Likewise, the facility groups are not always aware of the capital work that the assessment management branch is planning to undertake. This issue was identified during the course of our interviews with most of our interviewees. Once again, another issue that directly affects the amount of money that is eligible for repairs and maintenance. There was no mechanism that would adjust funding in the facility groups to take into account the change in operating repairs and maintenance costs brought about by new facility components that would be installed by assessment management branch. One of the things that's most important about to any entity for any of their assets is the condition of the buildings. Asset management is responsible for undertaking building condition assessments. The building condition assessments exclude repairs and maintenance requirements, but these items are not funded by assessment management branch, but are funded by the facility groups. The facility groups are not fully aware of the results from the building condition assessments and are unaware of the replacement costs of the assets in their portfolio. This makes it difficult to determine the level of repairs and maintenance funding required on facilities, as a key metric in determining the funding level for a facility is a percent of replacement cost and the timing of life cycle component replacements. We found that the approach to funding facilities is reactive and not based on planned funding strategies. And the deferred maintenance calculations by asset management does not take into account work undertaken or not undertaken by the facilities group. Now, To be fair, there is recognition within the city of the need to more fully integrate and centralize those facility-related activities. And we talked about one of the recent changes that was made in 2019, among others. The audit reviewed the approach to facilities management delivery in several Canadian municipalities, and the audit noted recent moves towards centralizing facilities management functions under one department where there already existed areas of expertise that much like what you would require for facilities management. Next slide, please. In 2020, the city commissioned a consulting firm to undertake a preliminary building capacity assessment of 3 administration buildings, namely Ben Franklin, 100 Constellation, and 110 Laurier. The preliminary results from the study indicates that the city is in contravention of some building codes, and primarily along the lines of over accommodation. Now, certainly less of an issue in COVID times, and certainly moving forward. But this is certainly an issue that is going to have to be addressed. Next slide, please. This diagram illustrates a generic, robust, integrated process of developing the facilities management strategy from the program strategy, and it's taken from one of the corporate bodies out there, one of the industry bodies that works with people who live and breathe facilities management. The audit expected to find program strategies that are clearly linked to facilities management requirements. And we found that the program strategies were not in place, and there were no processes that linked those strategies with FM strategies. And when we make that statement, we say that uniformly across the city. There are some instances where this type of linkage does happen, not uniformly across the city. The city does have, I mentioned earlier, a comprehensive asset management framework in place that encompasses facilities along with other assets. However, components of the framework, including the strategic facilities plans that would and should be part of the asset management plans, have not yet been developed. And implementation of specific plans under the CAM framework, the Comprehensive Asset Management Framework, have become a renewed focus with the preparation of the CAM roadmap, but it hasn't been approved by council. Obviously, staff have focused on largely in response to the new regulation 58817, but the point that we're making is this is just as important. This is important too. The audit expected to find tactical plans at a local facility level, which provide direction in the management of facility operations, as well as repairs and improvements required to each facility. The audit found components that feed into technical plans such as budgets, information arising from building condition assessments, annual projects to be undertaken, and work assignment from preventive maintenance systems. However, we didn't find full technical plans that put forward a cohesive strategy to maintain the particular facilities at a predefined level of performance and a level of service that would meet strategic objectives over a particular period of time. Next slide, please. The audit expected to find the priority of facilities management being determined by a planning framework that provided the overall strategy of where investment should be made. We expect to see repairs and maintenance determined by preventative and corrective maintenance requirements. Capital priority setting methodology exists, and we expect to see the approaches consistent across the function, and we didn't find that consistency. The priority of investment into repairs and maintenance or capital projects should be guided by the city's plans for the facilities. The audit found that the strategies were not in place that guide the investments that should be made in facilities, especially those facilities with little remaining life or facilities where work to be performed is greater than the cost to replace the facility. We found that significant investments have already been made over the last 5 years in assets that have 5 years or less of remaining life. Now, certainly, while the above assets may be functional and justify significant investments, this may represent a potential cost savings for the city going forward. Asset management, to be fair, in our interviews informed us that they're aware of the shortcomings of the current project prioritization methodology and are in the process of reviewing and revising their approach to prioritizing projects. Now, turning to deferred maintenance, the definition of deferred maintenance in industry is typically stated as the total dollar amount of existing maintenance repairs and required capital renewal replacements not accomplished the total amount of existing maintenance and replacements that are required but haven't been accomplished through either funding, planning, or lack of other resources. Now, what it was curious is one of the things that we found is there was no consistent definition of deferred maintenance across the city. To be fair, there was an understanding with the individuals that we were speaking to, what they meant to, what they understood to be deferred maintenance, but at its base, there should be a common definition. And of course, if you don't have a common definition and you haven't accumulated those costs, then that goes back to the point that I made earlier, where you don't understand, you don't know, you're not able to say what are the full costs of operating a facility. Next slide, please. The inability to complete building condition assessments and assess the condition of all buildings in a consistent and timely manner, and to validate the information impacts, as I said earlier, on the ability to manage deferred maintenance and to prioritize and fund the work that is needed to carry on using that facility. The inability to manage deferred maintenance shouldn't come as a surprise to anyone, that it could result in more expensive investments in the future. There could be possible effects on health and safety. Certainly, there could be program effects down the line, but nevertheless, at its very base, it leads to inefficiency, and it's not effective if at the end of the day you're not able to properly make decisions about a facility because of lack of information. We found that the asset management branch undertook an initiative to calculate replacement cost of facilities in 2008. However, replacement cost figures, for the most part, haven't been updated or used in prioritizing work. And at the time of the audit, there was no current approach or methodology to update those replacement costs. We expected to find that priorities would be linked to available funding. We found that the priorities really, in our discussions with staff, that the priorities outweigh available funding, and there's no strategic plan or funding strategy to address the level of deferred needs. Now, the average cost of investment by the city of major capital and facilities is about 0.5% of replacement cost. Now, indicated to you that the replacement cost, the total replacement cost, is understated. But using the replacement costs that we have now, the average rate of investment is about 0.5%. The industry standard is approximately 2% of replacement cost. The other, this is a good example of, you've heard me talk about benchmarking, the use of benchmarking in various audits over the past. Benchmarking is an important management tool where you can check yourself against someone else. It doesn't have to be another municipality. Sometimes it can even be against yourself. year over year. But we certainly found areas where benchmarking could be used and wasn't being used. Next slide, please. You've heard me talk about data, and here our findings really do focus on the data. We found that the city doesn't have a single system that integrates life cycle and maintenance information, permitting facility groups and staff to see the same information, staff in other parts of the city to see the same information. Currently, there is no system integration between life cycle and facility maintenance. We couldn't calculate the facility condition index on approximately 40% of the facilities. Now, the facility condition index is a measure that is used to that is used by facilities management types to get a handle on the condition of their facilities. We couldn't calculate that index on 40% of the facilities due to an absence of data, and that's either no replacement data or no deferred cost information, or in some cases both. Now, the calculation of the facility condition index on the remaining 60% is hampered by the information that is there, but is out of date. So, without an established facility condition assessment process that incorporates consistent criteria across the city, it's difficult for the city to determine and manage the condition of its facilities, and then make decisions on the level and timing of investments for those facilities. Next slide, please. We expected to find sufficient funding to properly maintain facilities and deliver required level of services. To achieve this, naturally, we expected to find in place practices such as funding requirements that were linked to planning frameworks. We talked about that earlier. There is some, but it's incomplete, and it certainly isn't consistent. We expect to see formal variance analysis with follow-up action at predetermined individuals. We expected to see accurate deferred maintenance and funding pressures identified. We found that the budgets for facility management are largely rolled over from year to year with little change except for adjustments for inflation. They're not established based on facility needs that are linked to strategic and tactical facility plans, as we said earlier. So the deferred maintenance and funding pressures, deferred maintenance is incomplete. We had asked if we could have an estimate of the deferred maintenance across the city, and that's when we determined that there wasn't a clear definition of deferred maintenance. And then with the incomplete data that it exists, the best that we could come up with is approximately $488 million. This deferred maintenance figure is likely understated because the assessment of building conditions hasn't been fully updated, and not all facilities have had assessments. Next slide, please. The audit found that while there are several core systems in use, greater integration is required between systems that impact on facility maintenance. We found, for example, that the Archibus system, which is used by the accommodation branch for accommodation management, is not implemented throughout city facilities. We found that there was no formal performance management framework across the facilities management function that would permit management to properly exercise oversight over facilities and provide management with information required for decision-making and corrective action. Currently, there is no department in the city that has information on how well all facilities owned by the city are maintained. I talked to you about benchmarking, and once again, it doesn't have to be with every municipality in the world. It doesn't even have to be with a municipality. There are commonalities between municipalities, but if all areas of facilities management were doing some sort of benchmarking, according to the Building Owners and Management Association, the possible savings from benchmarking alone can be up to 3% of facilities operation costs. Now, I have to say two things before I finish. Staff were absolutely cooperative throughout the audit itself. It was only at the very last stage where there were issues. There is no question, I've said this before, you've heard me say this before, there's no question in my mind that the staff in facilities management, those individuals who are working there, are absolutely dedicated to doing the best that they can with the tools that they have. But understandably, there is no doubt frustration there. And the purpose of this audit, which came out of our risk assessment, which came out of work that we had done, which came out of discussions with counselors and discussions with senior managers and our fraud and waste reports over the years. This was an important piece that had to be done. And it goes directly to helping council hold themselves and management accountable for the expenditure of public funds. So I thank the staff and facilities management who cooperated with us through the performance of this audit, the development of this report. Mr. Chair, there were 34 recommendations, and as I indicated, we received the management comments on Friday afternoon, and management agreed with 33 of them. Next slide, please. Mr. Chair, that concludes our presentation on facilities management.
Thank you, Mr. Auditor General. The last slide sure does sum up your findings. It's quite powerful. Thank you. Thank you for the presentation. I appreciate it. Boy, I thought that Lansdowne sure is important, but this is vital. This is vital to our city, and we've seen that during COVID. So I'm looking forward to the discussion we're going to have. Councillor El Shantiri, please.
Thank you, Mr. Chair, and thank you, Mr. Hughes, for your presentation. On page 9, Mr. Hughes, first of all, your slides is not numbers. I don't understand why don't you guys put a number on them so we can make reference to them, but that's okay. So on the report on page 9, you talk about the integration and centralization of facility management function along with the full review of optimal model for service delivery. Are you saying it should have been one model to fit all the facility we own? Because some of it, I'm sure you know, came with the amalgamation. Some of it has been whatever. It's a different strategy, I would say, for a different facility. So on page 9, when you talk about outsourcing should be considered in strategy area of facility as a city as their potential for cost saving and enhanced service delivery. So where did we fail on this one?
Well, you've had, Mr. Chair, the councillor has asked a few questions there, and I'll begin that you're right. You don't use you wouldn't deliver all of your services to the same way across the city. But when you are talking about assessing the condition of your facilities, a common approach is required. When you're talking, if you're talking specifically about whether repairs and maintenance to facilities should be outsourced versus insourced, that that's a decision that could and should be done by management, and it should be considered. And when we talk about common themes, that's something else that I will, that I'll talk about. But you're correct. There might be some parts of the city where the delivery of some activities is best done through outsourcing, and other parts where it might be done with city resources.
So, Mr. Chair, if I can ask staff to comment on the Auditor General's finding, and that there should be organizational structure change as units are working in silo. And we saw the last picture, and I think that was disturbing enough. So, can staff comment on this, please? I'm not sure who from staff, maybe Dan Chanier.
Chair, it's Dan Chanier. Thank you for the question, Councillor. The Auditor General has made some significant recommendations and pointed out some challenges that the city has. By coincidence, many of these look very familiar to recommendations and the observations from the 2007 audit, when at one time the city did have a very centralized facility management function known as RPAM at the time, Real Asset and Property Management. And those recommendations did go forward, and for the next decade, if not more, individual departments worked with RPAM to try to get to some of the many issues that the auditor spoke about. And when this city manager came back, one of the first things we talked about is, have you guys solved the RPAM issue? And the honest answer after a decade had to be no. And at that time, as part of the 2016 reorg, we did make a bold move. We said, let's try a different way. Let's try to focus on the clients. And one of the things you didn't see in the 2007 document was that a high client satisfaction, which you do see in this audit. And I think that is a reflection of the city manager giving us the direction that for departments to go ahead and, at least in the initial phases of implementing this new model, put a focus on the things that matter on the front lines. And that's exactly what we've done. And so, there are some good points about internal integration and coordination that still need a lot of work. That has not been the initial focus. The initial focus was on working together, and COVID was mentioned. I have to tell you that having an owner in the store, one person in each facility during COVID that is able to direct not only the programming resources, but also the facility management resources has been a godsend in terms of being able to quickly adapt facilities to COVID, to institute heightened cleaning regimes, all of those things. To the notion of a reorganization to do this, and the auditor spoke at length at the beginning about the delays in responding. One of the difficult hurdles to get over with was that first recommendation was to undertake a major reorganization of several departments to accomplish the many areas that he talked about. And as I've just mentioned, fundamentally, management believes that all of the 33 other recommendations can be accomplished under the new model that we instituted. Alain Gontier is on. He may want to share some perspectives from the asset management part of this.
Yeah, thanks, Dan. Yeah, I think if we go back to 2012, when council approved basically the comprehensive asset management strategy, at that point, that really started to set in motion basically how we would be managing basically overall our assets. And the auditor mentioned about the importance of the facilities, but the city has to manage a lot of other assets also that also compete in terms of the same funding priorities. So basically the city has over 50 billion worth of assets. The facilities account for, give or take, about 10%. So when we're looking at basically managing the facility assets, it's also in the context of all of the other assets that we need to manage. The piece that we've put forward also, and we're trying to reinforce following the 2016 realignment, is
The organizational piece is one element, but an important element is the governance. And we have the CAM strategy, or the steering committee, that regroups basically all of the different city departments, all of the players around the table around what priorities are we setting in terms of moving forward to be able to achieve basically council's objectives. So we have been putting a lot of the pieces in place to basically help to bring better governance around how decisions are being made. And to Dan's point, the audit makes a number of important findings. What we see from that is that a lot of those findings are basically incorporated, or can be incorporated basically in the work that's currently being done as we go forward. This is very much a journey, and we're always going to be looking at improving basically our processes. There's always areas that we need to do a bit of work on, and certainly the audit certainly flags some of that. But our strategies are going to get us to the point where we need to get us. We have important documents that we're going to be bringing forward to council in 2021 and 2023 that will provide a lot more detail also around all of the assets that are required to support all of the services, and the facilities component will be integral to those documents. So I think to Dan's point, there's a lot of work that has been done. There's still a lot of work that is to be done, but I think we're well positioned to be able to address all of the audit recommendations that have been flagged.
Councillor El-Shantieri, did you have any other questions?
If I unmute myself. So, thank you, Dan and Alain. My second question, Mr. Chair, is respond to the Auditor General assertion that there isn't effective coordination of resources. So I'm trying to understand, is it something to do with the new model, or do we need to go back to the old model? Like, I don't understand why there's no coordination among the.
So let me start, and then Alain can fill in, because we're on different sides of the coordination matrix, I guess. And this is a problem that has plagued us for some time, in that my team does the day-to-day and makes repairs as they come along, and Alain's team looks at the longer term replacement of assets. And currently the technology does not allow us to easily be able to determine whether an asset is about to be replaced, what the timelines are for those, and whether we should invest in repairs or wait for asset management to take care of it. The reality of our world on the front line is that often small replacements and things like administrative buildings or recreation buildings have to be done immediately, whether they're going to be replaced by asset management in a year from now, or we simply can't leave broken tiles in the lobby, or pieces of walls missing. There's safety, there's customer service. We're putting an emphasis on trying to make our facilities as attractive and welcoming to folks as possible. And so the auditor has pointed out some times when frontline repairs were done in advance of if more coordination had been in place, we might have done things differently. That has existed. Technology will solve some of that, and being able to have easy access to when things will get replaced. And LA's group is working on that, and I'll let him speak to it.
Yeah, just to pick up on some of the points from Dan, there is a lot of coordination that does take place. Our staff are continually meeting basically between Dan's group and our group around upcoming renewal plans, how the facility shuts are going to be planned and impacted. Because when we're impacting a facility, it's not just about putting out a contract, it's also planning the work in terms of what programming is going to be impacted, how Dan's group can basically reassign basically those program impacts so that we're able to proceed with the works. We're looking at end of life facilities. So there is a lot of coordination that does take place, and that takes place on an ongoing basis. certainly the audit flags basically areas that we definitely need to tighten up. The documentation of some of the processes. In some cases, basically the coordination and dialogues are taking place. There could be improvements in terms that document basically some of those processes. And the other piece I think that's being highlighted in the audit also is doing a better job also of pushing down into different layers of the organization, basically what those processes are, so that basically people understand basically what their roles are, what their responsibilities, and how work is actually being coordinated. And again, those are all elements that we're going to be able to capture as we update the strategic asset management plan that was last presented to council in 2017, and as we build basically the service-based asset management plans, which are going to provide council with basically a full view of all of the assets that are required to support basically the various service areas that we have across the city.
My other question, if I still have time, Mr. Chair, or I can go on the list, but if my other question is, can staff give us an understanding of management's response to the Auditor General finding on the building condition assessment and the life cycle gap of what's been done to address these? Because anyway, but when you look at the report of what the Auditor General was saying, it's got to be a plan or understanding of assessment of the life cycle gaps. So obviously there's a gap. Is it funding gap? I mean, when we talk about other saying 2% and we have 0.5, can you explain to me like what's your understanding of the management to the auditors?
So I can start. So on the building condition audits, one thing that we've recognized is that there was a need to catch up in terms of building condition audits. And what we've applied, like we apply for every asset, is basically a risk-based approach. And what we started is putting focus on basically facilities that pose a higher risk to service, and that were some of our larger facilities. And we've put a lot of effort in terms of getting building condition audits completed on those facilities. Now our focus is starting to shift to the facilities that are less than 5,000. We do have information. We just need to make sure that the intent is to get all of the facilities on a 10-year cycle. And the reason why we apply that is when we look at the 1,000 facilities, some of them range basically from storage sheds to a recreational facility. So not every facility, when we look at the 1,000 facility, basically poses the same risk to service. Not every facility has a public occupancy requirement. So we tend to try to focus basically our initial efforts where there's a highest risk, recognizing that the intent is to get to a fuller picture in terms of condition audits for all of our facilities on what we've established basically as a 10-year cycle. So that's why you're seeing right now some of the gaps in the audit reporting, basically 40% where the facility condition audit could not be calculated, is because we're still working through some of those audits. And in terms of the replacement value, I would caution the 0.5%. The financial data that we had and we shared, I think our reinvestment levels are higher than that. And then the last point that I want to make back to the issue of cost is, since 2012, what we've presented to council is basically a recognition that we have shortfalls in terms of our infrastructure funding. So what we presented through CAM in 2012, and we updated again in 2017, when we're talking about basically trying to close that annual shortfall of funding, it includes basically the building component. Again, the buildings account for about 10% of our overall assets. So from an integrated perspective, it's important for us to be providing council with a full view of all of the assets that are required to support the delivery of services. So there is a recognition that there is an underfunding, there is a shortfall, and there's also a plan in terms of trying to get us to a point where we're able to maintain our assets in a state of good repair, which is really the level of service that council has approved back in 2012.
My other question, Mr. Chair, if I still have the time.
You had 2 minutes at the end of your last question.
Oh, that's good. So on page 10, when we say project work has been identified by the city as required on 37 facility, where the value of the work exceed the cost to replace the facility. The excessive project work over cost of replacing the facility as 14 million. I mean, a project work has been identified by the city in the amount of 31.5 million on 116 assets with zero remaining life. Can somebody explain that? Like, why would you want to spend that kind of money on a facility if you know it's basically is cost effective if you replace that facility? That's on page 10, Alain.
Yeah, so some of the context there, the auditor certainly and rightfully pointed to areas where there's certainly some data gaps. So I think when we're looking at replacement, the facility replacement value, I think there's some caution that's required there. But I think the other element too is that a lot of the facility where we're investing dollars, we are trying to stretch those dollars as much as we can, recognizing that those facilities need to continue to be maintained and serviced to provide the program, to continue to provide the programming. So it's not like we can just suddenly shut the facility and say, we'll be back when we can build a new one. So when we work closely with Dan's group will be looking at from a growth perspective, where are they going from an overall service delivery perspective, and we overlay basically the life cycle renewal on that. We do have the discussion about facilities are coming to the end of life. To make sure that basically, okay, is it still worth putting investments into facilities, even though in some cases we may be pushing them beyond where they are. The reality is basically it's trying to stretch those dollars that we have as much as we can.
Chair, I can add to that the arena optimization initiative that was approved as part of Council's strategic plan is a first example of taking a class of assets and having a look. And we know that we have some arenas that are on average, more than 40 years old and no longer meet the programming need. And so that is a first initiative to look at exactly what we're talking about. When is it time to either decommission those buildings or repurpose them because they no longer meet the need, and not invest any further in them? The other piece that we'll be looking at as part of our recreation infrastructure strategy is how do we renew some of the facilities that are of all kinds in the core of the city primarily, but in other parts as well, that are past life expectancy, but there are no development charges coming behind to help pay for them. What is the financial plan for addressing the replacement of some of those things? So that is, and we do need a 10-year plan to look at that, and we'll be delivering that in 2021.
My final question, and I'll ask them both together. So in the final slide for the auditor said 34 recommendation, 33 the management agree with, obviously one they disagree with. I'd like to know which one that was. And my other questions, so because of the time, what is the management's response to the lack of succession management? We know when Steve came back, a lot of change has happened in succession planning for management level or assistant general manager, but are those being implemented for buildings and experience and facilities? I mean, we know some people are retiring and those people leaving with 40 years of experience in those areas. Can you please explain it to me and why there's one condition you guys disagree with?
Chair, let me start with that one. Firstly, on the one we don't agree with, it's recommendation number 1, and I spoke to that at the beginning of my comments in terms of moving to a centralized model. That management feels that the model that we adopted in 2016 is still in the development phase. It is paying good dividends in terms of improving frontline service. And we also believe, as we've indicated in our management response to the other 33 recommendations, that we can accomplish the things that the auditor says we should within that piece. In terms of succession planning, and at least part of that recommendation I think is intended for the facility operations, which is in my department. And that is a work in progress. The auditor has picked up that this is a line of work that traditionally has seen succession based on longevity. And it is a changing field as the work becomes more technical, HVAC systems, chemicals, health and safety requirements. It's no longer the case that you can just wait it out and be in there. So early on, as in 2017, when we took this on, we outlined for people that are, you know, as starting out with us as Zamboni drivers or maintenance workers, what is the career path to becoming a foreman, to becoming a supervisor, to becoming a portfolio manager? And we created a series of courses, which we're starting at the grassroots and building it up. And we are now looking at, you know, how do we give our supervisors portfolio manager experience? How do we give our portfolio managers acting manager experience? So we recognize that this is a field that has not put a lot of emphasis on training to promote succession management, but we have a plan, and the auditor points out that you know, this is an important place to invest for the city.
Just a little explanation, Dan. When you meeting with Alain Gancier and like about facility asset management, does the procurement officer involve to make sure? Because sometimes I don't agree with centralized. I have to tell you why. Because if you got a plumber in Kinburn, the odd is he know how to fix the facility. He's a lot better than centralized someone coming from subcontractor. But I want to make sure the procurement officer involved with that process, making sure there's accountability. Does that table of management include the procurement officer?
Yes, we work very closely with procurement, and part of this speaks to another, I guess, recommendation from the auditor of looking at the proper blend of in-house and contractor provided services. And the example you give of a plumber in Kinburn is a good example where, you know, we've looked at creating standing offers where we can have somebody that can respond quickly and close by in order to be able to do the work. Again, work in progress of building a strong network of external providers, because more and more of these resources, you know, that kind of work is being given out to local contractors. And we do work closely with procurement on getting people that can respond all across the city for time and efficiency and of course cost as well.
Thank you very much, Mr. Chair, and thank you, staff and Auditor General. It's a great report. There's a lot to digest, but it's a great finding. Thank you.
Thank you, Councillor Shanker. You're right on time also. Councillor Hubley, please.
Thank you very much, Mr. Chair. My first question will be for the Auditor General. As Councillor El Shantiri touched on, we've got 33 of your 34 recommendations accepted here. In the span of your career as Auditor General, I thought almost all the recommendations get accepted. Am I correct? Is this the only one that has never been accepted?
Mr. Chair, the councillor's correct. It's the only one that that hasn't been accepted. Is it tied up with what transpired around the delivery of the response back from management? Possibly. And what I think it's important is you know, what we do with this audit afterwards. My intent is to continue to work with management to update this report with their comments and to seek some resolution on the first recommendation. The councillor's correct. This is the first time that there is that there has been a disagreement.
Thank you, Mr. AG. So now my next question to staff. The report notes that there's several buildings that are in what's called a crisis state. Do you accept that finding or dispute it?
I'm not sure that I would define them as being in crisis. There's certainly facilities that that are getting to the end of their life that require more investment, and we have strategies in place to be able to manage those facilities. Which means that yes, there's still continued investments that need to be done because those facilities continue to provide service. I'm not sure that I would go to the extent of calling things a crisis. As I mentioned before, as we get closer to the end of life, we are having discussions with the service areas around their continued use for those facilities. And in some cases, basically, it takes time to be able to plan some of those facilities. One of the examples is a central library that's identified on that list. As you know, we already have a plan in place for the new central library. It just takes a bit of time to be able to get to that point. So usually if there's facilities that are in that state, there's discussions that are taking place with the different service areas in terms of how do we continue to provide their service, support their service.
Well, Alain, does the term crisis state actually have a definition that is accepted amongst your peers as well as the auditors? Or is that just a term that shows up in this report and nowhere else?
Well, terms that we use are, and that we report at the council for all of our assets are very good to very poor condition. I know that in the audit report, they tied the level of deferred maintenance to the replacement value, and depending on the percentage, basically you can have basically a different level of qualification as to what the facility is at. We typically use basically that very good to very poor, just for consistency in terms of how we share the information with council and the public.
Okay, fair enough. So the term crisis doesn't imply any safety risk then? I'm worried about our employees and our residents that use these facilities if they're considered in very poor or crisis state.
As I'm, and thank you for the question, Councillor, right? And I want to reinforce that through all of the decisions that we make, we always apply a risk lens to the decisions that we make. Safety is always comes first, so that is the main priority. And some of the facilities, I want to repeat that out of 1,000 facilities, some of them are, a number of them are storage sheds, smaller facilities, lower risk facilities. So out of all of the assets that we need to maintain, that we have to maintain, we want to make sure that we're also putting a focus on the health and safety as a prime priority. And that's why you continue to see investments being done in some of the facilities to make sure that we keep them safe for the users.
Okay, so I understand there's a fundamental disagreement here between yourself and senior management and the Auditor General on which is the best model to use. I have to ask, if what you're doing now is the best model, how come it took so long to answer a simple question like how many FTEs and how many facilities are under your control?
So maybe I can start on that one and then hand it over to Dan, because some of the staffing piece falls to his group. I think the information was provided. I think at the end the delays were more around some of the factual components of the audit where there were a bit of back and forth. But back to your first question around the model. We have been very progressive in terms of trying to roll out a strategy for the city that looks at all of the city's assets, because at the end of the day, that's where the decisions need to be made in terms of balancing different risks and different investments. So we don't just manage buildings, we don't just manage roads, we don't just manage parks, we don't just manage water and wastewater systems. All of them need to be managed, and what we've put in place is basically an approach that basically brings integration and consistency in terms of how those assets are being managed. We do have, and we're continually basically liaising with our peer municipalities, looking at best practices, looking at how they're doing things. The City of Ottawa was one of the founding members for the Canadian Network of Asset Managers, and that's a national association that's really focused on collaboration and working on best practices. And I can't say that there is one model out there in terms of organizational structure that's basically deemed to be the best model. You see a mix. You see some that are more focused around certain area of service, for example, around buildings, and everything is focused around buildings, and they have these different silos in the organization. You have others like the City of Ottawa that's a lot more maybe decentralized in terms of some of the functions, but a lot more integrated in terms of how the assets are being managed. So, and our approach is very similar to Edmonton as an example. Our understanding is even Calgary are going through some fairly significant realignments. And from the discussion that the city manager there was indicated, they're looking at moving to more of a functional model, which sounds very comparable to the model that the city has. And I think at the end,
sorry, let me just interject here. I wasn't questioning you or to get your viewpoint on the model. I fully understand that senior management has the right to choose the models they want. What I'm looking at, what my question was, under this model, why did it take so long to identify the number of FTEs and the number of buildings under your control?
So I don't think that providing that data was we were able to provide basically the facilities and the staff count. So that certainly was not, as I understand, basically the concerns in terms of responding to the audit. That information was provided.
Okay, then can I ask the Auditor General to clarify? Because I thought I heard in his comments he just got that information yesterday.
Oh, excuse me. What I was referring to was the fact review, which would change some of the numbers from what we put in our audit report, which was given to us during our audit, and then the fact review that we got on Thursday afternoon. So it just corrections. It was date.
Also, not the reporting of the numbers. It was just the review of the numbers that you had published from
Correct.
A report they gave you.
Yeah, this was their fact review of our of the report. Said in table such and such, you say 68, it should be 70. You say 423, it should be 430. That sort of thing. So that
Okay.
it was
Thank
corrections
you.
of that. Okay.
Thank you. Alain or Dan, my next question has to do with the potential savings identified in this report. For example, we just got an email this morning about a new federal program to help with retrofits, repairs, and upgrades of public facilities. Unfortunately, the response time is something like Fridays. I just want to know, is this organization nimble enough to respond to something like that and have projects they can add to that list?
I can respond to that.
For you, Chair. Oh, sorry. Go ahead, Steve.
Steve Willis is going to answer you.
Yeah, so Chair, just to the councilor's point, the federal infrastructure stimulus money that was allocated to the City of Ottawa, we have a very short turnaround time to respond to them. That's a requirement of the program that they set up. Staff have been working collaboratively with all departments for at least 6 months to prepare a list of potential candidate projects based on what we thought the federal government's criteria might be. So in terms of nimbleness, we already have a wish list that we are working from, and we just ask councillors for additional priorities that they may have. So I can assure you we have lots of ideas and we know what our priorities are.
Okay, thank you. And I think it's going to be my last question. And I guess this is probably more to Steve Kanellakis because it's a complete overview question. I'm thinking, given the recommendations in this audit and the findings of the audit, I'm wondering if it would be a good idea for us as a city and we as a council hire you to be the one that answers to this and to take direction on it. I'm thinking we've got to take this audit away and look at what's in there long before there's a follow-up audit done and mine this for some very good ideas in here. I'm not disputing your choice to pick the model you want to go with. I just think there's some very good recommendations in here to make whatever model you choose work better. Would that be something you would be willing to take on and at some point come back to council and let us know your progress?
No, thank you through the chair for Councillor Hughley for asking that. A couple of things. First of all, out of the 33 recommendations, I did want to point out, and it's unfortunate they're not on the report, but the Auditor General gave his explanation for why they're not included, and I hope they are included before they reach council on December 9th, because there is discussion. I think he will do that because I think it's important. 11 of the 33 recommendations have been, I would say, implemented, but we are doing, and there are, additions the Auditor General wants us to do those things, so we agree with that. I've already spoken with our senior leadership team, which is on the call right now, that I'm not waiting for the follow-up audits to be able to report back. My intent is to gather our leaders who are involved in property management, facilities management, I should say, and start having a conversation about what adjustments we have to make. What adjustments we have to make to actually implement these recommendations and ensure that the model that we do have meets these requirements going forward in terms of all the things the Auditor General has said. So we will be putting together a task team. I will be engaged in that task team to look at how we do that. I'm not necessarily convinced at this time that we have to centralize everything. There's pros and cons to the different models. Have we swung too far to, service before everything else? Maybe. That's something that we have to take into consideration. Do we have to swing back the continuum to some of the back end risk processes that have been identified? Looks like it. But I can tell you that, the RPAM and that central model had its issues when the previous Auditor General brought forward reports, and I was part of that, on many of the same issues this current Auditor General brought forward. It had the same kinds of problems, even central to the sacrifice of service. All this to say is that my intent is to move immediately to start having those discussions and looking at each one of these recommendations and figuring out what do we need to do to implement it. And if that does mean that we have to look at, changing our organizational alignment because of it, I'm prepared to do that. And I appreciate that the Auditor General, acknowledged that, yeah, we probably need to have discussion over audit recommendation number 1. We never had an opportunity to formally do that in terms of the disagree, and maybe we can get it back to an agree when we get to, before we get to council. I'm prepared to have that discussion with him.
Thank you. That's comforting to hear that. And I'll just share with you my own personal perspective to this. I think it's fantastic now that if I've got a problem with the facility in my area, I can call Dan Chenier, because the way it used to be, Dan took care of the programs in there, but didn't take care of the building. And so his own people had to go elsewhere to report things. So there is advantages to this model, and I've witnessed it firsthand. I see in the audit, I see a lot of things to do more with the overall coordination, trying to find savings, trying to find where different departments may be able to help each other by finding what worked in one area and so on. And I take comfort in what Alain is telling us today, that there is that work going on in there. So I like your approach, and you've answered my question that you're going to look at this and come back with us on it. So I appreciate it very much, and thank you. That'll be all my questions, Mr. Chair.
Thank you, Councillor Hughley. Mr. Auditor General, I think you signaled that you wanted to address the issue of the crisis status when that issue came up.
Thank you, Mr. Chair. What I wanted to say was that the determination comes from the index that I talked about, the facility condition index that the facilities management uses to identify states of facilities. And based on the FCI determinations that we were able to do, it indicates that properties are in a state of crisis response. It means that as a manager, you are responding in a crisis manager to any activities with that property generally. So there's a very different connotation, and it comes out of a mathematical calculation. But I mean, it goes back to the fact that that there are a significant number of facilities where the data is not collected, and I assure you, they're not all storage facilities. But I think that I'm pleased to see the acceptance on the part of the managers and Mr. City Manager. We will continue to work with you and your office on recommendation number 1. Absolutely, that's a commitment.
Thank you, Mr. Agee. Councillor Kavanagh, please.
Thank you, Chair, and thank you, Auditor, for this report. It gives me great concern when I represent an area that's in the inner urban area. So that means the facilities are older, and so they're the ones that have the most to lose in terms of, falling back if they're not maintained. And this is a great concern, particularly when we talk about that the arena study that's coming up, and how things can just fall down, and then they'll be in the crisis mode, and it'll be very difficult to come back. So I'm very concerned about that. On page 43 of the report, it talks about an amalgamation that there's supposed to have been an accommodation master plan, but the city couldn't produce it. Does it exist? I just want to know right from 20 years ago.
Chair, I'll start answering, and Mr. Chenier may wish to add. At the time of amalgamation, which goes back a long time, I can't speak, but it wasn't here. There was an intention for a broader accommodations master plan, and there have been various efforts at various points, particularly after major reorganizations, to look at our accommodation strategy. While there isn't a master plan, we review the accommodations on a continual basis. As every leased property comes up for renewal, we reassess the need and we do an evaluation of that in conjunction with the client department who's involved. We're also looking at the facilities we own as well. At this stage of the game, that we continue to need all of those. There is a good correlation of the space we occupy and what we need for programmatic operations. But it's a continuous improvement piece, and we don't exactly. Let me restart that. We don't have the resources at this time for an extensive consulting study for review, but we take each facility at each renewal opportunity and update and review it.
Thank you. Mr. Hughes, this whole study is about fixing up what we have, the management of the facilities, but it's at status quo, right? Like it's, an arena is, it's about the management to keep it an arena, or as it is. One of the concerns I have is that this is not necessarily going to be the case, because we're going to have buildings, for example, I'll use the bath facility, the plant bath, where it didn't stay static. It had to change. It had to be adapted. I'm a little concerned that this is not even being taken into consideration, because we have to adapt, not just patch it up and keep it going. So I don't know where that fits in, but I'm just a little concerned, because that's got to be the future, particularly with intensification as heavier use comes on facilities. And I guess I'm talking about recreation more than anything, for the inner areas, and how that fits in. Perhaps Mr. Chenier can comment on that as well.
Chair, if I might, yes. repurposing and adaptive reuse of facilities is one thing that we've looked at. We know, for example, having discussed, and arenas is a good example, where there is a need, an increasing need and demand for large indoor space. And you can think of, skateboard parks were probably the first thing that came to us, as Ottawa doesn't have a lot of indoor facilities. But now things like pickleball for seniors, or those kinds of activities. So part of our approach to this is to look at, if it can't be what it is now, does it have another purpose? And for some sites, the answer to that is quite probably, and for others, not so much. So it is part of our approach.
Thank you. I know the other concern is buildings like Ron Colbus, where Lakeside, where it's obviously very old, and it needs to move on to some other purposes, and it sort of has an identity crisis. This is part of it. It's not just the management of what's just actually there as a static object, but in how we move forward. And I'm concerned when we fall behind on the management as is, that we're leaving it very vulnerable, and it's going to be more expensive and therefore more delays. And I'm concerned we haven't put aside the money to look after these facilities. Can you comment on that in terms of what we're putting aside for the future?
Certainly, if you look, and Ron Colbus is probably a good example, that during the prolonged shutdown with COVID, and we have done this at several facilities, we have gone in and modernized the facilities. We did it at Walter Baker, we did it at Ron Colbus, at several facilities, so that if you go there now, for example, a completely new reception area, counter, floors have been redone. So a lot of attention has been paid to those during this opportunity, so that we can extend the usefulness of those facilities until there is funding. And of course, these kinds of facilities are always on our radar when there's senior level of government opportunities for redevelopment funding or addition funding or those kinds of things.
Well, when the Auditor General talks about putting money aside and how much you need to put, was it 2%, the figure? Where do you expect that money to come from? Do we have to start planning for that internally, or are we expecting outside funding for that?
Well, I believe the treasurer can probably speak to it better than I, but the council has been putting aside additional money for life cycle to be able to invest in some of these older facilities and make sure that they're taken care of. There is still a gap, there's no doubt, but most municipalities in Canada face a similar gap between the need of aging infrastructure and the ability to pay for it.
Maybe I can ask the Auditor General, in terms of sort of the older facilities in the inner city, not downtown, but like an area that's older versus the newer areas. Are you seeing the bigger differential? Is this a bigger issue?
Mr. Chair, through to the councillor, we didn't look at it by areas, by wards, but if you're talking about infrastructure that is older, they generally present higher risk. And if, as we've identified, the data set isn't complete, then that goes right to the concerns we have identified. So yes, that would be an area of greater concern, but we certainly didn't look at that specifically in our audit.
No, I didn't mean to go ward by ward, though. That would be great to have it broken down that way, to be honest. I think we'd all be interested in that. But it was more just the fact that obviously facilities that were built earlier are going to have more problems than ones that are in new subdivisions. So that was my point. And that's sort of a chronic problem. And yet intensification is coming along, and it's going to put more pressure on these facilities because they're there, and we want more people in the inner core. So that's my concern. because that's the differential in terms of it's not just maintenance, it's making sure they can work for even more people.
Councillor, I wonder if I might just interject here in terms of the investment that the city is making. So we do have operational budgets that deal with life cycle maintenance that Mr. Chenier has spoke about. But if you recall as well that council has made a commitment in terms of investing in our infrastructure over 7 years to fill that gap. And that's what that 1% was about in terms of our overall tax increase. So there's that piece that is happening. And then the other piece too is our ability to leverage any of the programs that come from other levels of government. Mr. Willis spoke about that earlier, always taking that opportunity to make sure that we can apply and receive funds so we can make these investments.
So do these funds come on the capital side or on the operational side when we're talking about older buildings?
It would be both, Councillor.
Okay, so it's a blend of both. Okay, well, I can tell you, well, we definitely need to look at that if we're working with intensification, because we won't reach our goals of if people don't have facilities to go to. Thank you.
Thank you, Councillor Kavanaugh. Vice Chair Meehan, please.
Thank you very much, everyone. Thank you, Chair. Wow. Doesn't give me any pleasure to actually talk about this this audit. I'm really disappointed. I'm disappointed and dismayed, actually, because of the amount of the investments that we are talking about here. And quite frankly, I think that the last audit that was as bad as this one was the real estate audit. And at that time, I recall holding up the document and saying, does anybody in this department know what they're doing? And I seriously, when I read this, I had a pit in my stomach and thinking the same thing. You know, some of the things I'm saying, lack of management, lack of oversight, no framework in order to implement the much needed changes and the repairs that are needed for, you know, our much needed facilities. You know, it's like 95 pages of horror stories. We put so much faith in the people who are supposed to be looking after the assets that we pay good money for. I'm just really, really dismayed by this, and it gives me pause, and it makes me wonder if some of the reports that we get from facilities management are, if we can put any credence in what we're hearing, especially when, as Teresa, our councillor colleague Teresa was talking about some of the downtown facilities and the state that they're in, and we're expecting a report, but I'm not sure how much validity we can have in that report, given what we're seeing in this audit today. I'm just wondering, just for those who would, you know, Steve K, Mr. K, sorry, it's called Steve. Steve, when did you come back to the city? What year was that?
May of 2016, Councillor.
2016, okay. So, but back in 2012, the city adopted a comprehensive asset management framework and was approved by council in 2012. And I'm thinking, great, good. Yeah, then we find out that none of the components were put in place after that. Can someone tell me why not? Why did we not do that? It's like a blueprint for everything that we have to do. Why wasn't that done?
Sorry, Chair, if I can step in. The information that was presented to council in 2012 has been implemented. We have a policy. We have a strategy that was approved by the senior management team at the time. We presented council with the state of the asset report that basically provided, based on the best information that we had, basically the state of all the city's assets. And that became a roadmap around how do we continue to improve how we manage assets moving forward. In 2017, we provided an update to council in terms of with the strategic asset management plan that provided more detail than what we had provided in 2012. And as I mentioned before, this is a journey and we continue to improve on the information that we've previously provided. But what we committed to in 2012 continues to be implemented. I think the areas that the auditor is pointing to are areas where there's still gaps in the process. which we recognize. In some cases, we've already have processes in place that we're working to refine. In
Okay,
other
so-
areas, they'll be captured as we get more detailed plans developed, which is basically the pieces that we're working on now. So it has very much been a journey in terms of working through improving every step of the process.
Yeah, journey that started in 2012. Thanks, Mr. Gontier. So I just want to go back. How long has management been aware of the Auditor General's report and findings? When were you first made aware of that?
Steve Box, do you want to talk about the timelines? Steve Box?
Are we
Well,
talking?
I can provide the dates if that's
Yeah.
what you're after.
Yes, please. When, Mr. Auditor General, when did you provide management with this report, this audit?
We debriefed management in the middle of August,
Middle of August.
and
then,
we provided the report, the draft report, in the middle of September.
Yeah.
Okay. And how long before management provided some comments?
If I could, Chair, Steve Box. The original audit plan did call for the factual review to occur in June 2020 and then the management comment in July 2020. And of course, due to COVID, those dates were adjusted. So there was an exit interview in the middle of August. And there were concerns raised at the time of that exit interview with respect to some of the findings of the audit. The normal audit process allows for 9 weeks, 4 weeks to do the factual review and 5 weeks to do the management responses. So we actually received the audit on September 16th with a request to combine the factual review and management comments and complete that within 4 weeks, which we have accommodated where possible in the past. Upon initial review of the audit, it became apparent that given the complexity of the audit, that we would need additional time. So we requested an extension, which was agreed to by the Auditor General. But despite management's best effort, it took 9 weeks to provide the 148 factual review comments and the management responses.
9 weeks. Okay.
Which is the regular process.
Okay, and then I understand, if I understand correctly, Mr. Auditor General, you said that you met with management and they didn't like the narrative that this audit had painted. Do I have that right? Is that a narrative that this is a mess, that this department is a mess?
I personally met with management. That's correct, Mr. Chair, and asked what the issues were, if there are any factual errors, and to a person that we were told that it was the narrative that they didn't like. I asked where did we get it wrong, and there was nothing that was provided to counter that.
Okay, so how would you describe the narrative? What are we to take from that? That this department is a bit of a mess, right? It's chaos.
I don't. I as an auditor, when we say something, we have evidence to support it, and there are significant components missing that any facilities management organization, no matter what model you follow, would have in place.
Okay. So management now says that they agree with 33 of 34 recommendations. Who is taking responsibility for implementing the Auditor General's recommendations? Is that you, Mr. Kanellakis, as the city manager?
Well, the recommendations that, Mr. Chair, that the auditor says the city manager, all of his recommendations reference me. However, I will, as I said earlier in my answer to Councillor Hubley, I will be bringing together the general managers responsible for the various areas and developing a plan to deal with the recommendations and enhance our system.
Okay. Do you need outside help? Do you need, because
I may, that's something we talked about, that we might have to bring in someone, because we're like right now, we're friggin' busy right now. Like we're running hard with the COVID and all the other work, and we're in budget, and try and get people to do this, from the corner of their desk, plus all their other responsibilities. I may need to bring in some help just to get us over the top.
Okay, I'm suggesting though, I think that help has to be ongoing. I mean, it's obvious that we don't have the expertise on the ground to look after our facilities.
Well, I can't agree with that. I think there's some gaps in how we're looking after our facilities. As I said, and it was said earlier, I think the issue is going to be, can we accommodate these recommendations within the existing model? And if we can't, then we have to look at the model and say, is there anything we need to do about the model and adjust it? So we'll go through that review to do that. There's some positive things about the model that we have that has been spoken about, and the auditors pointed out some gaps and things that we need to work on. So we're going to take all those and see what's the best output to make sure we keep a balance between what the Auditor General thinks in terms of risk management, et cetera, and what we need to do in terms of frontline service.
Well, Mr. Kanalakis, I understand that, but I mean, some gaps. Project Works identified 37 facilities where the value of the work exceeds the cost to replace the facility.
But
over the past 6 years, 467 projects have been unplanned. To me, that says that these are emergency repairs that were done. And I know as the homeowner, the emergency repairs always cost us more. But 467, that's a lot.
But as you heard in terms of the expenditure in some of these facilities, here's the dilemma, and Councillor Kavanaugh was going there. The dilemma is we have a number of facilities which are end of life, which we can't take out of service. We can't take them out of service because the community goes crazy, as do the ward councillors, without coming back to council to get approval to shut down those facilities. And the problem that you have on top of it is when you shut down the facility, especially in the inner core, unlike the suburbs, we don't have any funding source to replace those facilities with comparable buildings or even larger ones as you're getting more intensification downtown. So sometimes the program managers and the facility managers and LS people are forced to make investments in buildings that we know we should be replacing, but the financial ability to do that is not there in terms of our budgets. So we're stuck. You either close it down, mothball it, because you don't want to spend some money on some repairs, or you keep it open and try to milk it along because you have no other option because you can't replace that building.
Okay, so that's downtown buildings, but this report always says that we are continually under investing in our facilities.
And we added 1% infrastructure to the tax base. This council was approved, and we have a long-range financial plan, and we're closing the gap on those financial shortfalls for infrastructure life cycle repair. So that is how we're making up the gap. The report that Alan brought, I forget what year, that showed the gap, and Marion Simulek brought forward a plan to council to close that gap over 7 years so that the money is there for us to be able to fix all of our assets.
Well, we know that deferring maintenance will cost us more in the long run. So I think keeping up with the maintenance, and I think maybe, I can't remember who it was that said, if we had one person in each of the facilities who's responsible for it, like a homeowner, that we would do a better job of keeping up with the amount of work that's required, and it would save us money in the long run. Going back to the audit found that outsourcing could be a key component to correcting the situation. I asked if you wanted help, but I mean, could we outsource some of this work?
That's something we'll look at. I mean, it's again, it depends what kind of work. We do some outsourcing now. Dan spoke about that earlier. And outsourcing work for some of this, for some of this work is still a possibility. I'm keeping my mind open on all of it.
Okay, I just wanted to talk about the succession management.
Vice Chair Meehan, you have 4 seconds. Did you want to go back?
Can I get back on the list then?
You can get back on the list.
Do I have to use up the 4 seconds before, because there's nobody else with their hand?
There is not, but I wanted to comment.
Oh, thank you.
Why don't you, is this your last question?
I might have 2 more. It's just, this is so important that I don't want to forget anything. But going back to the succession management, and there was somebody who made a comment that if you start as a Zamboni worker and you work your way up through the process, it's possible that the Zamboni worker, I'm not putting anything against Zamboni workers, but maybe a Zamboni worker doesn't have the ability to manage a project as large as an arena, but he may have been promoted up through the ranks. And it distresses me to think that, what did we say, that the succession management needs some attention. We need some more education and training for these workers. Is it possible we have people in jobs without the correct credentials, without the expertise to be able to manage these projects?
Councillor, Chair, that I believe that refers to comments I made. And what I was stating is that we have created within the department an internal pathway for those who want to. And like clearly many of these are internal position, are entry positions at the city in maintenance and variety of those kinds of tasks. Some people that work for us at those levels do want to stick around and see themselves aspiring to supervisory or even management roles. In the past, there wasn't a lot internally to support them in ways of a clear career path. If you want to go from this job to this job, you need these qualifications, you need these types of things. We have created that because the world of facility management has changed significantly, and it's not, in many cases, it does require certification in a variety of trades and being able to work on certain types of equipment. So we've created that. Not everyone that comes into entry level will end up a supervisor, but at least now as an employer, we can say that we're taking care of our people, and that if they want to grow with us, if they want to stay with us, we're there to provide the supports that they need and a clear career path for them if they want to stay in that line of business.
And I certainly would promote that. I certainly would promote that, but I just want to make sure that there's people who have the right qualifications and expertise in maintaining our facilities, that these are the people that are in control. So do you want this committee to continue to have oversight over your department? Would that help you out?
Madam Vice Chair, we do not have oversight over parks and recreation.
But no, I'm just saying, if
we are the audit committee, that would be community and protective services. We will see to it that the recommendations by the Office of the Auditor General are implemented.
Okay. Would you agree, though, that we have a big problem here? Anyone?
I don't know who that's addressed to.
Well, let's address it to the boss, Steve.
Well,
it's under control.
Well, like all audits, right? There's a standard that's being presented that we should be achieving, and there's never been an audit that I've participated in the last 12 years that I'm involved in where we've actually met all the standards that couldn't find some things to improve. That's the nature of audits, because they're going to an analysis and data, and they find things where improve. That's the purpose of it. Our facilities, we're managing all these facilities. Do we have gaps? Do we have issues? Of course. I didn't expect that we wouldn't have any. We have problems. Every audit identifies problems with how we run. And I think any organization that's subject to an audit of this type from an auditor general, you'd find some issues that an organization would have. So I accept there's problems. I accept that our job is to fix them. I accept Mr. Hughes' role is to identify them. So we're not running from that. That's how we improve. We open our facilities every day. 1,000 facilities open up every day. We run them. The public's in them. Our staff are using them. We're going to get better. That's the whole purpose. Every audit we've ever done has been about getting better and implementing these recommendations. We'll do that again.
One of the things that concerns me is that, this is the Auditor General's final report to Council today, and I'm sorry, Mr. Hughes, what did you say? You were distressed that you had to present an audit that was not, it was problematic in that you didn't have the manager's comments in enough time. You had meant to put it in today, but there was something, you had never done this before in your career, so it was the first time on your last day. And I'm just wondering, what can you just characterize how you view this audit today? Like the amount of work that went into this and some of the things that you found. And you're obviously clearly distressed by what you've found.
Mr. Chair, through you to the councillor, yes, we haven't released an audit like this before without the management comments. There was certainly as much care and attention taken for this report as has been for this audit has been given to each and every audit that we've done in the past. We received absolutely perfect cooperation from staff while we were conducting our work. There is, you know, the city manager is correct in saying that audits by their nature focus on problems. You know that we do a risk analysis, and to be quite frank, that's why facilities management was chosen as an area to audit. We do a risk analysis. We talk to councillors. We talk to city managers, and we look at this. We look at the stuff that we deem to be of highest risk. That's why we're looking at this. What we do when we go through areas, we do point out positive steps that have been taken and, you know, good practices when we see them. So yes, Mr. Kanellakis is quite correct that every audit that comes forward has identified areas for improvement, and this is certainly one of them, and that's was identified by the audit process. But this is an important area because so much of what the city does requires a facility, and that was the common theme that came up when we, in our discussions with staff and councillors when we were preparing our audit work plan, and that's why this one is here.
We require facilities, and they're expensive, and we have to watch our dollars right now. I know the mayor's always challenging us to find savings if we want certain programs, to find savings. Well, there's savings to be had here if we manage better. That's what I'm determining here. Thanks, Mr. Auditor General. Just one last thing. I would like to see an update of this audit. I would like to see what we're going to do about it and going forward. And I'm hoping that that'll be agreed to. So before our next scheduled audit, if we can have an update on this, I would be very grateful. And I'll just take this time to thank you, Mr. Auditor General. Thank you for caring, and I appreciate your role. So can we get an update on this audit before the next audit committee?
I'm sorry, Mr. Chair, when is the next audit committee?
That has not been determined, and we will follow up as per the terms and references of the audit committee on the recommendations that have been put forth in this audit.
Okay, that's it for me. Thank you.
Councillor Hubley, please.
Here we go.
Thank you, Mr. Chair. I just want to come back on one comment based on what was just going on there. I think it's fair to say that everybody's trying to work towards the same goal here, and that is to respect the taxpayers and make sure we're getting value for the money. I believe that over the entire term for Mr. Hughes, every audit has done exactly that. It's brought forward good suggestions. Management, as we learned today, has agreed with everyone except for one. But we've heard from Mr. Kanellakis that he's going to work with the Auditor General between now and Council to maybe try to find some common ground so that can be changed. I hope my colleagues understand what takes place here. The audit finds the problems. The whole purpose of the audit is to go in and look as a fresh set of eyes on a process or a program and find the problems with it and make some recommendations to make it better. Under Mr. Kanellakis, the management team takes that in the way it's intended, and they tend to implement most of these. We have several ways of following up on that. There's the follow-up audits, which verify that changes have been made. In this particular audit's case, I don't think we can wait for the follow-up audit. So I agree with Councillor Meehan insofar as the dialogue I had with the city manager about him talking with the senior management team and trying to look at this, I'm hoping that sometime in the new year, he will find a vehicle to come back to council, whether it's a memo or an update at council. Doesn't matter to me as long as we get the information and we get it out there on how they're going to work to improve this. I'm hoping that he will, I'm sure as a matter of fact, that he will remember to do that. He's never let me down yet. So I just want to clarify that this is the process working the way it's supposed to work. Good things will come out of this audit as they do every other audit. So I'll leave it at that, Mr. Chair. I just appreciate the effort of all the parties here to look after the taxpayer.
Thank you. Thank you very much, Councillor Hubley. I appreciate it. And thank you very much to all my colleagues. And yes, certainly, it's an upsetting audit. It's a very upsetting audit. The Parks and Rec and facilities are important parts. And I thank staff for the work they do day in and day out in providing the services that our community needs. And I thank the Office of the Auditor General for their work in always looking for improvements. And I can see why city staff perhaps did not like what's been called the narrative on this. And what we've heard in the past, Councillor Meehan alluded to it. Does the Zamboni driver become an arena manager? Does the plow driver become the roads manager? There are different skills. They're completely different skills. And Mr. Kanalakis has to make note of that in succession planning, the skills needed for different elements in keeping our city move forward are necessary. And I appreciate what he said, that we implement, we consider, city staff look at the recommendations, implement them, and move on. And here we have a segment of our city that's over 1,000 buildings. They are aging. Many were built in '67 as part of the centennial year. Budgets mean choices with respect to maintenance, limited funding, and that's on us. That's on council. Those are decisions that we make. But the structures of decision making, Parks and Rec versus planning versus infrastructure, and how all that comes together, those are things that can be streamlined so that decisions are integrated, so that we look ahead, so that there's a good comprehensive assessment. And all of that is in the Auditor General's report. And Shane said it at one point. I think he used the term, I'm on one side, and Angonsi's on the other. And so we're on opposite sides. And so I think that's an important point. We need to make sure that we're coordinated. With respect to the Auditor General's comments at the top, I appreciate them very much, and I take them. He delivered the audit to management in August, and limited or no concerns, no significant concerns, I think, and only then did some issues come forth with respect, as he said, to the number of buildings or FTE. I didn't hear anything else from management with respect to other issues they had with the findings, the substantive findings of the audit. So I have made note of that. And what I heard wasn't said, but what I heard is that the Auditor General provides a lot of time to management to provide comment, to provide feedback on their work. And I appreciate that, and I'm sure management does too. I support the work of the Auditor General, and I want to hear that from management. I support the office, the function. We allocated $2 million to that office today, and we want to see recommendations implemented. We want to see action from staff on those. And a recurring theme that we've heard is that sometimes management doesn't respond in a timely manner. Sometimes recommendations are not implemented, and we dealt with that at the end of October, and we're going to try to improve where we will improve that process. So we need a commitment to implementing recommendations respectfully, quickly, not delaying, not half measures, with respect to making sure that we provide value for the taxpayers, value in terms of the services we provide, and how we spend taxpayers' money. That is my objective. That is the thrust of what I will work for as part of this committee. You know, a commitment to improve, a commitment to ensure that we are not wasting resources, and a commitment from management to make sure that the feedback they provide to the Office of the Auditor General is relevant, is substantive, is not sending back, as the Auditor General said, a stack of reports that they need to weed through to get the substantive things. And so those are my comment. I want us to move forward together on this audit, on the Lansdowne, on all the audits, so that we can provide that to those services and that good financial management to the residents of the city. So that's my comments. And with that, I think that we're not done. We still have another audit, the Schenkman and Centerpoint Theatre audits. With that, I will turn it over to you, Mr. Auditor General, for your continuing presentation, please.
Mr. Chair,
Yes.
sorry, it's Councillor
I
Kavanagh.
apologize, Councillor Kavanagh. I did not see your hand up there. It wasn't up when I started talking. I just want to say. Was it?
Just as you after you started talking, I thought I would just ask one more thing. And when we get reports back from the city, can we also make sure that they look at the environmental angle? Because we know that one of the biggest losses of greenhouse gases is in building repairs and updating. So can that be taken into consideration? I just want to ask that one.
Thank you. We both participate. I don't remember if you remember the Environment Committee and the efforts that have been done there. But duly noted, the recommendations of the Office of the Auditor General in all its facets are important, and so I'm sure the office has heard your comments.
Thank you very much.
Is that satisfactory? Okay, thank you.
Yeah, thank you.
Mr. Auditor General and your colleagues, over to you, please.
OK, merci. La ville exploite deux théâtres, le théâtre Meridian à Centerpoint et le centre de désert Schenkman, qui font tous deux partie de la Direction générale des loisirs, de la culture et des installations. Pour les vérifications de théâtre, on a 14 recommandations. Toutes sont approuvées par la ville. Ed?
Thank you. The city operates two theater facilities. The Meridian Theater is at Centerpoint and the Schenkman Arts Center, both of which are part of the city's Recreation, Culture, and Facility Services Department. The Centerpoint Theater was opened by the former city of Nepean in 1988, and the city of Ottawa assumed it upon amalgamation in 2001. It was subsequently renamed in 2018, becoming Meridian's Theaters at Centerpoint, following a sponsorship agreement with the Meridian Credit Union. It'll be referred to as MTAC in this presentation, Meridian Theaters at Centerpoint. The other theater is the Schenkman Theater. So following, the Schenkman Arts Center. Following a 2005 council approval of a P3 strategy for an arts facility in Ottawa's East End, an agreement was reached with Orleans Town Centre Partnership in 2007. And the Schenkman Arts Center opened in 2009. So Schenkman is home to 5 resident art partners, and they have a resident dance company there as well. Next slide, please. The overall objective was to assess whether MTAC and Schenkman at their finances, human resources, and operations were effectively managed, and whether they delivered arts programming that was aligned with their mandates and the city's cultural plans and priorities. So the scope of the audit was the governance and operational activities of the two theaters from 2016 to 2019. And we completed our field work in January 2020, so of this year. I should note that our scope excluded the Artisipate Endowment Fund, the art gallery and the studio and the instructional programming that are carried out at Schenkman by the partners. It also excluded the rental of galleries and instructional spaces and administrative spaces, such as meetings and office and storage rooms, which we do as well, because we just wanted to focus on theater operations here. So next slide, please. We found that a strategic plan had not been established for MTAC. MTAC currently operates under the mandate was approved by the former city of Nepean more than 30 years ago in 1987. Direction regarding MTAC's mandate and an annual deficit were last confirmed by council 15 years ago in 2005, when a competitive service delivery review was performed. The risk is that MTAC's mandate may no longer reflect the current operating environment, and that its financial results may not be aligned with committee and council's expectations. Flowing back from the lack of a currently approved mandate, there's also no strategic plan or strategic objectives for MTAC. On the other hand, a strategic plan was developed by Schenkman in 2015, and progress on that has been reported annually. We found a history of budget overruns at MTAC, and we found that there was no performance targets for either theater. So MTAC experienced significant budget overruns in 2016, 17, 18, and 19. In 2019, the theater had a budgeted deficit of $464,000 and an actual deficit of $602,000. Now, the actual deficit represents the difference between the actual revenues, like the ticket revenue and concessions, versus the actual theater operating expenses. So it gives you an idea of what that's comprised of. But we want to be clear here. We're not suggesting that covering this deficit each year is not a valuable investment that the city's making. However, we do believe that as MTAC is operating without a recently approved mandate, this really should be confirmed with committee and council. Now, the operational performance of MTAC and Schenkman is monitored on an ongoing basis. However, the reporting of this really, it's produced annually, and it only moves up to the program manager level, so it isn't getting up higher than that. And we also found that there were no performance targets for either theater. So we found that the cash compliance review recommendations were not fully implemented. And by that, you can appreciate that both theaters take in cash and credit cards, both at the box office and for their concessions. Now, the city's financial services department performed a cash compliance review at MTAC in June of 2018 and at Schenkman in February 2019. And both reviews yielded a number of recommendations to improve compliance with the city's cash handling policies and procedures. At the time of our audit, neither MTAC or Schenkman had completed all of the recommendations from these reviews. And one significant recommendation for MTAC that had not been implemented was to ensure that deposits were prepared in a secure environment with restricted access. Now, both theaters enter into agreements with performing artists. So what happens is staff estimate the cost of running the shows in advance, and these are put onto estimates that end up in agreements that are signed with the artist and the organization and then the city representative. So we come to an agreement up front and we sort of say, okay, this is likely going to cost you somewhere around here based on revenues of such and such. So when the actual revenues and costs for the shows are known, this is usually after the show has occurred, MTAC and Schenkman prepare settlements to calculate the amounts either owing to or owing by the city. So we reviewed a sample of 24 of these settlements that were processed by MTAC and Schenkman. And what we found was there were some discrepancies between the contracts themselves that were signed up front and the settlements. We found some incorrect application of rates that occurred. And we found some unexplained waivers of fees. So where we agreed to not charge someone for something, there was no explanation as to why that had been taken off. And we also noted that the rates that the theaters are charging for certain unionized resources do not allow the city to recover the full cost. So, and then we reviewed a sample of 23 performers contracts that were signed by MTAC and Schenkman. And 7 of the contracts from MTAC were not signed in compliance with the delegated authority. So basically the dollar value went above the delegated authority of the individual who signed these. And lastly, we looked at the P3 requirements, because property management services at Schenkman are provided by Brookfield Global Integrated Solutions under the Arts Center Property Management Agreement. So we reviewed staff's management of this agreement and found that some of the agreement requirements were not being met. For example, there is supposed to be an annual meeting of OTCP and Brookfield and the city, and there was no evidence that these meetings were taking place. As well, some of the reporting requirements were not being met by the partners. So again, there were some items that that we need to do a better job of to making sure that the P3 partners are doing their part. So next slide, please. Now, we think that some sort of outreach activity would be useful to inform programming decisions. For example, asking the community what type of shows they want to see at the theaters. We found that neither MTAC or Schenkman is conducting outreach activities, you know, like patron survey and that, and their use of analytics to identify local interests or preferences is limited. You know, and again, not to say that they don't have a sense of what should be, what they think should be performed at the theater, but it would help if there was a little more, we think, of a little more outreach and a little more science behind perhaps that to see what their community wants to see. And lastly, we looked at the city's obligations within the Meridian Credit Union sponsorship agreement. So the city signed its naming rights with the Meridian Credit Union relating to the theater in 2018. The agreement was for 15 years and with an annual payment of $65,000. So roughly $1 million will come into the city over the life of the agreement. We found that the city was yet to fulfill all of its obligations under this agreement. However, it was working collaboratively with the Meridian to implement the outstanding items. We made 14 recommendations in this audit, and city staff have agreed with all of them. If there are any questions, I'd be happy to take them.
Do any of my colleagues have any questions? Councillor Hubley, please.
Thank you very much, Mr. Chair, and I'm going to be brief. To the Deputy Auditor General, what troubles me with this audit is the cash compliance component of it. I think we've talked about this at previous audit meetings too. I think it's one of those fundamental things that taxpayers are going to get very upset about, hearing that we're not doing the proper care and control of the dollars we're receiving. So I'm just, from the Deputy's Auditor General's perspective, tell me if you are hopeful that they've got the message now through this audit and that things are being changed. And I want to direct that question to the city manager afterwards to get some assurance that this is the last time we're going to be talking about cash compliance for a while.
My own take, my own sense is it may come up in other areas, and it may come up here again at the theater, but I'm somewhat doubtful, at least here at the theater. I got the sense that they are moving on this and they are taking it seriously. I mean, the reviews were done by the city's finance group, and that's, you know, we went back and we tested a few of the items, but for the most part we relied on their review because it looked like they did a thorough review and they were moving towards it. But I guess, you know, we just wanted to make sure, you know, that they get there. Now, part of it, one of the items, they're actually constructing or they're reconfiguring a room, so they're going to do their cash counting in it. So, you know, I can understand that may take a while, but yeah, I got the sense they're taking them seriously. I guess we'll follow up and find out, but that was my take on it.
Mr. Chair, I can confirm that since the audit, we have worked with finance at both theaters, and that we are now in full compliance. And to Mr. Minor's comment, it is true that Centrepoint, because of the time it was built in, did not really include a proper office environment to count cash and to manage cash. And since that time, we have completed the project to create a separate cash counting room within the facility, and those things are done, and we are now in compliance.
Great. Thank you both. I had said I would direct that to the city manager, but maybe our treasurer wants to jump in here. I just want some assurance that across business lines here, any city staff dealing with cash that falls under your command and control. I'm going to use that term. I know it dates me, but the stuff that falls under your control. Can you give us assurance that the lessons learned here from these recent cash control audits, you're applying the findings and getting cameras in there to provide protection for your employees? Because nobody wants to be an employee that's responsible for or work the shift where money disappears, because that means they don't trust any of their coworkers, anyone else that knows that they work there. It damages their reputation. So I think it's not just to the taxpayer here, but we also owe it to our employees to try to do everything we can here to make sure that these things don't happen. So Madam Treasurer or the city manager, whoever wants to jump on that, I'd like to have your personal assurance that this is going to be addressed citywide.
I can speak to that, Councillor. Thank you for the question. What I can tell you is we have a very comprehensive policy here at the City of Ottawa in terms of cash handling that has oversight from finance services and myself, as well as staff. We have implemented a training regime, a significant training regime across the organization in terms of cash handling. And to complement that, what we do every year is we have a series of compliance reviews. So the Deputy OAG had talked about that in terms of the review that was done here. We do those across the organization. We do them on a risk-based approach, looking at each area of the city and pick sort of those high-risk areas, and then go through a multitude of them throughout the year to make sure that folks are compliant. We report back on that, and what we do is we get what I would suggest a very full and detailed report, which includes recommendations, and then staff and management are responsible to implement those recommendations.
The only thing you didn't mention in there is the frequency of these reviews. I really appreciate what you're saying you're doing. That gives me a lot of confidence that areas that you are reviewing are no doubt compliant or will be compliant. But how frequent can you do those reviews?
We do them every year, but not for every site. So we basically cycle around to the different areas across the city. And I talked about using that risk-based approach. So we're looking at those various sites in terms of overall risk, and then we cycle through.
So ones that haven't had any issues and we don't feel the cash is at a high risk, they would get less attention, but they're still going to get some type of review over a period of a couple of years, hopefully, just in case.
Yeah.
Okay.
Yeah, absolutely.
All right. Thank you very much, Madam Treasurer. Okay, Mr. Chair, that's my only question on this. Thank you.
Hubley, Councillor Kavanagh, please.
Thank you. It won't take long because I know everyone's tired. In terms of what's happening with COVID, obviously it's not going to be business as usual for a while, but I just wanted to ask Mr. Chenier, in terms of the report, how are they going to survey or test out what shows to bring in terms of making sure you have good audiences and you get people what they want?
Chair, thank you for the question. Right now, both theaters are primarily dark. We've not been through COVID. It's just not been possible. We have been working on some virtual programming. We are now focusing that at Schenkman. Even though both Meridian and Schenkman are called theaters, Schenkman is more of an art center because it also has studios and programming and a bunch of other partners that are there to develop a broad range of cultural programming. Those have started up again with strict COVID requirements, and it will be gradual. We will, the industry is not quite there yet in terms of being willing to invest in very small productions. And for the most part, our theater staff are redeployed to priority corporate initiatives, public health, and respite and those kinds of things. But we anticipate that in the new year, probably only by the second quarter, things will start to pick up again, and that small productions may be possible. If someone was willing to try it now, we might entertain something that was COVID safe in terms of distancing and all those things. But there isn't a lot of business at this point for the rental of theaters.
No, I imagine not. But my question was about how you were going to survey people on what productions you bring in.
Yes, of course. And part of the auditor's recommendations, which we think is a good one, is to reach out to the community. Both theaters are intended to be community theaters and to have a community aspect to them. And our theater management group, as well as our overall departmental marketing team, are working on not just theaters, a broader kind of canvassing of people, because since COVID, it has changed quite a bit what people are willing to do, how much they are prepared to do on-site activity and virtual activities. We did a little bit of surveying earlier this year in terms of virtual, and what it really revealed to us is that if it's free at this, certainly at that point, if it was free, they would look at it. They weren't quite willing to pay. We think that is now shifted, that it's becoming more of a normal piece of business. So we do have a team of theater and as well as marketing staff looking at canvassing the community in terms of what they would like to see, as I said, at the theaters, but beyond the theaters into other types of facilities as well.
Good to hear. And I hope you'll look at making efforts to diversify and have reach out to many different groups in terms of diversity as well, because there's many communities out there.
Yes, Councillor, and we will certainly, as we work on the development of some strategic direction for the theaters, applying those lenses, the gender lens, the ethnic lens, all of those things will be top of mind. Already in 2001, when the department looked at the expansion of Centrepoint Theatre, there was already a notion of becoming more inclusive as an institution in the city, and we will continue to build on that.
Thank you.
Thank you, Councillor Kavanagh. There's no other questions. Just very quickly, on recommendation number 1, Mr. Chenier, and I apologize for not introducing you as the staff member that was going to take questions at the beginning of this item. I apologize to my colleagues and to you. On recommendation number 1, why is it going to take till 2024, 3.5 years, to accomplish the recommendation, a segment of the recommendation? I'm referring to the strategic plan, annual report. You're on mute, Mr. Chenier.
Sorry about that, Councillor. because we are in COVID and because our staff are redeployed, this will likely only start sometime next year when the staff are back. And we do want to do a complete consultation on this and to properly consider how it helps paint the future of the theaters and what we're going to do in those institutions. So we've allowed enough time to really be able to do this in a proper fashion, realizing that right now the time people don't want to go to theaters, they're not thinking about theaters, and the time really isn't right when there is apprehension about the whole experience. So we need to let some of that pass a little bit in order to get I think, a meaningful result to the process.
Merci, Mr. Cheney. Seeing no other questions on this item, no other hands up, the last of the 5 annual report audits by the Office of the Auditor General, the Audit of Ottawa Light Rail Transit Stage 1 Contingency Fund. Over to you, Mr. Hughes, or your colleagues.
Merci, Monsieur le Président. Le 19 décembre 2012, le Conseil municipal a approuvé le projet de conception, construction, financement et entretien de l'étape 1 du train léger. Il a notamment approuvé le fonds de prévoyance multiprojet de 100 millions $ afin de financer le changement imprévu de reportant au projet du train léger, au projet d'enregistrement de l'autoroute 417 et la transition de train léger. On a une recommandation et il a été approuvé par la ville. Merci.
So back in 2012, Council approved the design, build, finance, and maintenance of OLRT Stage 1. This included the approval of a $100 million multi-project contingency fund used to cover unforeseen changes in the OLRT project, the Highway 417 widening, and the OLRT transition. So Council approved delegations at the time of authorities going to the city manager, the deputy city manager, and to the city treasurer. So they all had individual, they were delegated certain responsibilities individually. City staff, in response, established a contingency management committee consisting of those 3 individuals to review and approve all draws against the contingency fund. Under that, a change control board was established as part of, to review any scope changes that came up and to process them either through the contingency fund or through other sources. So at the end of our field work at March 2020, there were 81 contingency draw approvals. So we call them CDAs. So there were 81 approved CDAs, and they had a value of 99.9 million. And on those, 88.6 million had been spent to date. And they covered things like contract variations, the integrated station entrances. I don't know if you remember the original ideas of the entrances on Queen Street would be standalone, but then they were moved to be integrated with the buildings. Property acquisitions. So if the property acquisition went above the budget, roadworks for infrastructure as well as transit priorities, and environmental remediation. So next slide, please. So just starting off, just because this was a compliance audit, really. The objective was to provide assurance to council that the Stage 1 contingency fund was used for its approved purpose. So the audit objective, we're looking at the following 3 areas. We looked at appropriate approvals. We wanted to make sure that the funds were only used for approved purposes. And we wanted to make sure that the draws stayed within the approved limits. I should point out here, though, that there were a lot of other projects, related to that may have been somewhat related to transit that were not funded out of the contingency fund, and they were outside of the scope of this audit. So if it didn't come through the contingency fund, we weren't assessing those. Next slide, please. So first off, we found that appropriate approvals were obtained for draws against the contingency fund. So as I mentioned, the city treasurer had been delegated the authority to approve all draws against the fund. And we found that this had taken place, that the treasurer, as part of being part of that committee, had approved all draws against the fund. So those were in place. To test that, what we did is we took a sample of 16 draws, but due to the sampling approach that we use, focus on higher dollar value items. So those 16 covered 83% of the value of the draws. So we had we covered off most of the money going out here. And we found that all the CDAs in our sample were properly reviewed and approved by members of the Contingency Management Committee. Now, some of the draws on the contingency fund were used for project changes. And while we were testing the draws that happened to relate to project changes, we also wanted to confirm that where required, consent was obtained from the mayor and the ward councillors. So included in council's delegation to the deputy city manager was the authority to approve significant changes to the council approved designs with the consent of the mayor and the ward councillor. And from our sample, we identified 2 draws that we believe were significant design changes. One was for the integrated station entrances, and the other was to add an extra elevator at the Pimisi station. And we found that the mayor and ward councillor granted consent to both of these changes. Now, although the Change Control Board reviewed all potential changes, the criteria used to identify a change as a significant design change was not specified really as clear as we think it should have been. And this is important because it was those that were significant that needed the approval of the mayor and ward councillor. So the criteria used for the staff were set out. There was accessibility, station architecture, capacity, location, public art commitments, and then safety and security. However, the challenge was that the original designs that were set out by council, were approved by council rather, were really very conceptual and were broad. And so it's difficult to say specifically, was this a significant design change when what was approved was very conceptual. So we think that, if we're using the same process for stage 2, the further definition of the criteria that they're going to use could be useful. We all look to confirm that the monies and the commitments drawn against the contingency fund were actually used for the purpose that were approved. The contingency fund was allowed, as I mentioned, was established for possible cost changes, including property and relocation matters related to the project, the highway widening, and to the transition. And this included unforeseen changes. We observed that they all pertain to these types of things. So unforeseen changes like contract variations, the integrated station entrances, settlements and injurious affections. So that's when for property, the property acquisition costs that were higher than originally budgeted. In other words, the CDAs all fell within the original purpose of the fund. And then we tested the supporting billing information to make sure the contracts that were actually paid out of those CDAs were consistent with what had been approved. And we found that they all had been. So in other words, they didn't get approval to, say, move a sidewalk and then use the funds for a Zamboni or something like that. It was, it was consistent with the purpose that they were approved for. And lastly, we checked that the actual amounts spent and committed were both within the fund limit. Now, because council approved a limit of $100 million for the fund. And we found that the total spending by the end of March, our field work, had been 89 million. So spending was under that limit. So there was compliance there. As well, the total commitments were budgeted at that point were 99.9, and including commitments. So again, that was under the limit. We did observe evidence that the costs were being monitored and reviewed on a consistent basis. So there was a reason they stayed within. They actually, they had a pretty strict process in place. We only made one recommendation in this audit, and the city staff agreed with it. Happy to take any questions.
Thank you, Mr. Deputy Auditor General. So any of my colleagues have any questions? And again, I was remiss in not advising that Michael Morgan and John Manconi are available to answer questions. Councillor Kavanaugh, please.
Thank you, Chair, and thank you for the report. I just want to know if this is a question, I guess, to Mr. Morgan and Mr. Manconi. What is being put in place for stage 2, and will it be following similar processes? And is there any lessons learned here?
Mr. Chair, through you to the councillor, we're following the exact same process in stage 2. So in stage 2, we have a change control board that approves the draws, or approves the request for a draw, and then that draw goes to contingency management committee, who then would approve the draw. And where there is a significant change, we would then further take that to the mayor's office and the ward councillor for their concurrence with the change.
Thank you, Chair. Thank you.
Thank you. Councillor Hubley, please.
Thank you, Mr. Chair. I'll put the question out there and we'll decide who's going to answer this. One of the things
Councillor Hubley, I don't know if it's only
contingency.
I don't know if it's only me, Alan, but you're breaking up. Could you maybe try turning off your video?
With pleasure. The question that I have is, this is a very large contingency. I find the audit's very good. It tells us that the rules are being followed here and everything. But is it common on large projects like this that the entire contingency gets used? Is there anything different with the amount that's been used here? In respect to the whole contingency fund?
Chair, I'll take that one, and Michael can certainly add. And I look to Wendy also because I know she knows the financials inside out. Chair, the contingency here, I believe, is about 4.6% on a $2.1 billion project, which is very, very small. As a matter of fact, if memory corrects me, is correct, we actually squeezed that. I wasn't around when the contract was awarded, but I think we actually squeezed that down very tight to meet the affordability cap. And so while it is a lot of money, the overall build is $2.1 billion. So as a percentage, it's fairly low when you look at industry comparators. Michael, I don't know if you want to add to that.
No, I would agree with that statement, John. It is, it is a lot of money, but against a $2.1 billion project, I think it's below the industry norm.
The industry norm is more like 15%, is it not? Or higher?
15% are on complex projects. You see them exceeding that with, I was looking at one in the States yesterday. They've gone through their 14th budget amendment, and then you've got scenarios like Honolulu, which is almost double the budget of the original build and so forth. So you had a cap on yours, and that's all part of the P3 advantage.
Okay, thank you. That's my questions, Mr. Chair.
Thank you very much. Did anyone else? I'm not seeing anyone else with questions. I have just a quick one for either Mr. Morgan or Mr. Manconi. At the end of the field work, 88.6 million of the 100 million had been spent. Where are we now? And what are the expenses that are remaining that might draw on that contingency?
So in the last quarterly memo, I think we were up to 89 million. So we're still inching up a little bit. There are commitments out there in terms of property, in terms of some remaining office costs and legal costs. So we're still going through the final closeout, and so we do expect to spend all of the remaining amount. But at present, there's still roughly $10 million that's unspent.
Okay, thank you very much. Councillor Meehan has raised her hand. Yes.
Thank you very much. Just a quick one. 100 million for phase one. What's the amount for phase two? Gentlemen, do you know? And we have a contingency fund for phase two? I hope, I assume.
Yep. Stage 2, it's 150 million.
150 million. And so we can't access that until when? Or have we already started to access it?
No, we've started to access that. Again, the numbers are in the quarterly memo. We provide that update. So that funding is available. To date, we haven't done any requests that require concurrence from the mayor's office or the ward councillor, but I suspect there'll be a few of those coming up soon.
Yeah, as the ward councillor, I'm interested if there's money to spend. Okay, thank you so much. Okay.
Okay, thank you, Councillor Meehan. I was about to draw you back into this audit as opposed to funding on stage 2, but thank you. At FEDCO, perhaps there are some of those questions that you could get more details on. Thank you very much. I'm seeing no other questions on this portion, and a reminder that we are on item 3 of the agenda, the annual report. We have gone through the 5 items, and so seeing no other comments or questions from anyone, that the Audit Committee received the Office of the Auditor General's annual report and detailed audit reports on November 24th, 2020, and recommend that Council consider and approve the audit recommendations. Is that carried?
Chair, before you vote
Yes.
on it, the Auditor General has his hands up.
I apologize. I apologize.
No problem. It was a question. Since the rest of the slides are in the annual report, do you want to wait till those are finished, or
there are? Sorry, you have other slides in the annual report?
Just a few.
Over to you.
Almost
I apologize.
Normalement, on terminait avec mes thèmes communs dans les vérifications. Et aujourd'hui, j'ai 2 thèmes communs, contrat et attente, et le déroulement des activités. Selon moi, c'est chaque année, j'ai trouvé continuellement dans le monde de contrats. C'est nécessaire pour les gestionnaires d'assurer, de continuer, de gérer avec un œil plus critique et ne pas abandonner l'objectif en vue, parce que c'est plus important pour assurer qu'on donne d'argent pour les contribuables. Et dans le monde de déroulement des activités, il faut constamment tout remettre en question, vraiment faire preuve d'ingéniosité, surtout aujourd'hui. Two common themes, and one you've heard me say this before. In the area of contracts and agreements, manage with a more critical eye. When you see that a contractor is doing something out of the ordinary, be critical. Remember that the funds that you're managing are funds that come from individuals who work very, very hard to pay their taxes. Remember to factor in all of the internal costs when you're looking at various city activities. We talked about in facilities management, where there's a lot of cost data that is missing. And when we look at the way that staff are currently doing things, I think staff have to keep challenging, and in fact, challenging themselves. And we hear in this office from staff who are challenging their managers, and we hear that through the fraud and waste hotline as we go about our audits. So sometimes the ideas reside with the employees in your own section. Next slide, please. So maintenant, les rapports qu'on a présenté. C'est nécessaire pour la prochaine vérificateur générale de préparer un plan annuel et ce sera les projets pour l'équipe de vérification pour les prochaines années. For me, this is my last Audit Committee. The reports will go forward. The follow-ups will be planned, and all of that will be the work of the next Auditor General, who will come back to you with a work plan for the next year. One of the things that I do every year is give you an indication of the work that we have in process. And at this point in time, there are 2 audits near completion, 2 audits that are started and well in process, another audit that's just about to start. There are 6 follow-ups near completion. So early next year, you'll probably see some follow-up audits with the new Auditor General. There's another follow-up that is started in process and 2 that are about to start. And Mr. Chair, I would like to once again thank you very much, and members of the Audit Committee, thank you for the time that you've permitted me. Thank you for the wonderful gift that you provided me with today. Merci beaucoup. Merci beaucoup. Au revoir.
Thank you, Mr. AG. I believe Councillor Kavanaugh has a question or a comment, please.
Thank you very much. Well, this one will be a comment because I didn't get a chance to say thank you. I don't know if Councillor Meehan will agree with me, but I think the Audit Committee is a great place for your first term as councillor because you really learn a lot. And I thank you for being patient with us and teaching us so much and showing us where we should put the light on things that we can do better. And I thank you for your patience and skills on finding these and just being very thorough. It's been a pleasure to work with you, Ken, if I may say. And I truly wish you the best and hope you have a good retirement. Thank you.
That's it. Thank you.
Thank you, Councillor Kavanaugh, and thank you for your kind words. We have no end of fun here at Audit Committee.
Yeah, I would just
fun by
concur.
nature.
2 seconds, 2 seconds, Jean. I would just like to say thank you too.
Sure.
I was kind of dismayed when I would say I got stuck on Audit Committee. Wasn't a choice. But I found it extremely interesting, and I've learned a lot. And thank you for Ken for always being available if I had a question. I'll miss working with you, but thanks. I echo Teresa's comments. So thank you, and all the very best. I wish you all the best. Thanks.
Thank you.
Thanks, Chair.
Councillor Hubley, please.
Thank you very much, Mr. Chair. I'll differ from Councillor Meehan in that I never felt like I was stuck on audit. I've always felt that it was a privilege and an honor to get to work with Ken and in the efforts to protect taxpayers across the city. And I'm going to miss you, Ken. I think we've become good friends over the term. And I wish you well in what you do next. And I really want to thank you for the service to the taxpayers. And Mr. Chair, I'm going to stop there.
Thank you.
Okay.
Thank you, Councillor Hubley. Appreciate it very much. And yes, Ken, it is a pleasure to work with you. It is a privilege to work with you. As I said at the beginning, you are fair, you are tough, you know your stuff. You've been at the city for a long time, and I think that has advanced the value that the Office of the Auditor General and the Audit Committee provides to the residents of the city, and staff appreciate it. They won't always say it in those words because there are always improvements to be made, and that's not easy. That's change, and that's not easy. And I understand that. And senior management, I don't pretend to speak for them. They understand that also. that they see and appreciate the insight that you yourself have given in the last 7 years as the Auditor General, and that the office provides. And so I hope that I'm certain that we'll be able to continue. So to you and your colleagues, thank you very much. And to my colleagues on Audit Committee and other members who participate, there are long reports, there's a lot to read, there's a lot of detail. We saw in Lansdowne Park that it's complex, because we too have to understand exactly the machinations and the motivations and the way things get done. And so I thank the Office of the Auditor General. I thank our staff at the city for the work that they do in providing, as I've said in the past, the services that our residents rely on. And again, we've never seen it like we've seen it during COVID. So thank you very much, all, for your work today and for your work at the Audit Committee. And so Carol, I am reading that the Audit Committee received the OAG's annual report and detailed audit reports on November 24th, 2020, and recommend that Council consider and approve the audit recommendations. Is that carried?
Carried.
No objections. Thank you very much. And again, as I'd said earlier, these reports will rise to Council as per the usual timeline on December 9th. And I refer you to the memo that went out yesterday. Are there any in-camera items? Seeing none, any notices of motion? Seeing none, inquiries, other business. Can we please entertain a motion to adjourn 6 hours into our little committee meeting?
Carried.
Carried.
Motion to adjourn. Thank you all. Thank you very much. Ken, thank you very much. Have a good day, everyone.
Thank you, Ken.